BSE's ability to build liquidity in the longer-term contracts could offset this impact, and implementation of the common contract note can aid market share in the cash segment. As far as recommendations are concerned, most of them have a neutral call. Motilal Oswal, in fact, has downgraded their rating to neutral, and the target price will come up for you on the screen.
Right. Thanks very much for that, Vamakshi. So that's, of course, top of mind. We'll see how it goes. 65 points lower on the Nifty. We've got about 270 points cut as far as the Sensex is concerned. And we're just starting up with the first rates as they come up on your screens. We'll look at the indices and we'll look at stocks after that. So 24,790 is where we are at. So it's a flat, slightly lower kind of start. 55,600 is where the Bank Nifty is at, again about 0.19, 0.15% lower. Sensex is at about 81,358. About a quarter down. Small cap index a quarter down. The mid cap index is, I think, also down about a 0.25%. So uniform 0.25% cuts across the board at this point. Right out of the gates, it's largely 1:1 in terms of advanced decline, although that will start to show up in a more pronounced way as we go through the session. Nifty heat map should give you a quick sense of which way things are, starting out. And it's mostly down. I think almost 40 odd stocks are lower, about 10 stocks are higher this morning.
Well, a couple of stocks. We start with BSE. The street was anticipating a big gash. That hasn't happened. In fact, BSE is just about 0.8%, 1.2% now lower as we speak. So, the pre-open was a much sharper cut. Right now, as we speak, the cut is accelerating just a little bit, 1.5%. Hindustan Zinc, the block trade has happened, down 6% right now. So let's see where this goes from here as well. And then we are seeing some stocks which continue to do well. Zydus Wellness, yesterday there was that large trade that took place in pre-open. TPG sold out. The buyer was Parag Parikh Fund, and that stock has opened with a gain of almost 3%. Axis Cades is the other one, which from yesterday's up move of 5% continues into today as well. But just as Hindustan Zinc was lower, we have Vedanta, which is higher by about 1.8%. So they get the money. Also, things look favorable for them, as Nigel pointed out earlier. Polycab, the BharatNet business doing well for them. That stock up around 1.5%. On the way down, Biocon, after the QIP opening yesterday, 4,500 crore, opens about 2% lower. And Voltas as well, the management did meet some analysts, made a comment on how demand was impacted by unseasonal rains in peak summer months. And that stock too is down about 2%. Nigel.
Well, that's right. The Hindustan Zinc large trade has got out of the way. So now all eyes are on Vedanta. They have that dividend meet today. And let's see how much is on their radar, because they got close to around 2,500 to 2,800 crores from Hindustan Zinc. Now they'll have additional money. So we'll have to see what do they want to do with that. So that's a stock that we'll be keeping on our radar. Sterlite Technology is cooling off after the big run that we have seen, in the last couple of days. BSE, from the lows of the day, actually, it's seen a solid recovery, actually, BSE, because the markets, as it is, were sensing that there's something coming on those lines. So if you look at it from the day's low, the stock has bounced, I think, close to around 3.5%, 4% or thereabouts. A bit of shorts, I think, covering out on BSE itself. Sky Gold, there's a large trade, I think, that's taken place because volumes are very, very high. The stock is down close to around 5%. So keep an eye out on that one as well. HCC, that's another name. That's a little bit lower on rather large volume. So that's another one. I think from the Nifty, the top gainer actually right now is IndusInd Bank. Big move, big volumes, stock up 3.5%. And as we did that market check, the Nifty, from being down by close to around 70 points, is now down only around 20 points.
There's one stock, it's Avenue Supermarts. I'm looking at that one. It's up around 1.5%. Has been doing okay-ish this week. It's up around 2%. An interesting development that took place yesterday. They opened their first store in Uttar Pradesh. And typically, their cluster-based expansion tells you that if they open the first store, over the next 6 months, the store expansion in that space is much more accelerated. And the one thing that the street was eyeing for Avenue Supermarts is store expansion. If they go into the most populous state of the country and expand out there, that could be a positive for them, which explains why the street has taken the opening of one store positively, because it suggests opening of many more stores.
First in UP.
First in UP.
Oh my God, that's 20 years after, 25 years later, right?
So I remember this, conversation once I happened to have with Radhakishan Damani, in private, and he said that if I don't see 20 stores in a place, I don't open even the first store. This was pre, DMart listing.
Okay. All right. So keep an eye out on this one. Interesting. 1.5% higher. So 4116 is where we have the D-Mart stock, the Avenue Supermart stock, which is starting up. Well, I think market breadth is down in a pronounced way. 1,500 stocks are lower, 630 stocks are higher, and that's clear skewed lower at this point. Sky Gold is down 4.5%. I think we mentioned that. And of course, Hindustan Zinc is down as well. Vari is down 2%. Nothing large. Premier, which is the other solar company, that also comes up. I remember speaking with Premier recently, and they said, well, there's enough demand locally, at least for the next couple of years. So exports is optionality. So it's not as if, that's what they're depending on in that sense. So keep an eye. Voltas is down 2%. So these are some of the big volume-led losers. Our power has been a stunner mover this year. I think it was down 5 yesterday, 5 today, but just profit booking, but almost 500,000 shares on it already on Reliance Power. Orient Cement is seeing an outsized move. Orient Cement is down 14%. So I think yesterday also but yesterday it had a large move on the upside. So a close on Monday was 288, close yesterday was 300 plus. And back at about 260 right now, Orient Cement. So 74,000, 75,000 shares traded. Happiest Minds down 2. Sterlite Tech has had a phenomenal move led by very large volumes over the last few sessions. And Sterlite is seeing some profit booking down about 5%. Some of these are just pure reversals. Look at something like a IKS. IKS was up 7%, it's down 5% today. So I guess little to sort of take signals from these kind of price actions, which are just sort of flip-flop from one day to the next. Mihir Vora is with us. He's Chief Investment Officer at Trust Mutual Fund. Mihir, good morning. Great to have you with us here on the program. Thanks very much. Just your first take on markets. Price action is slightly negative, but I guess markets have, over the last few years, with so many conflicts, have learned to kind of ignore or live with these conflicts and look ahead a bit more optimistically. So the mood's not really dulled out. How are you feeling, Mir?
Certainly. Good morning, Prashant. Thanks for having me. You're absolutely right with the market over the last 20-25 years has gone through that huge learning curve, which is the fact that India is such a large market, geographically also so large, that we are quite resilient, and I think the biggest change that has happened, I would say, in the last 10 to 12 years, is the fact that we've actually managed our macro very, very well compared to the rest of the world. For example, India is the only country which has reduced its debt to GDP in the last 10 years, even through COVID, etc. So the point is that our currency, our current account, our fiscal, all are looking excellent in terms of the relative scheme of things if you compare it to any developing country as well as the developed world. More importantly, I think structurally now people realize that India may not grow at 10%, but now China is not also growing at 10% anymore. It's probably more close to 4 to 5%. So India will actually be the fastest growing economy in the world. So whether it's the domestic investor sentiment, whether it's the FII sentiment, India stands head and shoulder above a lot of other options out there in the market. And as we keep saying, the local investor has finally come of age. The SIP flows, the pension fund flows, the EPF flows, the insurance flows are now structurally, out there in the market. We are seeing hundreds of thousands, millions of investors getting added to the base every month, and that's what's, I think, keeping the overall sentiment up. We can talk about the micro and the short-term situation where it's a mixed bag. But in general, I think the structural India story has only become stronger over the last few years.
So in that case, what would be the sectors which you believe would outperform? What specific stocks are you backing, Mihir?
Sure. So, as we have discussed so many times in the past, we continue to believe because India's domestic story is far better than the global story, we will continue to stick to the domestic plays, whether it is, in financials, lenders, as well as the capital market link plays, the savings link plays, whether it's the infrastructure and, CapEx story, both from the government spending point of view. And now we are even seeing green shoots in the private sector capital expenditure, and plus the special areas like railways, defense, etc., that the government is very, very sharply focused on. The mixed bag, I would say, is in consumption, where FMCG, of course, is a lower growth segment. Urban consumption, which was holding up, is kind of maybe not picking up as well as expected. But structurally, I don't think there's a problem there. Over the long term, it should do fine. there is a lot of premium discretionary consumption that is doing quite well even as we speak. So I think premium domestic consumption, savings link plays, capex link plays are something that we would continue to be overweight. Pharmaceuticals, etc., we would be more, healthcare, pharma, we would be more stock specific. And IT in general, we are underweight because it's more of a global play. Especially the large cap ITs are probably low growth stories, not as high as they used to be. And of course, the steady growth utilities, etc., with 10-12% growth, we would be underweight because we are looking at higher growth stories.
Okay, hi Mir. Since you briefly mentioned capital market plays, which side are you drifting towards with regard to the stock exchanges? BSE and MCX have been absolutely on fire. They've re-rated. Valuations have got very, very expensive out there, but there's still so much of interest. Now, this morning you have some negative read-through for BSE, but the stock still is seeing buying at lower levels. What's your preference between the listed exchanges? And also, if you want to put in a word on the unlisted NSE stock, which has done a jig of its own.
Sure. So I think I won't comment on specific stocks, but I think the stories that we are playing is basically not only the growth of the pie, the trading pie is going to increase, whether it's from the established exchanges or from the challengers. But more importantly, we are also in some cases playing on newer product introduction, market share gains, etc. So these are stories where we can get the benefit of the tailwind of the industry growing, as well as product improvement, market share gains. So those kind of stories we are playing in our portfolio.
Just a word, guys, with regard to Orient Cement, there was an open offer, so there's a particular number of shares that get blocked, right? So the open offer is out of the way, the kind of support that you've seen because of the open offer. So it seems that the remaining shares could have possibly got released, for being made available for trade. So that could be one of the reasons. And also in the past, when Adani Cement went ahead and they took over Sanghi Industries, the result was not very, very great for Sanghi Industries because everything was in favor of the parent, which is the Adani Cement Group. So because of that, I think that support goes out of the way. Open offer, I think, ended last week. So with that getting out of the way, the stock is down. And as Prashant mentioned yesterday, I think it was higher.
Yeah, it was higher yesterday. The other Adani takeover recently has been ITD, right? ITD Cementation. And that one has gone the other way. I mean, I think since the offer finished, I mean, it was lackluster for a while, from 500 to 800. It was $500 on the 5th of May, and it's at 800 now today. So that's been a very, very sharp move, which has come through on that one. It's up 3.5% today as well, I think. Yeah. Otherwise, I mean, it's it's 1,200 up, 1,000 down. So market breadth is now sort of swung the other way. And we will keep an eye out on things as we go along. I think anything new, anything else? Ask Auto, that's up 9%, it's coming up with some 9%, big volumes as well. So that's why I'm mentioning that here. LG Equipment is up about 4%. Mangalam was talking about DMart. DMart's now moved up a little bit more, 2% higher on DMart as it sort of forays into the largest state in the country, Uttar Pradesh. And so on and so forth. So lots of stuff. JSW Infra is up about 2%. Uno Minda is up about 2.5%. So that's the state of affairs this morning. Just a quick word, Meir, if you will, on the I don't know if you have a view, and there aren't that many listed, but there are a few solar stocks. Every time there is news flow out of the US with regards to the thrust is, of course, geothermal, nuclear, even coal. But not renewables in that sense. In the US, with regards to these tax credits, etc., we've seen two developments last night, and the stocks, etc., sold off. Does it have implications for India? Companies have told us when we've spoken recently, companies like Premier, etc., that there's enough demand at least for the next 2-3 years till enough supply comes up to meet the demand. So exports is like an optionality. What is your sense?
Sure. So in the renewables space, we are playing across the spectrum, solar as well as the wind part. But we will not typically take an exposure in cases where there is a dependence either on subsidies or on exports, because the US situation has turned adverse ever since the likelihood of President Trump coming to power has been there, and that's because this is not an area of focus for President Trump. So to that extent, over dependence on exports is something that we have avoided. We are positive on the generators in the renewable space because I think the government is very serious, and any input price reduction, whether it's at the domestic level or from China, only helps the generators. So I think we would stick to the energy generators and in certain cases the equipment providers in the wind space.
Okay, all right. President Trump's not too focused, it seems, on renewable in comparison to what the street expected, but he's quite focused on drill, baby, drill. Mayor, if I got it right, I remember in your earlier avatar, you were focusing on some of these pipe companies, and you got the timing very, very correct, on a couple of these pipe makers. With the kind of focus we have seen on oil, crude as well is fairly stable at current reckoning. Do you like anything from that pack? The notable stocks are Welspun Corp. You have Jindal Saur as well that corrected a big deal, but they as well are putting on capex. Smaller players, Man Industries as well has ordered a couple of big order wins. So it seems big orders coming out of the Middle East. President Trump as well, out there, they are laying various pipelines. What do you like from this space?
You're right. We have one of the names that you did mention in the portfolio, and the reason is exactly what you said, that both in the Middle East as well as in the US, there is a case for more drilling, more production, and some of the companies that we own also have facilities in the Middle East as well as in the US. So they will tend to benefit even if there's a US Atmanirbharta, so to say, situation.
Right. Where do you stand on autos? Because as we speak, we're seeing some traction in names like TVS Motors, a lot of the domestic focused names that you like, and if you believe that consumption is likely to pick up, at least in the discretionary end of things, is there a play out there, or you would stay away from autos for now?
So in autos, we have more exposure in the auto Ang space, but that's on a case-to-case basis, not taking a call on the segment growth. But in the OEMs, we have two names. One is a two-wheeler name, and one is, I would say a mix of SUV and tractors, because we do see high-end, as we mentioned, high-end consumption, which includes SUVs, that's doing quite well even now. And rural economy is picking up, so the tractor segment is going up. So we have stocks which OEMs, we have exposure to that segment. And in the two-wheelers, we have a name which is anyway quite strong, and which also has a decent exposure to the EV two-wheeler segment.
Okay, well, thanks very much, Mihir, for joining us. You may want to listen into the next conversation because we're speaking with one of the largest public sector banks in the country, Punjab National Bank, next. Remember, last time when we spoke with PNB, post their fourth quarter performance, the management told us that they're confident of beating their FY26 credit growth guidance of 11 to 12%. Now, of course, there is RBI's double bonanza. So RBI is really pushing the pedal as far as growth is concerned. How's the outlook looking for them now, and what changes have they made as far as their borrowing mix and, of course, lending rates, etc. are concerned? Let's get an update. Mr. Ashok Chandra is Managing Director and CEO at PNB, and he's with us now. So good morning. Great to have you with us here on the program. Thanks very much. So just give us the basics, across the liability profile and the asset mix. What are the changes that you've made since the RBI moved?
Yeah, first I will talk about the liability side. In fact, on 12th of April, which was our foundation day, we have initiated a lot of new initiatives backed by the digital side now. And all my CASA products are revamped now today. And we have the special products for all the segments like salary, non-salary, women, youth, defense, pensioners. Even for farmers, we have come out with a new scheme. And I can tell you the success of that scheme that in the last 1.5 months itself, more than 6.5 lakh new accounts which we have opened under this segment. With additional, the saving portfolio in the individual has grown up by 1,000 crore. So we are mopping up the SB individual with the revamped saving schemes which we have brought it in the system. So we are very confident. The liability side, we don't feel any challenge. We have the enough liquidity in the system. Now, as far as the RBI announcements are concerned, I think we must appreciate the very, the credible move RBI has made by reducing the repo rate by 50 basis points. And if I see that entire the calendar year, almost 100 basis point reduction has happened. Definitely for 1 or 2 quarters, means Q1 and Q2 of this financial year, definitely the NIM is going to be impacted. But this is all the journey, and we are planning to adjust this the gap which is going to happen in the NII and the NIM by reducing some of our deposit rates. I think in the last week of this month, we are going to have the ALCO meeting, and then we are going to decide about our various rates now.
That is
so just one thing. So Q1, Q2, maybe there will be some impact on NIMs, but
Yes.
once you make the changes to deposits as well, will there be any durable, sustained downward pressure on NIMs, 10, 15 basis points? Or you think,
See, in the shorter period, definitely the Q1 and Q2, there is going to be impact on our NIM by 5 to 7 basis points. But we are expecting that two moves which have been made now. One is that 100 basis point cut in the CRR. I think 15,000 crore amount is going to be released in a phased manner from September to November. And definitely that is going to add to my interest income, because whatever is there in the CRR, we are not going to any income out of that. So we will be able to lend this 15,000 crore and we will be able to generate some income. That is the one part. Second part is that we are going to reduce the deposit rate also, keeping the inflation in mind and the repo rate coming down. I think we are going to take the view on our entire deposit rate, including the saving deposit rate. So that also impact we can see from the Q3, Q4 onwards. More so, I think Q4 onwards, definitely there will be a credible improvement in our NIM will happen. All those impact will happen from the Q3, Q4 onwards.
Well, then just a two-part question on that one. One, because you will get increased money from the CRR that will come by to you, the reduction in CRR. Would you up your loan growth guidance this year, because you will have more funds to earn interest on? And the second part is the savings rate cut. We recently saw the State Bank of India cut savings rate to 2.5%, which is the lowest that we've ever seen. With you cutting it further and the street, looking at other alternatives to invest their money, could there be a risk to your deposit growth as well? Because at 2.5%, 3%, people will find it very unattractive to put money in the banks.
First point is the credit growth. I think already we have given the guidance that around 11 to 12% credit growth will happen. And we are hoping that definitely further improvement will happen with our credit growth, because a lot of MSME and agri outreach activity bank has initiated. And I'm seeing a lot of traction that is going to happen. I think those results you can see in the Q1 quarter itself. I think that growth, MSME, retail and agri, I'm expecting that there will be a good growth in that particular activity. As far as the corporate book is concerned, I think last time also I had mentioned that we have 1,35,000 crore of sanctioned of the last year plus this financial year. That sanction is already there with us, and I'm expecting, and already the movement has started, that the disbursement will happen in this quarter and the Q2, Q3 quarters. So we have a good pool of corporate book also, and I'm very confident that with all those initiative bank has taken and the outreach activity bank is doing it, I think we will have a very reasonable and good growth in the credit system now. And with all those moves RBI has made, I think definitely the credit offtake will improve, no doubt about it. Now, as far as the deposit part is concerned, we have a good, the liquidity is there in the system, and we don't see any challenge in deposit mobilization. Definitely, I think we are looking into the deposit rate cut, including the saving rate cut. Our ALCO is going to meet on the 30th of this month. And then considering all those factors, the scenarios of the repo cut and the inflation, I think we are going to take the view, and then we will announce what are the percentage of cut that is going to happen in the system. But definitely there will be some cut in the deposit, including the saving deposit.
All right. Hi, Mr. Chandra. Good morning and good to see you, Ben. Could you tell us, with regard to your loan book, how much of it is linked to EBLR and how much of it is linked to MCLR? If you could give us that breakdown. And incremental loans, what are they going to be given on? MCLR?
We have around 44% linked with RLLR, that is the EBLR. And around 50% is linked with the MCLR, remaining is with the base rate and the fixed rate. So repo rate cut, definitely that has got the direct impact on our 44% loan book. And that's the reason I'm mentioning that around 5 to 7 basis point, keeping everything constant, I think 5 to 7 basis point NIM will shrink. But with the deposit rate cut and the other activities which we are doing it, I think we will be able to mop up our the income. And definitely, I am very confident that overall operating profit and net profit, we will hold on to the level which we have shown in the Q3 quarter.
Okay, all right. So if you could give us what on an average for the year, in the near term, you're seeing 5 to 7 basis points, downtick on NIMs. But on an average for FY26, how do you see the NIMs pan out? Point number one.
I think, the guidance which we have given in the beginning of this financial year, that is the 2.8 to 2.9. I think we are definitely going to hold on this level now.
All right. Your ROA, you want to push it to around above that 1%, guided band.
Yeah.
What are
we have
the
given
levels you have in store? Yeah, please go ahead.
We
sir.
have given the guidance of 1%, and I'm very confident that this guidance we will be able to hold on, because there are two initiatives which the bank has taken. One is that the recovery, the activity which we have speed up. I think if you see our recovery in the Q4, there was a TW, or technical right of recovery itself, was around 1,800 crore, and overall recovery was 4,500 crore. And this financial year also, we have given a guidance of 16,000 crore of total recovery and 6,000 crore of technical right of recovery. And we are on track on that in this quarter also. So that is one thing which is going to add to our operating profit and net profit. Second, we have built up a very, very strong treasury book. And I think that is also going to help us in maintaining our operating profit and net profit in this downturn scenario of the NIM also. I think we will be able to hold on to our operating profit and net profit with these two initiatives which the bank has taken.
All right, and final question, Mr. Chandra, before we leave you, the stake that you have in Canada HSBC Life Insurance, they've filed for IPO papers. By when do you expect, the IPO to happen? And how much money do you expect to mop up through this offer for sale?
It is likely to happen in Q3. That is the way it is happening now, as of now. And we are very hopeful that at the end of Q3, definitely this process will be on now, and we will be able to see some result out of that. The quantum, I will not be able to quantify it today. I think just wait on some time, and then we will be able to tell how much we are able to realize. But definitely,
you hold about 23% stake in this, right?
Yeah, 13% we are going to dilute, and our holding will be around 10% after the dilution.
Okay.
Right, Mr. Chandra, just a couple of more questions before we wind down, sir. Which segment for you is going to do the best? Is it, and I want specific comments on gold portfolio as well, because there also we've seen significant relaxations by the RBI. Could you give us a sense, first, which of the segments to your mind will grow the fastest, and then a bit of gold. What is the portfolio? How do you see growth there?
Two segments we are pushing very hard, and I'm very confident that will grow at a very faster speed. One is the MSME segment because of our digital initiative. Up to 25 lakh digital onboarding is there. No document is required. Anybody can apply it through the digital channel, through going to our website. And within 5 to 10 minutes, we are going to give the sanction to our existing customer. And to the new to bank customer also, it just requires 24 hours to give the sanction. So this is one activity we are going to push it in a very hard in the entire country. And for that, lot of initiative, outreach activity where our entire head office team is visiting in the field and getting the proposals. So that is one activity. Second one, another important activity is the self-help. That portfolio we want to grow up in a very big way. And I'm expecting that in this financial year, around 40 to 50% growth should happen in the self-help group and the farm mechanization loans. So these are the two very top priority activity which we have assigned for ourselves, and we are going to drive it in a very big way.
And gold, sir?
Gold, see, geographically also we are not very strong. We all know that most of the gold loans are happening in the south states now, where our presence is not very strong. And gold loan book, if you see traditionally, we are growing at 11 to 12%. And we are going to grow at this speed only. 12 to 13% growth will be there in the gold portfolio.
All right. So fair enough. Got that. Just one last question, sir. And this is slightly off now the core banking function, but it's important.
Yeah.
We've been reporting on the insurance side, right? The government was not happy with the bank assurance channel being pushed in a very big way. But I think there has been a bit of a change of mind there, and what we understand is that the government has told, especially PSU banks, that along with your core banking function, insurance for all by 2047. That's government's goal, and banker channel is pretty important for that. Has that communication come through, sir? Is there what's the status?
See, the direction was that let us restrict the mis-selling. We should not do the mis-selling of the bank assurance product. That was the concern of the government and the regulator also. And we are very much mindful of those concerns. And in our bank, we are very, very strict about the mis-selling of the insurance product. Those customers who are willing to buy our insurance product or any other bank assurance channel or bank assurance products, I think definitely bank is there to offer those products. We have a tie-up arrangement with various insurance companies. And anybody who is looking for any bank assurance product, we are there to sell those products. But absolutely, we are very, very tough on mis-selling. And I don't think any mis-selling is happening in PNB.
Okay, so it's only mis-selling. It's not a step up in overall push. I mean, you're saying it's not. It never really stopped in that sense. And the volume of policy sold, that push has been there and it will remain there.
Yeah, definitely. And concern was only mis-selling. And the direction was also how to stop the mis-selling. A lot of initiative which we have taken, like we are taking the mandate from the customer through the OTP, and unless and until customer agrees for that, our no branch is able to sell any insurance product to any customers.
All right, Mr. Chandra, extensive conversation, but thank you very much. Very useful. Appreciate you joining us here on CNBC-TV18. So that's banking, but I guess guys, from banking to real estate. Let's move on.
Yep, we will. In fact, we were talking about rates coming down, and does that impact the realty space itself or not is the big question.
Well, that's right. Well, the RBI's double rate cut bonanza, that's likely to have a positive sentiment on the sector itself. To understand how's the feedback on ground, we're joined by Pavitra Shankar, the Managing Director at Brigade Group. Hi, Pavitra. Good morning, and thanks a lot for joining in. Let's get straight to that. How's demand on the ground? The RBI governor, has given a bit of a booster shot, which should spur good times for you all. How are you reading it?
It's really great for sentiment. It's really great for our customers. It's very beneficial for them. For anyone who has recently purchased and started the booking journey or even looking at buying a home, it makes quite a big difference. More than 50% of our customers take home loans. So for them, it makes a pretty radical difference, especially as we've seen over the last few years, the average ticket size also increasing across customers. So they're definitely looking at financing their purchases as well. So this is a very welcome news from the RBI.
Okay, got that. So RBI has done its part and you believe demand is good on ground as well. What about the regulators? How are approvals coming around? The last time around we had chatted, you had mentioned that still approvals were taking some time. There were some problems in the Bangalore market. Are things better than the last time? And do you expect to get even better from here on?
We're always hopeful. One has to be in this business that things will keep.
Are there signs, Pavitra, on ground as of now? I mean, hope is not a data point, right? Give us a data point. Are they better than what it was the last time we spoke?
We have received approvals over the last quarter. That's why we were able to launch quite a bit and show good numbers last quarter. This quarter as well, while there are a few small delays on ground, I think now we have visibility and we're going ahead and applying for RERA across a number of projects. So it's not a market improvement, but it is slowly improving. A lot of the e-Khata issues are resolving in Bangalore. So, we do have to just see that there's nothing else unexpected that pops up. But the existing issues in e-Khata and so on are definitely resolving.
All right. Two-part question, Pavitra. Before the RBI policy cut that happened, you had given us a pre-sales guidance of 15%, at least 15% growth in FY26 over FY25. Now that the cut has happened, do you think you can do a little better than that? What's your outlook on this? And the second part is realizations. Now, with the mix shifting towards premium, mid-premium, going away from affordable, the realizations increased by 40%. Is that sustainable?
So a lot of the increase in realizations we've already seen happen in our portfolio. One, like to like as well, price has increased for the same kind of product. We've also changed the product mix, as you mentioned. So we've taken very substantial hikes in our average pricing across the portfolio, as you've seen, 47 to 50%. From here on out, I would not expect it to go on the same trend. One, because we've already launched a number of premium projects. In the coming year, we do have a mix of upper mid segment and premium projects. We may do a plotted project as well. So overall for the portfolio, I don't see it increasing dramatically the way we have seen over the last couple of years. So I would just say it's a moderate increase. And again, would depend quarter to quarter based on the kind of project launches that we're able to do for that specific quarter.
And what about pre-sales. You've been clocking about, what, 2,500 crores for the last couple of quarters. Where does that quarterly run rate go to in FY26? And when you say you're not expecting a dramatic increase in realizations, where does that number stand at by the end of this year? Last year was a little over 11,000 rupees per square feet.
Yeah, so I think an annual increase of about 10 to 15% is reasonable to expect, again, based on the kind of projects that we are launching and also adding plotted to the mix as well. So I think that's fairly reasonable, and that's also how we're looking at the market overall. When we're looking at underwriting new projects, we're not expecting pricing on ground that the end customer is willing to pay to really increase in the way that we've seen it in the past. In our portfolio as well, our focus on super premium is still maybe about 15% or so. It's still not a very large percentage of the overall portfolio, but it has moved from mid-segment to upper mid-segment. And now most of our projects launching are in that upper mid-segment category. So from pricing, I would say, 10 to 15% annually is what I would look at. In terms of sales, we don't really do guidance, but I think the rate at which we're clocking is reasonable to expect.
All right, Pavitra, if that realization needs to go up, I'll tell you there are a couple of lucrative markets, maybe the Mumbai market. Maybe, foray into Delhi. What's the plan? I think you've hinted in the past that Mumbai could be a market that you'll be looking to expand your presence. Any plans on that front, Mumbai or Delhi?
Not in the recent, not in the very near future. Definitely, we're aware that it's a great market, but we also have a certain focus on South Indian markets. We aim to have really deep presence in these three markets. We still have a ways to go in terms of Hyderabad, expanding our presence there. While in Chennai, we've increased the land bank as well as have a lot of visibility on upcoming launches. So we'd like to do the same, focus on the markets where we've already got a presence and establish ourselves in a deeper manner before we keep adding new markets to the mix.
And finally, what about leasing? Amounts to about 1,100 crore rupees annually for you as a revenue. Where do you see that going?
So the portfolio is about 9.5 million square feet. It's mostly fully leased up. So until we get new inventory into the portfolio overall, which should take another year and a half or so, the rental rates are basically going to increase at the normal revenues. So it's pretty much a fully leased portfolio, and I don't see that moving dramatically higher from here.
You're unlocking value in the hospitality business, so obviously you won't be able to speak about that. But any plans to unlock value in the leasing business as well via, say, REITs or any sort of, business restructuring in a way that you can benefit from the annuity that you get from leases?
We definitely have our eye on that in terms of how we should be structuring our business in terms of the most efficient manner. In the near future, we are not looking at it, but we also want the portfolio to reach a substantial size before we can really think about doing that at a portfolio level.
Would that substantial size entail, according to you?
I think we should be at least 1,500 to 2,000 crores before we can look at that.
And how long before that happens?
Would take at least 5 to 6 years. I mean, we're still in the process of acquiring. We've recently acquired a project in Whitefield. So we would need to ramp up the overall portfolio growth, construction in order to get there. And that's the plan that we are working on.
Okay, all right. Always a pleasure talking to you, Pavitra. Thanks a lot for joining in. You're sounding quite optimistic in terms of demand. Hopefully the approvals get better and, maybe some kind of price hikes as well will be pushed through. And we here in Mumbai will be waiting by to hear about your foray, though for the time being, the South market is your focused area. Appreciate it.
That's all we'll do right now. We'll just wait for the foray because the prices in Mumbai, no way buying new houses or renting them as well.
Well, that's right. We had Prestige, Mr. Razak yesterday, who was telling us about that Pali Hill project. It's a beautiful one, and selling at top dollar.
There's one close to my house as well. The average size of a flat out there costs over 40 crore rupees. So I can just watch from outside and maybe at best eat a bhel outside that thing out there. Maybe. What else can I say? But, be that as it may, a lot of stocks are buzzing around right now. And top of the pops is definitely IndusInd Bank, up around 5% as we speak. A big mover, and obviously has been a big mover on the way down. So some of those, moves are now unwinding, and the positioning perhaps taking place out there as well. In fact, we'll shortly be joined by Hormaz, who will tell us what's actually causing IndusInd Bank to move higher. Hormaz actually is with us. Hormaz, 5% higher on this stock.
Months and months of bad news, and finally an upgrade coming in for IndusInd Bank today. Nomura has upgraded the stock, is upgraded it to a buy recommendation from its earlier rating of neutral. They've raised the target price to 1,050 now from 700 earlier, so that's a 50% bump up in the price target as well, coming from Nomura. And they're saying that these legacy issues that the bank has been grappling with over a period of time have now been addressed, and as a result of which they're expecting their ROA, the return on asset, to improve to around 1% by FY27. And the fact that the management looking to find a new CEO addressing these issues, and the intent shown is making Nomura optimistic that they are starting FY26 on a clean slate, is what they said. And that in case RBI does approve the promoters' intent to hike stake in the lender, and that could allay some concerns as well, is what Nomura has stated in its note. And the current valuations as well of 0.9 times 1 year forward price to book is attractive as well, is inexpensive, is what Nomura has said in its notes. So based on these factors, they've upgraded the stock to a buy, among the top gainers on the index today.
Right, take that point. Thanks a lot. An upgrade coming in on a beaten down stock, and the reaction is for all to see. Let's focus on the tire industry now. Raw material prices in particular, rubber prices have seen a sharp fall in the first quarter. How does this rub off on the tire players? Are price hikes on the cards? Is the export business taking a hit due to global turmoil? Let's discuss all of this and more with Arnab Banerjee, who is the Managing Director and CEO at CEAT, joining in. Arnab, too many moving parts. On the one hand, we have rubber prices which are lower, but on the other, a large part of your raw material also is crude linked. Crude-related, spikes that we've seen, close to $77 on Brent crude right now, and there is a fair amount of global uncertainty as well. In light of that, what's the kind of outlook that you have in the very near term when it comes to margins and global demand?
Good morning for having me here. So you're right, the crude prices have tapered off from quarter four, but again, it is kind of inching up because of the uncertainties. Rubber prices in domestic have been rock steady. There have been no erosion of rubber price at all. It has been swinging between 197 to 200 rupees per kg. International prices have come down to about $1,650 per ton. So it's a mixed bag, and we carry inventory. So the impact of raw material prices in quarter one vis-a-vis quarter four will be marginal at best, slightly lower definitely. As we go along, if the global uncertainties, geopolitical uncertainties don't play out in an adverse manner, we can expect some tapering down in quarter two as well.
All right. Hi, Mr. Banerjee. Good morning and good to see you. And I recall you said that the benefits of lower input costs will start trickling in from quarter two. But with the world in an uncertain place, do you still believe that we'll see margin improvement from quarter two onwards, the gross margins, EBITDA margins? And also, give us some clarity. The government has recently imposed a 5-year anti-dumping duty on imports of insoluble sulfur that's coming in from China as well as Japan. Does that have an impact on your business? And were you importing from both these two countries?
Insoluble sulfur is a small portion of the entire cost structure. So, yes, it will have an adverse impact, but not really significant. But as I mentioned, and I'd like to repeat that there'll be a slow taper off of the raw material situation because of inventories, and the trend keeps getting upset by new developments, as you have seen. Now, freight rates may also move up because of this uncertainty, and the crude has inched up. So if these things normalize, we still hold the view that the raw material should be very, very gradually taper off in quarter two.
Okay. All right.
And what about demand? Because, domestic business, you were hopeful of double-digit growth. Has that happened so far in the first quarter? Exports, because of the uncertainty geopolitically, are they taking a hit? What's your target for the next couple of quarters and the entire year?
Yeah, I have been mentioning that for the entire year, we still look forward to a double-digit growth, as I had been mentioning at the beginning of this year. Last year, we had a double-digit growth as well. It's a mixed bag, the demand. Let me first handle exports. As I have been saying that given our situation or market share in various markets in exports, moment we get a better access to a market, we keep growing. So for us, the tariff, of course, has to play out, and we need to know what happens to the tariff, but we are not seriously disadvantaged with other exporters. So we expect US growth to come back in quarter two or maybe in quarter three. US doesn't impact significantly at this moment because the contribution to our overall turnover is very, very low. Europe is very big for us, and we expect to grow in Europe. Latin America, Middle East, these are big markets for us. We expect to grow. So it will be a mixed bag, little bit up and down. So quarter-wise, we cannot say, but for the full year, we're looking at good growth in exports. Domestic market, I think if you see the OEMs, it's again a mixed bag. The growth is slowing down in two-wheelers. There's no growth in passenger, and there's no growth in commercial vehicle segment as well. But as the new models come off the assembly lines of the OEMs, we have visibility of new fitments that CEAT will be getting. So we expect to grow in OEM vis-a-vis last year as far as this year is concerned, starting from Q1 itself. Replacement demand, again, passenger is muted. Hardly any growth in passenger vehicle segment, four-wheelers. Two-wheeler growth, which is led by rural and small-town urban, is doing fine. Scooter is doing better than motorcycle. And GDP growth, as long as it is 6-7%, we are fine on the truck segment as well. So I would say replacement is looking reasonably good.
Okay. Mr. Banerjee, good morning. Prashant here.
Hi.
So basically, you've told us many times, right? So exports and consumer, these are the two areas where which are attractive and better profitability segments as well. Exports, you've already spoken about. Consumer, I think. Overall, I mean, it seems it's a bit of a muddle through over the next 12 months or so. Would you agree? I mean, I was looking at data which just came out. I think it was about a month ago it came out. But after our last conversation, the sales of luxury cars, for example, fell for the first time in 20 years in 2024. We all know what's happening as far as EVs are concerned. So a bit of a muddle through, is that the right way to look at it?
OEM situation, the data is there up to May, so in public domain. So there's no growth overall, and you're right, the top-end car sales also have tapered off. But we are dependent more on replacement. So the replacement volume is also stuck close to zero. So that is of more concern. However, here, because of 8-9 cornered fight, there is a market share play that will play out over the next 12 months. And we are very much, our strategies and tactics are in place to gain in specific geographies, in specific shares in replacement. And in OEM, our share will increase because of new vehicles coming out with CEAT fitment, which has got nothing to do with the overall growth of the market.
Okay, I've got that. So maintaining double-digit growth for the year, and we'll have to sort of course, watch the overall tariff situation, etc. Closely, freight costs perhaps a little higher, especially for imported raw materials. Thanks very much, Mr. Banerjee. Appreciate you joining in, and good speaking with you as always here on CNBC. Let's just look at the market for a quick bit. Up 50 points, 60 points. Mitesh is back with us with what he'd want you to do as far as specific trades go. Mitesh, what do you have?
Well, morning, Prashant. I think, the IT names are still buzzing, and that's where I think, some kind of movement can happen. So while the broader markets have been quiet, they recovered, but they've been more quiet. I think focus on names like Cyient. I think the breakout happens about 1350 today. I think we got a high of around 1342, 43. So buy about 1350 here. Keep a stop at about 1325. Look for targets in excess of 1410. To about 1420. And the other stock which I have is Sell on Steel Authority. That's a stock which is slightly turning negative. Keep a stop just about levels of 130 here. Look for target of around 121.
All right, take that point, Mitesh. Thank you so much for that. Meanwhile, don't lose sight of the market. 24,900 on the Nifty, doing extremely well. The Nifty Bank up around 1/3%. NBFCs are actually spiking right now as we speak. We have Bajaj Finance, which has moved higher. From the broader markets, we have AU Small Finance Bank, which has moved higher, along with Chola Investments and IDFC First Bank as well. So NBFCs and financials doing well. Take a short break. On the other side, Manisha Gupta joins in. Focus on the commodity space. Stay with us.
Welcome back. Let's just take a look at what's happening as far as commodities are concerned now. Markets, of course, are doing just fine. Manisha is standing by with, I suspect oil. Manisha, what else?
Well, yes, that continues to make headlines on every single day until that Iran-Israel conversation, rather not conversation, that war is on, that conflict is on. We will be looking at crude oil prices making those big swings on either side. Well, to begin with, we've seen 4.5% of gains in the overnight markets. It's trading firm even right now in Asia. In the last 1 week, we've seen the crude oil prices gain up by 10%, and it is 20% up now in the last 1 month. It also is gained up by nearly 4% when you talk about 2025 till time. Well, it all has to do with the Israel and Iran conflict, which has entered the day 6, especially with the kind of statements that we are hearing from the US president calling for unconditional surrender of Iran. The Trump also has said that Iran's supreme power is an easy target as of now, and any attempt by Iran to block Strait of Hormuz could send the crude oil prices soaring, or US coming quite heavily on them. This is the main contention right now, because we do understand that at this point in time, there are no oil facilities that have been impacted, and no exports also have been impacted. So the crude oil prices currently are looking at a cap into the international markets. Interestingly, the IEA report also has moved the markets. The organization says that the global oil supply is projected up by 1.8 million barrels to 104.9 million barrels per day for the year 2025. The global oil demand is expected to peak in by 2029 to 105.6. So when we look at the demand, it's slightly higher than what we are looking at in sense of production, but these numbers are for 2029. Interestingly, IEA also says that the global production capacity also is expected to increase by 5 million barrels to 114.7 by 2030. Now look at both these numbers. So we're looking at oil consumption peaking by 2029 at around 105, and the supply is going to be increasing, and that exactly is what the markets are looking like right now. So even as the global consumption will peak in 2029, the Chinese consumption is expected to peak slightly early in 2027 itself. That is because of the EV sales are surging, and they're moving towards natural gas rather than crude oil. So the numbers really tell you that there's not a very strong run-up in the crude oil price as anticipated in the years to come. Not just China, the other major economy like US as well, the EV is expected to account for 20% of their total car sales by 2030. Earlier, remember, that number was much higher at 55% on a year-on-year basis as well. The markets are looking at way more developments that are going to come through. The reason that you haven't seen the crude prices add more premium in these current prices is because, as I said, Israel or Iran, we haven't seen any oil infrastructure impacted right now. And then OPEC and allies also are raising their output. The markets also are looking at higher inventories globally. It is record high production coming in from US as well. So it is the supply side that is keeping the markets capped at this point in time. Going forward, well, it is going to be about the US Fed decision today. While they are going to keep the interest rate steady is what the markets are working with, but it also is going to be about guidance amid tariffs and what is going to be the policy going forward. That is something that the street will keep an eye on. Apart from that, it also is about the US housing data, weekly jobless claims. All of that comes in today, and that will give you further direction.
Manisha, thanks very much for that. So, important contextual information with what's moving right now. Let's talk about the other big story, I think, which, of course, is going to be closely watched. US President meeting with the Pakistani Army Chief later today. Now, Prime Minister Narendra Modi spoke with US President Donald Trump. Here is India's Foreign Secretary Vikram Misri briefing on the talks which were held.
प्रधानमंत्री मोदी ने राष्ट्रपति ट्रंप को स्पष्ट रूप से कहा कि 22 अप्रैल के बाद भारत ने आतंकवाद के खिलाफ कार्रवाई करने का अपना दृढ़ संकल्प पूरी दुनिया को बता दिया था। प्रधानमंत्री मोदी ने कहा कि 6-7 मई की रात को भारत ने पाकिस्तान और पाकिस्तान ऑक्युपाइड कश्मीर में सिर्फ आतंकी ठिकानों को ही निशाना बनाया था। भारत के एक्शन बहुत ही मेजर्ड, प्रिसाइज और नॉन एस्केलेटरी थे। साथ ही भारत ने यह भी स्पष्ट कर दिया था कि पाकिस्तान की गोली का जवाब भारत गोले से देगा। प्रधानमंत्री मोदी ने राष्ट्रपति ट्रंप को स्पष्ट रूप से कहा कि इस पूरे घटनाक्रम के दौरान कभी भी किसी भी स्तर पर भारत अमेरिका ट्रेड डील या अमेरिका द्वारा भारत और पाकिस्तान के बीच मध्यस्थता जैसे विषयों पर बात नहीं हुई थी। सैन्य कार्रवाई रोकने की बात सीधे भारत और पाकिस्तान के बीच दोनों सेनाओं की एग्जिस्टिंग चैनल्स के माध्यम से हुई थी और पाकिस्तान के ही आग्रह पर हुई थी। प्रधानमंत्री मोदी ने जोर देकर कहा कि भारत ने न तो कभी मध्यस्थता स्वीकार की थी, न करता है और न ही कभी करेगा।
Welcome back. Bank Nifty is one of the better performing indexes today. We have to remember that the latest RBI policy has clearly turned the tide in favor of banks by cutting the cash reserve ratio by 100 basis points, entirely unexpected. This allows banks to lend another 2.5 trillion rupees, which they had to keep as idle cash under CRR. The move is so powerful, I would think, that even the beleaguered IndusInd Bank has been upgraded today by Nomura, probably partly at least because of this move. It clearly helps everyone's margins and ROA. To get an idea of how much banks benefit from these and other factors, I have with me a banking expert, Shantanu Chakrabarti, the India BFSI analyst at BNP Paribas, that is Banking and Financial Services expert. I'm sorry for the abbreviation. Morning, Shantanu. Thank you very much indeed for joining us. Well, first for banks as a whole, how do you see the margins moving? Clearly, this quarter, it's going to be jacked because of the double rate cut, and Q2 may even be worse, isn't it?
Yes. So, whether the margins bottom in Q1 or Q2 would depend a little bit on, what is the mix of repo-linked loans which are adjustable within the first month versus over a 2 to 3 month period. But in any case, some of the adjustment for most people will fall in this quarter, while some of the adjustment will fall in the next quarter. So, between Q1 and Q2, there may be slight erosion, and this may differ from bank to bank. But by Q2, you will have the bottom on margins, from which point onwards, margins will actually become a tailwind.
Okay. So, for a typical bank like, say, HDFC or SBI, will the margins in the fourth quarter of FY26 be better than the fourth quarter of FY25 or as good at least?
Yeah, we actually expect that to be the case, that for most large banks, by the exit margins of the current financial year are going to be better than the one gone by. So the arithmetic on this is very simple. We were going to get about 15 to 20 basis points worst case margin impact directly between this quarter and the next. Now, how that spreads between the two quarters, it depends on the individual banks, but that's the broad impact. But then from that point onwards, you start to get about 4 or 5 basis points of annual expansion from that point, and quarterly expansion from that point. So by the time you get around to exiting FY26, you are going to see meaningful, impact on the bottom margins, whether they are formed in Q1 or Q2 for that individual bank. Now, to give you a sense of how much this could be, we have run a small exercise on how the existing, pre the current rate cut 50 basis point kind of impact that was there on FD rates, that was repricing the currently existing back books of banks on FDs at about 15 basis points on average, which is a fairly, robust number, especially since for most large banks, FDs are now north of 50% of their total demand and time liabilities. And of course, CD rates are also very low at around 6.2%. And there the entire repricing will be done in 1 to 2 months. So all of these become tailwinds, and we are expecting a pickup in CASA as well.
Okay. Now, what is the advantage on CRR cut? Would it be maximum for SBI and HDFC Bank simply because largest in deposits?
Yes, that's one part. Now, the second part of this is how much of this, what does it mean for the overall balance sheet? Does it mean a little more deployment on the investment side? Does it mean a little more conservatism as to what rates you pay on your deposits? Or would it mean greater credit? I think it will be a combination of all three, because that's simply how liquidity works. We are yet to see a meaningful acceleration in credit growth. You must have seen the latest numbers, which are running at about 9.9%. So our expectation is that within the next 2 to 3 months, this excess liquidity, especially with the promise of that entire number coming between September and November, loan growth should start to pick up. And that's where a lot of the positive surprises should come from.
No, I'm glad you raised the issue of loan growth, because immediately after the CRR cut, I personally spoke to bankers. There is a problem of borrowers. There is a lack of borrowers. Corporate sector is obviously borrowing from the bond market, if at all it is borrowing. They have excellent internal accruals. Retail, the Reserve Bank has put its controls on unsecured credit with good reason. I'm not sure that they should even lower them. So where do you lend? Everybody says MSME. Is it really possible that MSMEs can gorge so much credit?
MSMEs in any case are about 15 to 17%. But the growth rate there is very high, and there doesn't seem to be any major headwinds. Now, we have a full year system credit growth number of about 13%, Lata. And that actually builds in about 7.5% for corporate loans. So in corporate loans, frankly, at some point there will be capex, etc. But it is very hard as an analyst to sit down and say that it's going to happen right now, especially given where the global macro stands and the specific nature of the global uncertainties.
Yes,
so,
yes.
we wouldn't be banking on corporate loan growth supporting it majorly. The only point I'll raise is around retail. Retail, there's now two positives. One, given how sharply growth rates were pulled back in unsecured loans in the previous financial year, especially in the last 3 quarters of the previous financial year. From this next quarter onwards, growth rates on a year-on-year basis, even without too large of incremental disbursements, start to look a little better. The base
is
starts
low,
to look
yes.
better. Right.
Yeah.
But
Shantanu, sorry, go ahead.
So based on that, I think 15% system retail growth is quite possible this financial year, which I mean, both on the mortgage side and on the other side.
I would assume gold will give a lot of fillip on the retail side.
But the weightage there is low. I mean,
it's very low, very low for banks. It's more an NBFC thing. What about, this is a kind of a casual conversation with only one person who's more an economist and a statistician. He expects infra loans to pick up because, the same point that you make, why will corporates invest in an era where you don't know which tariff will hit in which country and on which product, which is why corporates won't. But infra is not similarly related. I mean, if it is roads and because of road cement, the government is pretty determined on infra, rail and road, and perhaps irrigation. Do you think, have you done any study of infra loans and can that be a loan puller?
See, I mean, infra loans, I see 2 major headwinds. One is fairly recent memory of it, right? And where, you talk to any bankers, there seems to be this idea that, let the specialists and, which specific NBFCs I'm talking about, do that. And, we maybe take a back seat. So it's exactly opposite of what 2010-11 looked like. The second part is, I mean, also please think about the provisioning norms which have been proposed. If they come through, it would be very hard. I mean, effectively, you'd be earmarking upfront provisions, half of an NPA to make an infra loan, which makes them very untenable at a accounting level. I don't know how where the dust settles on those norms, but as the norms being proposed, if they stay, then, I mean, infra to a bailout, I mean, these are good. These would be good to have at some point, and I'm sure, given the nature of the problem, some solution will arise. But none of that is baked into our 13% growth number.
Okay. No, I take your point. Actually, even with infra, there are already people complaining that Nal Se Jal project money is not coming. Because it's a central project, they have not given the states and the states are defaulting. Not defaulting, postponing. No, the entire problem of infra is not resolved. But, well, at least a lot of investment activity will happen there, albeit not from the private sector. Okay, Shantanu, now tell me your hierarchy of buys. Okay, talk about banks.
Yes, so HDFC is, of course, still our topic. We don't think that the valuations fully accommodate the margin story. And as far as, rate cuts stimulating CASA is concerned, HDFC Bank and Axis Bank probably remain the most sensitive to a liability side easing story over the next 4-5 months. Valuations are still favorable. Within NBFCs, we continue to prefer Bajaj Finance because, some of the other NBFC valuations do look a little, if not stretched, at least not as attractive as some of the top bank valuations look like to us. So, they appear to be very counterintuitive beneficiaries of easing, but there's a strong case for HDFC Bank at current price. You know my target price and how aggressive it is.
Your target prices are running, as you speak, 2770 for HDFC Bank and 11,120 for Bajaj Finance. Now, I take your point. Houses in Altamount Road never come down. So, one has, if you aspire so high, you have to pay the price. Just a final question. Do you see NBFCs having an edge over, I mean, a trading buy over banks in the first half, since banks are going to suffer margin loss? And a second and related question somewhat, should we stop looking at margins for banks and look at ROAs? Simply because margins have this peculiarity of EBLR.
Right. I mean, look, I mean, ROA is, of course, the ultimate thing that you earn from the business. And as long as your leverage is not, something which in itself becomes a question mark, which On one side, could describe PSU banks. On another side, one could make the case, and in fact, Kotak Bank itself said on its call that it's got too little leverage or too much equity. They acknowledge that, right? But other than that, ROA is a very fine thing to focus on because it is the ultimate profitability of the business. But there is no major shocks coming either on credit costs or operating costs. So at least for the rest of the year, margins and ROA would be pretty synchronous for most names. Unless specific credit events happen in one to balance sheets. And as far as the NBFC trade is concerned, as far as the NBFC trade is concerned, and we have discussed this before, Lata. Some of the top tier NBFCs have margins between 800 to 1,000 basis points, and say about 40-45% of borrowing is from banks. 20 basis points on 1,000 basis points, especially when the NBFC would also be repricing their own loans downwards just to improve affordability, gain market share, etc. It's perhaps not the best prism. I mean, it noted that their margins are a little better protected in that near-term 1-2 quarters than banks, but that is perhaps not the best filter to look at the fortunes of an NBFC. An asset cycle will probably be a better filter, whether that's in growth terms or quality terms.
Yeah, fair point. Point taken. We could go on about NBFC asset qualities as well on a later date. Thank you very much, Shantanu, for joining us. Meanwhile, markets have just given up a wee bit, but perhaps it's just a trading profit-taking. Chartbusters will take the action forward.
The market recovers from opening lows to trade with gains led by the auto sector. The Nifty climbs above 24,900, just below that now as we speak. Broader market in line with benchmark indices, with more stocks advancing than the number of stocks declining.
Shares of Hindustan Zinc, they're down 5% in early trade after 7.2 crore shares worth around 3,300 crore rupees change hands in a block trade. Sources tell CNBC-TV18 that the promoter entity, Vedanta, is likely to be the seller. They have sold a partial stake in the company.
IndusInd is up 5% in today's trading session. The top Nifty gainer, Nomura, has upgraded the stock to buy rating from neutral, raised the target price from 700 to 1,050. The brokerage believes legacy issues have been addressed and expects an improvement in their return on assets to about 1% by FY27.
Shares of DMart, they trade with gains as it forays into Uttar Pradesh with a store in Agra, marking its first foray into a new state since 2017. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And the markets are trading mildly in the green. The Nifty is up 25 points. We've come off a little bit from the top, though the Midcap index showing a relative underperformance with a mild cut in trade, though you have more number of stocks advancing than declining. Hey, Mangalam.
Hi, Nigel. And look at the stocks that are buzzing around. Yeah, you have Zydus Wellness. We had pointed out that TPG Capital is a clean out trade out there. Stock up 10%. We had the management here on CNBC-TV18 on Chartbusters itself post their fourth quarter earnings, spoke about increasing their general trade presence and also improving their margins. So Zydus Wellness is a stock which is up around 10%, should come up for you on the screen. Alongside that, we have some traction on Electronics Mart as well. And TVS Supply Chain, there was an interesting large trade that took place out there where Autumn Investments sold stake, but the buyer was TVS Motor Company, which is the promoter of TVS Supply Chain. So both those stocks up for you. Zydus Wellness up nearly double digit in today's trading session. TVS Supply Chain is the other one, which is up 3.5%. But we're putting focus on Endurance Tech. That is the company that reported their steady set of numbers in the fourth quarter. More importantly, what the outlook is beyond that is something that we'd like Rajagopal Shastri, who's the group CFO's view on. He joins us now. Thanks a lot, Mr. Shastri, for joining in. You know, nearly a quarter of your revenue comes in from the European markets. There is a fair amount of geopolitical uncertainty that we're seeing. In light of all of this, what's the kind of very near-term outlook that you have? The next couple of quarters, are they likely to face some sort of demand challenges? And in light of that, what's your entire year's outlook on the revenues?
So the challenges, as you mentioned, posed by the macro environment are true. Yes, that we are seeing volumes are dropping. And we closed last year with close to 305 million of revenue for our European operations. But as we see the evolution now, our order books are very healthy. We have strong orders, from micro perspective of the company. And this has come because of, as we have been mentioning this quite often in the past also, we have done some very careful order acquisitions in the past, and we have invested in capacities for those orders and without increasing the fixed cost element. So those are giving us the flexibility to cater to any kind of demand which comes from the market, whether it is for their electric vehicles, for the plug-in hybrids, or even the normal ICEs, which is what the demand keeps oscillating from to. But agnostic to the powertrain, we have demand, we have capacities, and because of which we do see that we will not be facing too much of a problem because of the demand drop compared to the markets.
Hi, Mr. Sastry. Thanks a lot for joining in, sir. What are you doing so right, though, in Europe? Because you're definitely outgrowing the industry out there. The industry is seeing quite a lot of turmoil, but you managed to grow quite well. Do you expect that trend to continue?
So there is one important aspect which will give us a significant growth in FY26 because that's coming from our acquisition of a company called Stefferle, which is an 80 million euro company with a very healthy EBITDA margin. And we have done a 60% acquisition of that with a definitive agreement to acquire the balance over the next 5 years based on the EBITDA multiple. So this is going to give us a significant addition to our revenue, which is coming from the inorganic side. Organically also, we are seeing that we have acquired some interesting orders in the past few quarters, which are also coming into their job run and start of production now. We should see that Europe operations will not suffer unduly from the effect of the market, and we will be growing on the near term and also the medium term.
In terms of new business, you did speak about the acquisition in which you made 60% investment. Now you're looking to increase it to 30%, increase it by another 38% as well, take it to 100%. What have been the synergies in terms of, revenue addition when it comes to new clients for the other parts of the business? That's point number one. And secondly, you had spoken about some new ABS contracts domestically for Bajaj Auto and Royal Enfield as well. What's the update on that?
So I'll answer the first question first. From the European, the acquisition is giving us a significant presence with a OEM with whom we were not present earlier. So that is giving us a good advantage, especially in the geography of Germany. Two, it also gives us the synergy because this acquisition is not only machined castings, but they also have the capability of building their own machines. So this, together with our existing German operations, is giving us a strong presence. Now, this is in the backdrop of a significant number of vendors in the supply chain of the market in which we are present in. They are all growing weaker because of various aspects pertaining to their burgeoning fixed cost and the heavy investments which are made in the past. So this is giving us a unique opportunity because we are still cash positive in Europe. We are having good margins in the businesses which we are doing, and we also have a very low burden of the fixed cost. With all this, we stand in a good position to make the best use of the market there. So that's one aspect. That's the first question which you asked. The second was on the braking. Now, yes, we have been investing on the braking side, not just the foundation brakes. We have been growing significantly on the overall, right from the brake lever all the way to the brake in terms of the controls, that is the anti-lock braking system. So we have been in the market with our single channel braking, anti-lock braking system already. Now we have started supplies of the dual channel braking, dual channel anti-lock braking system to Royal Enfield and also Bajaj. So as we see, as we had projected, now we are very big already in the disc brake segment. We are almost fully utilizing the capacities which we have put. And all the backward integration we have planned in the anti-lock braking system, like making our own braided hoses, making our own electronic control unit, and also we in the future will be using our SMT line in the EMS we have put as an integration, backward integration of the battery management system. All this is going to give us good cost advantages and also the ability to capture the market quickly and grow in those lines.
All right, sir, give and take everything. You mentioned your order book is quite healthy. Could you quantify it for us? Point number one. Point number two, for the year. Yeah. For the year, with your inorganic growth, with the kind of traction you've seen on business, what is the revenue growth you'll be looking at, and what kind of a margin band should we work with?
I will show you the rearview mirror. You can look at the road in front because we don't give forward-looking guidance. But if you look at the last 5 years, our order book was close to 4,500 crores of orders we had acquired. Now, I'm talking about standalone India. I'm not including Europe. And within this 4,500 crores, we do not include the orders which we get from Bajaj because they being our largest customers, we more or less get a significant market share of what they do. Out of this 4,500 crores, close to 1,800 crores has gone into their job one in the last financial year, which means the full volumes of those will come this year. Now, another 1,100 crores is expected to have their job one or start of production in this financial year, which also augurs well. Plus, our new investments, that is, we had 3 new investments in the last year. One was we are setting up a new alloy wheel plant in the Bitkin area of Aurangabad. We are setting up a 4-wheeler casting plant which caters to a lot of international customers. We already have received close to 280 crores of orders from large marquee international customers for specialty electric vehicle related castings with some specialty coatings and surface treatment. And we also have announced that we are getting into battery pack assembly, where we have recognized some white spaces where we can use our application engineering and also our battery management system capabilities to naturally progress into. All this also will see some revenues in the upcoming quarter. So with all this, we are very positive that the year, as you see, is opening up nicely and interestingly. And added to that, we are also looking at some amount of volume increase from our customers also. If not the big double digits, at least it will be in the higher single-digit growth also because the monsoon is good. The government has been announcing certain very strong initiatives like the tax cuts, the overall increasing the liquidity in the market, making it cheaper. So we are seeing that augurs well for us.
So, I understand you won't be able to give us forward-looking guidance, but just qualitatively speaking, last year you grew in low teens, about 13% in terms of revenue. Your margins improved by about 50 basis points. All things considered and all the triggers, do you think FY26 will be better than FY25?
That's our endeavor.
Okay. All right. And what about your revenue mix X of two-wheelers? Bajaj is a big client for you, accounts for nearly 40% of your India business itself. But you have been looking to increase your share coming in from four-wheelers, which is a higher value product, right? What's your aspiration here?
See, our aspiration, if you look at that from a strategic perspective, as we look at year 2030, Europe business is predominantly four-wheeler, and that's about 25% of our business. Close to 5 to 6% of our India business is from four-wheelers. So we would like this but the two-wheeler business also we have significant headrooms because while we have good market share with our main customer Bajaj, for all the other products with all the other customers, while we are receiving a lot of RFQs, like we have got about 3,400 crores of requests for quotes, which we are actively pursuing. So we see a significant headroom in our two-wheeler business also. Given that two-wheeler business would grow, and we are looking at organic and inorganic opportunities in the four-wheeler business, and European business, as we just saw, will grow significantly because of the acquisitions. We would be happy if we reach about 35% of our total business coming from four-wheelers. It will be something which we are aspiring to, and that's our strategic plan.
All right, Mr. Sastry. Got it, sir. Appreciate you joining in. Wishing you all the best for the remainder of this fiscal. You're sounding quite optimistic about the prospects. We'll try to squeeze you on some numbers post your Q1 results as well. Thanks a lot.
We believe team here. Thank you.
All right. Appreciate that. Thanks a lot for joining in. Well, time to slip into a short break, but on the other side, we'll continue our focus on markets as well as on stock-specific action.
Welcome back. 1 India, 1 Nifty. 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 1 India, 1 N
Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, the markets have been wibbly-wobbly, currently holding with some gains. Chandan Taparia, Motilal Oswal Financial Services joins us to help us out how he's treating the situation. Hi, Chandan. Good morning. We appear to be in a bit of a band. What's your take? Which way are we likely to drift from here on, and what's the fresh call at this hour?
Good morning. Thanks, Nigel, for having me. So Nifty got stuck in a range from last 28 trading session. We have seen sustained buying interest near 24,442 marks, but at the same time, upside is being kept with resistance at 25,050 to 25,200 levels. We have noticed that every time whenever the market comes near to the lower band, it witnesses buying interest, but absence of buying is clearly visible. We have seen a decline in India VIX that is hovering near 16.5 marks. That is positive for the market to get the buy on decline stance, but at the same time, sustained call writing at 25,000 strike is not allowing market to move beyond that crucial zone as of now. So I believe market might see some more consolidation for next couple of days to commence the next leg of rally. So as of now, the view is intent to buy on decline with major support at 24,442 for positional target of 25,500 towards the end of June or at the beginning of July. But for immediate point of view, we will use the support near 24,700 to play a small bounce towards 25,000, 25,050 marks in Nifty index. Now talking about Bank Nifty index, here also this index got stuck in a range, but the good part is that supports are intact. We have seen a momentum towards 57,000 in the last week, but now it got stuck in a range. But on immediate point of view, 55,555 is major support to witness a bounce towards 56,250 to 56,500 marks in Bank Nifty index. So in both the indices, we will continue to be with buy on decline, but still we are in consolidative phase and we require some more time correction to commence the next leg of rally towards the end of June or at the beginning of July series.
All right. What about individual stocks? What do you have on your list this morning, Chandan? A lot of them are buzzing around.
Yeah, Mangalam. So first it is buy on Maruti. We have seen buying interest in selective auto pick, whether we talk about Maruti, Hero Moto, or counter like Mahindra and Mahindra. So here we are recommending to buy on Maruti. The stock has given a consolidation breakout of last 20 trading session. Supports are intact. We have seen some build up of long position, expecting some long rollover to happen in the next week as well. Data setup are indicating fresh leg of rally in the counter. So with support of 12,450, we are expecting Maruti to rally towards 13,300 level. Second trading idea, that is buy on Davis Lab. However, Nifty Pharma has got stuck in a range, but Davis Lab has seen some positive bias. Recently, it has taken support near 6450, 6500 levels, and I believe the lower band of the support could provide the buying interest to the counter. So supporting to buy with support of 6480 for an upside target towards 6900 marks. Last trading idea, that is on the momentum play, that is buy on Astral. The stock has been making higher top, higher bottom from last 6 weeks. It has given a decisive hold above 1550 marks. We are expecting fresh leg of rally led by short covering trigger. So recommending to buy with support of 1555, and Astral has potential to rally towards 1640, 1650 levels.
Got it. Okay. All right. Thanks a lot for that, Chandan. Well, we'll take in another snappy break, come back, continue to focus on markets and stocks that are moving around.
Welcome back. The market's now moved into the red. It's a wibbly-wobbly screen, and what's doing not so good for the market right now is the IT index. So yesterday it was the IT index that outperformed, supported the cause of the frontline index even when we had the Nifty bank underperforming. And now we have the IT index giving back all of those gains. Overnight we saw some weakness in NASDAQ as well, down about 0.2% for the IT index, whereas the Nifty bank still in the green, though off highs as well. We're also seeing some sell-off in a couple of these auto names. So from highs, we've seen, Maruti Suzuki sell off about 1%. Eicher Motors down about 1.5% from the highs. Hero Motocorp as well is lower. This morning, we had all the financials do well, and now they're selling off as well. So Shriram Finance, for instance, moved into the red after staying into the green for most part of today's trading session so far. Bajaj Finserv is the other one, which too has moved marginally into the green. But no problems for a lot of individual stocks which are picking pace right now. GMM Pfaudler is one of them, up around 5%. Volumes picking up on that one. And Electronic Mart is the other one, which is up around 8% as well. It's an electronic retailer, so that stock is in focus too. But now we understand from our sources that Australia is being considered as a possible alternative source for rare earth magnets as against China. Abhimanyu joins in with some details on what he's picking up. Abhimanyu.
The Indian government is exploring several ways and means to ensure no shortage of rare earth magnets which are used across industries and are currently facing supply chain concerns. Government sources have indicated that Australia is being considered as a possible alternative to source rare earth magnets. Additionally, the government is prioritizing speedier output from the National Critical Minerals Mission and for recycling via a circular economy. Apart from that, non-PLI measures to support the industry may also be considered, and tailings may be used to boost sourcing. The government for now is focusing on raising cooperation in the mining sector with several countries in South America, which include Argentina, Brazil and Chile, and the steps are going to possibly help the overall sourcing of rare earth magnets. Now all Indian mines have to mandatorily conduct testing for critical minerals from their dumps from June 2025, that is from this month itself, and this government order which is going to come into effect was passed way back in February. So of course, that is also possibly going to help the overall sourcing of rare earth magnets. Also, increased sourcing of lithium from Chile is vital for the government's plans to convert 50% of vehicles into electric vehicles by 2030. So a clear-cut plan has already been laid out, but it remains to be seen how early it is going to come into effect, and more importantly, how quickly the government is going to move as far as hedging India's risks is concerned.
Well, Abhimanyu, interesting one. We'll have to see how that pans out as well. For the time being, though, we'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.
Good morning. It's time for Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia, and it's a very familiar script that has been playing out with the markets. We're not falling, yes, but there is no conviction at higher levels. Yet again, an attempt to cross 25,000 and another failed attempt at that, at least for now, in the first couple of hours of the trading session. The Midcap index also following a similar script at the lowest point of the day now is the Midcap index, a 400-point cut from the highs of the day. So, cut on the Midcap index. And of course, what is dragging the index lower is the usual suspects. Large IT names, Infosys, TCS, and large private banks, be it HDFC Bank, ICICI Bank, Kotak Bank, all of them are dragging the index lower. Infosys at the lowest point of the day, and HDFC Bank too has given up most of the gains, Vinny.
Absolutely. Good morning, Hormuz. And just looking at some of these sectors which are managing to hold on to some bit of a green today. Auto, that is doing well, right? So any of these auto names, whether you look at it, Maruti, M&M, Eicher, Bajaj Auto, all these are managing to hold on to good gains. And like Hormuz mentioned, today we're seeing IT falling. So it snapped its 3-day gaining streak. Individual names, IndusInd Bank on the back of a brokerage note. We had Trent that is gaining as well. They came out with their annual report, and that confidence remains of the management of achieving that 10x growth which they had set in 2023 in the next 10 years. So that's interesting to watch out for. Other retail name, Avenue Supermart, opening a new store in UP, the first one. So that's an important one there. But that's an interesting setup that is coming in for some of these retailers. So that's what we're watching out for in today's trading session as well, Hormuz.
Interesting. And some important developments came in last evening as well, with SEBI approving NSE's request for weekly futures and options contracts to expire on Tuesday. And BSE's proposal for Thursday's expiry has also been cleared. Now, to understand the implications of this, Prashant is now joining in the studio to take the discussion forward with Mr. Sundaram Ramamurthy, who's the MD and CEO of the Bombay Stock Exchange. Prashant, over to you.
Guys, thanks very much for that. Let's just welcome in Mr. Sundaraman, who's with us. Sir, good morning. Great to have you with us here. And thank you. You're joining us all the way from London. So appreciate it. So this is now finally settled. We have clarity in terms of which exchange has which day. You're, of course, moving from Tuesday to Thursday. I just wanted to start with, before we kind of ask you what the implications, etc. are, I just wanted to ask you, was this a consultative process in that sense? Because as we understand it, you asked for Thursday.
As you would, first of all, thank you for having me on your television. As you would recall, when the regulators decided the only one weekly expiry per exchange, an option was given to the exchanges to select their expiry days. NSE chose Thursday, and so therefore BSE at that point of time shifted it from Friday to Tuesday. When after that things were going okay, when NSE wanted to shift it to Monday and then wanted a unified expiry, consultation papers came and it was decided it should be either Tuesdays or Thursdays. Since NSE requested for Tuesday to the regulator, in the overall interest of the market, BSE decided to go with Thursday. Thursday is a good day, so we have gone with that.
No, that's fair enough. In the overall interest of the market, as you put it, I won't press that point too much, and we'll move on quickly. But just did you assess what could be, what would happen if you stuck to Tuesday, asked for Tuesday?
So what is the need? If somebody wants something, it's okay. In the overall interest of the market, we can take Thursday. Thursday is not a bad choice. Thursday has a lot of advantages. Since you're harping on this, let us talk about this. BSE gained market share when its expiry day was Friday, which is not a very ideal day. What we should recall is, at that point of time, every day there was an expiry day. BSE didn't have an option but to go for Friday, and BSE gained all its initial market share only with Friday as an expiry day. As I was always telling, if you have everyday expiry day, every product becomes expiry day product. The purpose of a derivative contract is not to create lot many expiry day products, to give a longer time horizon between expiries so that people are able to use the product effectively.
Sure.
That is the reason why when an opportunity came and when options of Thursday was taken by NSE, we took Tuesday. And we were, and we will ever be happy with Tuesday as well. And if you look at the international scenario, B is US, B is Eurex, be it Korea, Taiwan, Kospi basically I'm talking about, Japan, many of them have their expiries on Thursdays or Fridays. So if you're thinking of relative value trading, Thursday becomes an ideal day. In India, the entire 100% market share was gained with Thursday as the expiry day. So Thursday is a very good day. So, but notwithstanding all that, if somebody wants Tuesday, what is the point in not giving it and taking a better day?
No, point taken, Ms. Ramurthy. Let's move on. So what are going to be the implications? I mean, again, this is all very near term. As you said, you've gained market share consistently before the November options regulations, etc., were announced. And actually, even after that, you continued to gain share in that sense. But with this change now, I'm looking at various analysts who track BSE as a stock. All are penciling in different degrees of loss in terms of options market share. Could you give us your assessment? What would it be?
There are multiple points to be considered in this. When every day was an expiry day as well, as you rightly pointed out, and as I mentioned, BSE was gaining market share. So is it possible for anybody to take only one contributory factor to the volumes, even presuming Thursday will reduce market share? Even presuming, I don't presume it. Even presuming, is that okay for overall assessment? I don't know. Because there are growth factors, there are market-related factors.
Mr. Ramamurthy, if you allow me to come in, let's just... so keeping everything else constant, if I can put it that way, I know it's an unfair question, and other things will not be constant. And I think we understand that there are various levers. But for a moment, keeping other things constant, with this change of day, could you give us a sense of what could be...
You can keep everything constant, but life doesn't work that way.
Of course, it does not. But I'm just asking, theoretically...
And as far as Thursday is concerned, I think I very elaborately told you how Thursday is a better day. Because beware, the entire 100% market share in the market was gained with Thursday as the expiry day. And there is a very great advantage of relative value trading between economies, which is what is happening today because markets are becoming global. Thursday appears to be a better and ideal choice.
So I mean, I would really appreciate a number, sir. You are about 24% share right now. Will you, once these things kick in from September, will you stay at 24? I'm looking, for example, at a Goldman note, which is saying that there should be a 3 percentage points hit to market share. Others are accounting for a little bit more. But what would you say, sir?
Multiple points. Has anybody, including you, have ever predicted that with all the analysis that you all have at your hands, that Sensex will grow this way? I don't think. I don't think it is that easy to predict any market.
That's a nice throwback at us. But that's not the question, sir. You understand, right?
Permit me to reply.
Yes, please.
None of you predicted ever any of this, right? And secondly, I have clarified to you in your own studio multiple times that I don't run behind market share in derivatives.
Okay.
I am talking about deepening and broadening of markets. My effort to deepen and broaden markets will continue. We have targets in terms of how many brokers we should have, how many racks we should have, how many FPIs should be participating, what type of the premium quality should be there, how many products we should have. This is what we set as our KPIs and we work towards it. The purpose of derivatives should be served. Market share is a side outcome. Main outcome is economic value of a product.
Yeah. No, point taken. And by the way, nicely done, sir, if I may. But let me read out that one line, right? Which, there is that acknowledgement that there are other levers as well. I'm reading verbatim from an analyst note. It says, we now expect BSE to gain 0.5 percentage point share per month from September 2025 low to get back to the 24% share by March of 2026. So even those who are saying you will lose some share are saying, well, you will gain it back. It'll just maybe, it'll just take a little longer. That's all. So I think that understanding is very much there. But since you're not giving me a number, and I won't press on that point any longer. Could you give us a sense of, what actually your share was on, say, Tuesdays? What your share of volumes traded on Tuesday as opposed to Thursday?
See, it is not proper to compare it that way. I'll tell you the reason. Typically in India, on expiry days, the products trade more. And more so because we had introduced a culture in between of having an expiry day every day. We had one product expiring every day, so the products become expiry day products, and they tend to trade more on the expiry day. When we introduced Friday as the expiry, we were having you wanted number, so please take it. 85% of the volumes were getting traded on the expiry day, which is exactly what we were very concerned. Then it becomes nothing but an expiry day product. The moment we interspersed with days, Tuesday volumes became 45% to 46%. The remaining started getting distributed. Certainly, therefore, Monday volumes will be slightly more. It used to be around 30%, 25%. The remaining got distributed amongst days. I was not able to see any nearness to expiry giving some extra advantage on the days of volumes. I hope I make it clear to you. So clearly, expiry and expiry -1 have always been high, even when it was Thursdays and Fridays for BSE. Friday volumes were exorbitantly high because of the unfortunate culture of everyday expiry. When that everyday expiry went away and it became Tuesday, naturally and necessarily the concentration from expiry day came down, notwithstanding still it will have huge value. Theta comes down heavily on expiry day, so there will be greater volumes. And expiry -1 because of people taking possession. But the concentrations were not as before. I feel interspersing of the days of expiry is what is more important. That continues to happen with Tuesdays and Thursdays.
Sure. Actually, Mr. Ramamurthy, 2 points, right? I mean, Fridays, because there is weekend risk, there is that element to consider as well, right? So when we look at, these conversations about, well, NSE gains, BSE loses, I mean, it may not be as simple because should you count Fridays, is it going to be as large? Weekend, risks have gone up quite a bit. The other bit, of course, as people have pointed out, is that most of the algos, etc., have been backtested on Thursdays. So maybe they will need to go back and do that for Tuesday now. So overall volumes drop a little bit. Is that a possibility?
In fact, if you look at it that way, more algorithms would have been backtested for Thursday expiry.
Correct.
Because we are just very nascent. The number of algorithms that need to be backtested for Thursday versus number of algorithms to be backtested for Tuesday in a very new exchange like ours, our numbers will be fairly low. I don't think the day effect on market works anymore. Algorithms work multiple ways. So it may not be fully correct to say it has to be backtested. Some of them may require a fine-tuning.
Okay, got it. Just one more point in terms of your the number of, and you always, last time also I spoke to you, you kind of talked about clients, right? Number of clients that you're adding on, especially in the derivative space. Where are you at now? And if you can give us some guidance.
Oh, I can certainly. See, we have around 525 brokers now. We want to increase it to 600 to 700. Our concentration is on foreign participants and brokers and racks and our technological capabilities. On brokers, I told you the numbers. On foreign participants, we have around 290 to 300 foreign participants today participating with us. We want to increase it to at least 500 over a period of time. That's why we try our best to meet people, convince them as to why India is a great destination. And once they get convinced of India, why BSE is a good place for them to look at. And in terms of racks, we want to go and increase by another 200 racks. We are working on it, and very soon we should be able to accomplish it. And in terms of product, we are working towards deepening the products. We don't want only this week volumes. Next week, next to next week, and monthly contracts, which are working well. Our efforts are giving us some results. We are working on also strengthening futures market, which we will double up because now the futures will become monthly. We are doing all these type of efforts to deepen and broaden markets. Honestly, that is what has brought us market share.
Sure. 200 plus, 200 more racks is what you're working on, right? Okay. By when? I mean, any
our idea is by the end of the current financial year, we should try to achieve it. You know, there are a lot of moving parts in all this because they are capex. There are multiple agencies involved. So timeline put us end of this financial year, we should have 200.
I'll just ask you one last question. This is not related to BSE, but you know, since you are also an exchange and a frontline regulator in that sense, you know, I don't know if you saw this recent story. I think it was the Ken which put out the invisible hand in markets. I mean, I think they were referring to this to Jane Street, but there are, you know, there's Jump, there is Citadel, all these players which now account for a large part of the volumes overall. You know, have you heard or has the regulator SEBI sort of can you tell us if they're looking at you know in a way unusual price swings because of what these entities are doing in the marketplace? Is there anything at all which is going on?
It's not. It's maybe it's a question to a wrong person. You're talking about regulatory intervention. You have to talk to the regulators to find out what they are doing. I'm a very, very beginner in the derivatives market. Volumes with me in respect of all entities that you talked about are all in very, very early stages.
Okay.
The right question probably to the right person, not to me.
Okay. But you've not been asked for any data or anything, right, in this regard? I mean, BSE has not been.
First of all, it is not fair on you to ask what regulators ask the regulated. That is between the two. And notwithstanding that, I have not had any inquiries from anybody on this.
Got that. Thank you very much, Mr. Ramamurthy, for, I had to ask you that, apologies, but had to. Thank you very much for joining us, and it's always a pleasure speaking with you. BSE, the stock, I think, is down about 1.5%, but I mean, you know, given the amount of noise, I mean, the stock actually is holding on, I would say, very, very well. Just about 35 rupees lower, 2,630 or so. We'll take a quick commercial break here. Hormuz and Vinny will take you through the rest of the program in just a bit after this break.
Welcome back. On to all things commodities now. After that candid conversation with the MD and CEO of BSE, Manisha is now joining in to talk about sugar, spice and everything nice. But prices are at a 4-year low, Manisha.
Oh, well, yes, this is the time if you have to consume more sugar. Well, yes, you know, internationally, we've seen the sugar prices continue to decline quite sharply. In the overnight markets, we've seen 3 to 4% of a cut coming in for sugar prices. So while in New York, you've seen the sugar prices now decline to a 4-year lows, the London sugar prices are trading at a two-week lows as well. Well, price for raw and white both have seen a decline of around 4% overnight. This is after the USDA report for the global markets in 25-26, which suggests that there is going to be a record production at around 189 million tons. The consumption is expected at a record as well, but much lower at 177 million tons. And when you look at the surplus going forward in the season 25-26, that is anticipated at almost 42 million tons as well. The USDA also says that they're looking at higher sugar production this time around from major producer countries. For example, Indian markets, while we did see a 26.2 million tons in the previous season, the next season could be looking at a 19% of a jump to 35 million tons. Not just India, if you look at Brazil, which is the largest sugar producer, by the way, is looking at almost a record crop of 44.7 million tons. If you look at Thailand, well, we are looking at higher sugar production here as well to the tune of 10.3 million tons. So higher sugar production, even as the consumption is rising, the production is rising way more, and that seems to be weighing on to the prices.
Absolutely. I think, Manisha, you need to start having more sugar now so that you see the consumption rising at that level as well. So, yes, that's something that I'm hoping you start doing because I'm eating a lot of sugar. I hope you do too. But thanks so much for that, Manisha. But on that note, we're going to slip into a very short break. When we return, we'll discuss market technicals with Midday Shankar and also discuss his top trading bets. Welcome back to Trading Hour on CNBC-TV18. Now we have Mitesh Thakkar joining in with us to give us a quick take on the technical front of the market as well as his top bets. Mitesh, good morning. I think yesterday also when we spoke, the markets were here around this 24,800 range. Today also around that level. What should we watch out for in terms of Nifty, Bank Nifty now, as well as in terms of overall your top bets?
I think I've been saying that we're possibly going through a phase of contraction and the markets might not give a directional view. In fact, most of the volatility suggesting indicators have turned flat, meaning that not much might happen. So therefore, we'll avoid trading the index, though the broader counters are 24,500, 25,050. And on the stock side, I have a buy on RBL Bank. That's, stock is showing some traction on the intraday charts. So buy here with the stop at about 218 for targets of 230. While PFC is, REC is on the negative side. That's a sell with the stop just about levels of 400 for targets of 380.
Anything on Vari Energies, Mitesh? It's been on a bit of a downtrend. It was a post-listing high of 3,700, currently at 2,700. You may not have enough data on the charts, but if anything that you can spot.
Vari Energies is something, which Nifty has done. Post-listing has been in the news, but unfortunately not been tracking it because, as you rightly said, the amount of data available to me is very limited. So I'm not sure whether the chart makes sense immediately.
Mitesh, thank you so much for sparing time and joining us today, and we'll have you back towards the close of the trade with your ideas as well. By the way, the market has slipped slightly from the levels at which we started off the show. 50 points lower now on the index. The Sensex is now down 200 at the lowest point of the day. The Nifty Bank has slipped into the red as we speak, so that is also weighing on the index. The global markets do remain on the edge. The Dow futures are still up 20 points, still awaiting further action from President Donald Trump on the Middle East crisis. Take a short break. On the other side, market fundamentals with Jyotivardhan Jaipuria of Valentis Advisors. Stay tuned. Welcome back, and a bit more pressure now on the index, now below 24,800, 75 points lower. In just a few minutes, the Sensex has slipped from 200 points lower to 260 points lower. So some more downward pressure coming in for the index. And just pull up the contributors before we go to Jyotivardhan Jaipuria, and that will give you an idea of what is actually pulling the index lower. We spoke about the IT names, we spoke about the large private banks that are contributing to the pressure on the index. There you can see ICICI Bank, HDFC Bank, Infosys, TCS. So all the index heavyweights are putting pressure on the index. And on the flip side, IndusInd Bank and Mahindra & Mahindra trying to fight for the bulls. But Jyotivardhan Jaipuria of Valentis Advisors is joining in now to take this conversation forward. Jyoti, good morning. Thank you for joining in. There's been a lot of conversation about these rising oil prices and the impact that it could have. A lot of experts have also said that structurally oil does not have any basis to hold at the prices where they are currently, because there is no demand per se, but it's only because of these Middle East crises that the prices have gone higher. But if this crisis prolongs for a longer period of time, say for the next 3 weeks or for the next month or so, will that have an impact on the Indian macro balance sheet and then have a cascading effect on the market as well?
Like one is on a very broad basis. If you look at all the wars or skirmishes we've had in the past 30, 40 years after World War II, the market has been nervous when that war started. But, as the war continued, people tend to forget about it. And, like if you see a 6-month return, 1-year return, it's always been positive and the war has not had too much of an impact. Here, I think, the market is more bothered because of the oil. Obviously, oil is one of the weaknesses for India. If you look at, before this skirmish started, things were looking great for India on the macro. Low current account deficit, low fiscal deficit, low inflation, easy liquidity from the central bank. So, a sustained pressure in oil could have, change some of these things because your current account could go up, inflation could see some pressure. But overall, like you said, we don't expect like oil to continue to be higher for very long. You probably will have, if this continues for, let's say, 3 weeks, and some of the oil fields get damaged, or some of the shipping lines get blocked off, you could see some flare up in oil coming maybe for 2, 3 weeks, 4 weeks, and that could impact the market. It could impact short term. But I think typically this will die down after a few weeks. I don't think it lasts for more than 2, 3 weeks. And then you'll see oil coming back down because, see, supply is still plenty, demand has been weak. And, once this thing gets sorted, I think a lot of the other producers will start increasing oil prices. So I think, yeah, there could be a short-term impact on markets. And probably that is a good thing because, after the rally, we were all looking for some excuse the market to correct. So in some sense, this is the excuse which you get. And then, you have to use that to start buying back into the market.
Absolutely. Hi, Jyoti, this is Vinny joining in the conversation as well. Good morning. Does this mean that domestic focus continues to be the main area even for y'all, and that's where y'all will continue to look, whether in terms of company sectors as well?
Yes, so that has been like the focus for us for quite some time. And, post-Trump and the tariffs which he's been putting, we've been cautious on the US economy. All said and done, they've not done as badly as we thought they would because so far inflation is still not coming over there. And we have the Fed meeting on Wednesday. But in general, everybody believes inflation is coming with the tariffs we put there, and that will start putting pressure on the economy at some point. So for us, it's largely been a focus on the domestic economy. There are some sectors which are more focused globally, which we've been nibbling into, where we think valuations have become cheap. So one of them has been the pharmaceutical, which keeps getting into focus because of the Trump tariffs. The second has been chemicals, where we bought a bit of stock.
What is driving this bullishness on the chemical space, Jyoti, since you mentioned that you've been nibbling into this sector? Because the last couple of years have been, if you could say that, a washout for the sector as a whole. Stocks have not done anything. Earnings have been dismal. What's driving this? You mean to say that the sector has bottomed out now and then now looks attractive for a recovery?
Yeah, that's right. So, our philosophy that we use, right? We buy things which are undervalued, obviously, but more underperforming and underowned, where things have done badly and the focus goes off from the market. So for us, we track two things. One is on the very bad macro. Stocking at the dealer level was very high 18 months ago in the chemical space.
And that stock level is progressively kept coming down. So now the stocking level has gone back to very normalized levels. So, that whole reduction in sales, because partly the dealers were destocking, has gone away. The second thing is, for a lot of companies, if you see in the last 2 years, earnings have been quite dismal. And so we think there's starting to be a bottom out of earnings at some point from here. We'll start to see earnings recovery because volumes will pick up, even if margins don't pick up. And valuations have relatively become okay. So one thing which we would have been more bullish if valuations were much cheaper than where it is today. Even now, I don't say valuations are super cheap, but there are some pockets which we found where valuations have become very reasonable, and where we think over the next 2-3 years, if things go okay, then we can see earnings doubling. So, those are the stocks which we are buying a little more bottom up. But generally, the broad thesis is you've had a lot of destocking. You've had, 2 bad years for the industry in terms of earnings, and from your earnings will start to trend up.
Okay, that's the specific reason coming in for the chemical side. You expect the earnings to starting to trend up now, moving on from here, and then bottomed out. What about your thought coming in terms of overall, if you're looking at in any specific sector, would it be more on the large cap side of the companies, or mid and small cap is something that you would look at in terms of valuations right now?
It depends on sector to sector. But if we look at the market today, the way it's positioned, it's like, the large caps are the attractive space and we don't want to buy the small caps because they look expensive. And yet, if we go sector by sector, we find a lot of small caps or mid caps which are trading much cheaper than the large caps, and where fundamentals are improving quite a bit. So example, if we look at banks, we like some of the large cap banks, but in banks, we find a lot of small cap banks which are trading at very attractive valuations. So we have a mix of them, where we have the large caps also, we have the small caps also. Again, in the chemical space, a lot of them are mid and small cap companies, which we tend to like, which are doing very well. In capital goods, we have a bunch of small cap names which look attractive. Even now, they're not as cheap as they were 5 years back, but even now, just given where the earnings are going, they still, offer great valuation support. The other sector which we are bullish on, we've spoken of earlier, is the cement. So in cement, we think a lot of the smaller caps cement companies are much more cheaper, and they offer more value than probably some of the large cap names do.
Since Jyoti was mentioning chemicals, I got reminded of Navin Fluorine. There's another bullish note coming in today from Vendis, and a third bullish note coming in on Navin Fluorine. So yes, some chemicals analysts turning bullish on the chemical space. But Jyoti, what about the capital markets space as well? The BSEs and the CDSLs. The one issue regarding the exchange, the weekly expiry issue, has now been put to rest for good. But now, does that mean that with this change in expiry, the changes that will come in, does that benefit a lot of these broking firms, the angel ones and the likes, the Motilal Oswals and the kinds, because of the changes and the incremental volumes that would come in?
Yeah, so our view is like, one is the long term is that these guys will do very well, because in India, investing in equity will keep putting up just as an asset class, and people will trade more, and there's a lot more to be done. But given what we've seen in the last few years, we think there'll be a couple of quarters, maybe 3 quarters, where there'll be some weakness on a year-end basis in earnings, and probably that will offer a better opportunity to go and buy into some of these stocks. So ours is, we would prefer buying these now on weaknesses rather than buy these at current prices.
Okay, thank you so much, Jyoti Vardhan Jaipuria, for joining with us on the show, as well as giving us your insight in terms of the market, as well as the top sectoral bets in the market as well. But on that note, we're going to actually sip into a very short break, and on the other side, we'll be joined by the management of Happiest Minds Technologies. So don't go anywhere. Welcome back to Trading Hour on CNBC-TV18. We have the management of Happiest Minds joining in with us, Venkatraman Narayanan, the Managing Director, and the newly appointed CFO, Anand Balakrishnan of the company joining in with us to talk to us about that. Anand, firstly, congratulations to you. It's been one happy week coming in for you for Happiest Minds at the CFO position. Before we start with the conversation moving forward, what are your key insights in terms of your focus area that you have for the company? Next 12 to 18 months, what do you look at it in terms of the growth for the company? Overall, FY25, around a 26% growth that we're seeing. Where are you envisaging moving on from here on? What do you want to work on here? Anand?
I think let Venkat take this thing. Okay, hello. I'm relatively new in this organization. I will defer it to Venkat to take this forward, and then I'll answer the other questions as well.
Absolutely. Venkat, over to you.
Venkat, go ahead.
Hi, Vinay. Good morning. And yes, we are looking to grow into the next year. Last year, we came out of a decent year, 26% growth, like you rightly highlighted. It had a mix of both organic and inorganic growth. So we did reasonably well on that front. 2-3 years, we have shown compounded annual growth rate of about 22% plus in our revenue growth. So it's fairly been a good 3 years. If you look at it post-listing, we have kept on to that double-digit growth rate. And our endeavor is to make sure that we keep growing both organically and inorganically going into the next year, and meet, or at least make an attempt to meet that aspirational growth target of $1 billion by 2031.
Gentlemen, good morning. Thank you for joining in. This one simple, I was reading about a note that came in a domestic brokerage note yesterday, and it mentioned that your inorganic growth plans, the inorganic acquisitions that you have done, will eventually start to fructify and will be instrumental in leading your growth and shifting your product mix towards the healthcare and the BFSI space. What are your plans are you guys doubling down on these two verticals right now because of the headwinds that you're facing in the EdTech segment? If you could share your rationale for that.
Sure. Early last year, we verticalized the businesses. So, EdTech was the lead vertical. Once you verticalized and you looked in future into the growth verticals that we needed to be in, obviously BFSI, healthcare, manufacturing, CPG, retail, these stand out. EdTech is something that we have been strong and we've been good at. But then the need to strengthen these other verticals was an imperative because, traditionally IT industry has grown consistently in these verticals. Acquisitions that we did nicely fitted into these verticals. So high tech, healthcare, and BFSI were the three verticals that got really, strengthened because of these acquisitions that we did. And we are continuously following up and building up on that trend to keep these three verticals growing. EdTech is something which has been traditionally very strong for us. But yes, there have been signs of slight weakness in that vertical, which we have shared with you in our earlier interactions as well. And, while we stand a very good chance to win any contract that comes into that vertical, the market itself has to be amenable to that kind of a growth aspiration from our side. So while all focus is on EdTech, we are also beefing up, or we are doubling down on growth of the other verticals, and this is towards keeping that double-digit growth that we had talked about the company.
Now, speaking of contracts, how's the deal pipeline looking like? Are you in talks? Are you in the course of winning new deals? What's the situation on ground currently?
While I can't speak to you about the quarter that's under progress, but we are seeing reasonably good growth in the quarter. Just to put it in perspective, last quarter we grew by about 1.1%. If you look at it in dollar terms, constant currency. This is despite, there was this fiasco that we had with one particular customer, which I'd covered ad nauseum. If you adjust for that one little mishap in our case, we did about 2.5% growth in Q4. it's been not the easiest of quarters for the industry. Now, coming off that, we are looking for a similar repeat of a similar kind of a number. In the quarter, we are seeing a good amount of existing business, falling in place, new business coming in from existing customers coming in. The deal flow has been good, I should say.
Right. What I want to also understand, Gen AI, right? Previously, you have spoken about, believe that it will break even by FY26, the Gen AI side of the business, and will be profitable in FY27. Anand, if I could come to you in terms of your overall thoughts for Gen AI, as well as how large do you think it can actually be as a part of the company's business going forward? And in terms of margins, how does that work there?
Again, as I said, it's just been barely 2 weeks into this organization. I'm kind of pretty much in an immersion in a discovery phase. Venkat, why don't you take this up and then probably, and I'll take it up later.
Yeah, I think Anand, the point here is, Vinny, Gen AI, we had set a target for ourselves to do about $5 million in the second year or the first year of our establishment. We were about 50% of that. That's what the number that we have disclosed for the last year. We are looking at a similar number, which is almost a 50% growth going into the current year, which is FY26. Last year, it was an investment year, and I had covered this in all my earlier calls. It was a low utilization year. It was a setup year. It was a startup within a larger organization. So all support, all hands on the deck to make sure that the business takes off the ground. We had multiple conversations. We have opened multiple accounts, all of which we have spoken about. But coming into this year, we are reaching a state of maturity where first is our utilization rate, which was about 35 to 40% in the last year, which should come up to the 60 to 70% range. That should nicely take us to a break-even point, which you rightly pointed out. And then it should, the trajectory should be one of growth going into FY27 onwards. Coming to what should be the size, that's peering into the future a little bit. I think for any business unit to stand out and gain traction and be relevant within a larger environment, when we are about 500 million, it should be something close to at least 5% of the total business. So what I'm trying to say is it should be about 25 million in terms of revenues in the next couple of years for it to really gain traction. But while I say that, I should also be careful to say that just like IoT was a business unit and then it got absorbed into the BUs or into the verticals as we went ahead, Gen AI also could get nicely intertwined into the business as we progress, and it could just get integrated into our verticals and horizontal offerings that we offer to our customers.
All right, gentlemen, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year, and Anand, wish you good luck in your new stint as well. We'll take a short break here, but before we do that, CNBC-TV18 Access, a premium membership-based service available on CNBC-TV18.com, offering members exclusive content, market intelligence, and expert thought leadership. And the membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions, and masterclasses, and curated lifestyle benefits. Now, designed for an immersive and enriching experience, it empowers members with premium business intelligence and unique lifestyle benefits. The power of insight, the privilege of access, exclusivity, experiences, and influence is yours to claim. You can become a member by logging on to cnbctv18.com/access/plans. Welcome back, and as we count down to this edition of a trading hour, we leave you with the markets near the lowest point of the day, below the mark of 24,800. The Sensex 2 down 245. The Midcap index, though, is now down 300 points. So another sharp correction from the highs of the day, and it's the Nifty Bank that is dragging the index lower. But from Winnie, me and the team that put this show together, thank you so much for watching. Halftime report on the other side.
Midcaps buckle under selling pressure even as large caps trade mostly steady as the Israel-Iran conflict heats up. Auto and consumer discretionary gain while metals and utilities sulk. Vedanta sells 1.7% of its stake in Hindustan Zinc for over 3,300 crores via block deals. This transaction comes soon after Hindustan Zinc announces a capex plan for a zinc complex to be funded 50-50 via equity and debt. BSC CEO tells CNBC-TV18 Thursday is not a bad choice for F&O expiry, citing market share gains, while when expiry was on Friday, he expects to expand the broker base from 500 to 700 and foreign participants base to 500 in 5 years. Crude prices surged 4.5% overnight on Trump's call for Iran's surrender and fear of shipments via Strait of Hormuz being affected. But Israel not targeting Iran's oil infra and record OPEC Plus and US output keeps prices in check. The Indian government is looking to source rare earth magnets from Australia and is planning to offer incentives beyond PLI to boost sourcing ties with Argentina, Brazil and Chile. Two will be strengthened.
Good afternoon. You're watching us here on Halftime Report. I'm Mangalam Malu. With me, Ekta Batra. We come to you live from the CNBC-TV18 Motilal Oswal studio. It's a down day for the market. In fact, after an up day in two sessions ago, the last two trading sessions, we've been seeing a bit of a decline for the frontline index. And what's interesting is that even as the Nifty Bank is mildly outperforming today by not falling as much as the frontline index, the index that did well yesterday was the IT index. That has now come in for some bit of selling. The broader markets for the second day running have it a lot worse. We have more stocks declining than the number of stocks which are advancing. And what's congruous between yesterday and today's trading session is the advanced decline lines. We both started, with more stocks advancing than the number of stocks that were declining. Somewhere around 10:30, 11, we saw those lines converge. And now as we speak, 1,500 stocks in the red for about 989 in the green. Few stocks which are in the green include, the likes of Vedanta. We do have some traction that we're seeing on Avenue Supermarts. And at the same time, there are a lot of other individual stocks as well, which are seeing some traction. So far and few in between, but we do have a bunch of them which are seeing big magnitude of gains. Case in point, something like an Electronic Smart as well, which is up nearly 15% with decent volumes backing it. Hi, Ekta.
Hi, Mangalam. Yes, absolutely. It's definitely the geopolitics which we've been pointing out, Iran and Israel, which is really dominating sentiment as well as the market moves at this point in time. We have the FOMC meet, which the outcome today, rates are expected to be unchanged, but nonetheless, that would be an important cue to watch out for. So as of now, we have the Nifty, which is trading lower by around 0.2%. The Midcap index also down over 250 odd points with an advanced decline ratio, which is on the declining side. But let's kick off the show with specific stocks. Hindustan Zinc is under pressure, post a large block deal. The promoter Vedanta is the likely seller in the deal. Also, they have announced a phase 1 of their capex. Nigel is here with the details. Nigel.
Fear about Hindustan Zinc when it goes past that 500 rupee odd mark is that the government of India and Vedanta, which are the largest shareholders in the company, they could probably take that opportunity and take some money off the table. And that's precisely what's happened. So early this morning, we had a 1.7% deal that was seen on the exchanges worth around 3,300 crores. And in all probability, it's likely to be Vedanta that was the seller in today's trading session. Now, Hindustan Zinc just yesterday announced that big capex, 450,000 tons of integrated zinc metal capacity addition is what they had announced. They had said that the timeline for this is close to around 3 years or thereabouts. And the capex that they're laying out is around 12,000 crores. They also said that they'll be funding this via a mix of debt as well as internal accruals. The stock, though, is under pressure because of that large trade. And just last year, we saw both in the month of August as well as in November that you had Vedanta and Government of India. Both of them had sold some stake in this vicinity of around 485 to 505 rupees per share. Now, the management, they spoke to us earlier today. And they say with regard to these plans, they believe the capex of close to 12,000 crores is in line with global averages because some on the street believed that it was a little bit expensive. They also said that they've announced phase 1 and in the next 2 months or so, they will announce phase 2. And that will entail that the zinc capacity will be doubled. And finally, they also went on to say that they're giving us a rough mix that 50% of this capex will be funded via debt. The other 50% will be via internal accruals. But the reason the stock is low is because of the large trade. Vedanta always knows how to time the market well. They've gone ahead and they've taken some money off the table. Back to you.
All right, Nigel, thanks a lot for that. In fact, earlier today, we spoke with Arun Misra, who's the CEO and whole-time director at Hindustan Zinc. He spoke about the capex plan and also the capex split. Listen in.
This capacity is not just a smelter. This capacity includes, your another roaster, melting casting, fumer. No, earlier days we never used to build smelter with a fumer. Now we have taken fumer from the very beginning, and along with, of course, leaching, purification, cell house. At the same time, we'll put up a mill for processing of ore and then of course mining expansion. So altogether 12,000 crores for creating this capacity from mine to smelting and 250,000 tons of metal. It's a good money, and to us it's a benchmark capex that we are proposing. In a manner of 2 to 3 months, we will make entire announcement for 2 million ton project expansion. Date we will decide depending upon how we are progressing. See, roughly in my calculation, we do about 10,000 crores of PAT year on year. If we do that for 3 years to 4 years, it's about 40,000 crores we are talking about. So we shouldn't be there, and this will be also spent over about 4 years. So we have enough of internal accrual power to fund the project, but also we will have to take care of strategic interests as well. So we will take some amount of debt, maybe up till about 40 to 50% of the project cost.
Okay, so that's on Hindustan Zinc. Some positive news which is coming for Alembic, where they've received an establishment inspection report for their API 3 facility at Karkari. So that should be a positive detail for Alembic, which is just about lower by around 0.3%. So nonetheless, let's shift focus. Mangalam, you're looking at Zydus Wellness and TVS Supply Chain Solutions. These are the two stocks you're tracking.
That is correct. Because of a couple of large trades that took place in yesterday's trading session for Zydus Wellness, the large trade took place in the block window in yesterday's pre-open, where nearly 7.3% equity changed hands. And we had then, inferred that maybe it would be TPG Capital which would have done a clean-out trade, because the size of the trade and their holding matched perfectly. So nearly 7.3% stake. The interesting part was, and the reason why the stock is higher today, is the purchaser. The buyer of that is actually Parag Parikh Mutual Fund. So PPFAS has gone ahead and bought 7.3% stake, and this is a clean-out trade. So no immediate, supply concerns as well. And add to all of this, Zydus Wellness, we all know as the company that, sells strong brands like Nycil, Complan, they're sugar-free, Nutralite, and very recently when they bought Natural or Max Protein, Right Bite, puts them in the place where the total addressable market for their products is growing. The management has said that they will target early teen revenue growth in FY26 with margins seen between 17 to 18% in the next 2 years, and they are expanding their general trade coverage as well. So all these things doing well for them, along with Right Bite, where 25 to 30% growth compounding is possible. So in a sector which is currently parched for growth, if a company is growing in low teens with some of the categories which are growing 25 to 30%, the street likes that. Mutual funds are backing it, and in the near term, no supply pressures as there is a clean-out trade which is done. For TVS Supply Chain, the interesting part, and the reason why the stock is up 2%, is that there was just 1% equity that changed hands yesterday. Autumn Investments sold, but the buyer was the promoter. TVS Motors bought close to around 1% equity at 144 rupees per share. As of March, the promoters held nearly 43% stake in the company. So this purchase increases it by 1%. But more importantly, 143 is a lot lower than the IPO that the company did way back in August 2023, which, they offered shares at around 197 rupees per share. So the promoters were the ones who, diluted their stake during the IPO because it was fresh issue coming in. But at the same time, now they're buying it at a price which is much lower than the issue price, which is why the stock is higher. Interesting moves.
Okay, yes, absolutely. Interesting moves coming in for both the stocks, Zydus Wellness as well as TVS Supply Chain. Just want to point out that for Alembic, it is positive news that they've received this EIR or Establishment Inspection Report indicating a closure of an inspection. So just watch out for that. And talking about inspections, Glenmark was in focus because their Monroe facility was inspected and they have received 5 observations there. So do watch out for Glenmark as well. That stock should be in focus. We'll take a short break. We'll get you more on the markets once we're back. Stay tuned.
Welcome back. You're watching us here on Halftime Report. We do have a couple of stocks on our radar, some from the pharmaceutical end. Ekta, what is it that you're watching?
Well, yes, I'm looking at Divi's Labs, which is in focus in today's trading session. That is on the back of news that Novartis and MSN have settled on a particular patent, which is the 659 patent with regards to the heart drug Entresto. Now, the legal battle for this between Novartis, which is basically the patent holder for Entresto, as well as MSN, which is looking at generic competition, is going to move to the next patent, and that expires in November 2026, and the related exclusivity expires in May of 2027. What this means is that basically there's a settlement between the two companies, and there's a possibility that MSN will not launch the drug at risk anymore, or launch it possibly in July of 2025. How is Divi's going to benefit from this? Now, Entresto is Novartis's blockbuster heart failure drug. It has generated around $6 billion in terms of sales for Novartis, giving you a sense in terms of how important it is. Divi's Labs is expected to be a key supplier when it comes to APIs for Entresto to Novartis. Now, Novartis is facing generic competition from MSN, and they have been in this legal battle, and it was expected that MSN could probably launch the drug in July of 2025. Now, Divi's is making a lot of money from this particular API supply. Estimates are that they made around 1,200 crores from it just last year. And if in case the competition is coming in earlier, which is say by July 2025, then that 1,200 crores will get diluted. So the estimates are that it could probably come down to around 700 crores. Now, if in case Novartis and MSN have settled, but we don't know the terms of settlement, we don't know when they could probably launch, that means that they could probably still make 1,000 to 1,200 crores and not 700 crores if in case they launch in July of 2025. We don't know the terms of settlement, but the positive is that there is a settlement between MSN as well as Novartis.
All right, so that's about Divi's Lab, up around 1%. The stock that I'm watching out for is Avenue Supermarts, up around 4% right now as we speak, 150 rupees added on that, as the company's announced the opening of a store in Agra. Now, why this is important is because it's the first store that the company has opened in UPX of NCR. They have been present in Ghaziabad earlier, but now, they've entered middle of UP. It's the first new state that they've entered in Punjab. Since Punjab in 2017, so that's a positive. And add to that, the cluster-based strategy of DMart that there is, it tells you that once they open a store in a particular geography, you can expect rapid expansion of stores out there, and that is one of the big triggers, increased pace of store expansion. The other thing we'll have to watch out for is how their product mix pans out, because FMCG margins are shrinking. Can they see higher proportion of sales coming in from general merchandise? And for the metros, their core markets, can we see some expansion in DMart Ready itself and, see some growth out there is what the street is pinning hopes on. The stock has been an underperformer, extremely expensive, but now this new foray has given it a new lease of life. The stock up 4%. With that, we'll take a short break, come back, focus on the markets. Yes Securities' Pritesh Mehta joins in with some trading strategies. Welcome back. You're watching us here on Halftime Report. The Nifty down almost 53 points, though the Nifty Bank is outperforming today, mildly in the green right now. The Nifty is holding around the 24,800 mark, and that's exactly how the day has been. Yesterday it was the IT index that outperformed. The Nifty Bank was an underperformer. Today it's flipped. We have the Nifty, which is down 0.25%, led entirely lower by the IT index itself. If you look forward, the market has seen the advanced decline ratio move much in favor of declines, but now it is fairly volatile. It is not a clear trend that we're seeing. Where does the second half go? It depends on where these indices go from important levels. So we have the 20-day moving average on both the Nifty as well as the Nifty Bank. The Nifty 20-day moving average is about 50 points higher from where we are right now. For the Nifty Bank, it's conquered, or it's just under the 20-day moving average, 55,788. Where's the Nifty Bank? 55,751. So both these indices mildly below the 20-day moving average. Second half, if they recover from here, is something that the street will be eyeing. Why do I say that? Because if you look at the options action as well, the 25,000 call, 24,900 call has seen writing 50 rupees premium, telling you 24,950 to 25,000. There would be some supply. 25,000 call writers equally active for a premium of 25 rupees. So if the market sustains about 25,000 for a bit, these call writers will have to actually cover their positions. At the lower level, though, there is support around 24,700, which is closer to today's low as well. Why do I say that? Because 24,800 put writers fairly active, premium of 75 rupees. And you also have some writing that we've seen at the 24,900 put. Individual stocks, a lot of them on our radar. Avenue Supermarts, we just spoke about that. A lot of long positions added are there. Uno, Minda and Keynes Tech are the other two stocks which are mildly in the green today with long positions on the F&O side. In terms of stocks that may enter F&O ban, Biocon is one, which is down about 2.5%, has crossed the 95% mark for threshold in terms of market-wide position limit, goes into F&O ban today. And Irida is the other one, which is in F&O ban, may exit F&O ban today. So those are a bunch of stocks and the index as far as F&O is concerned.
Okay, all right, Mangnam. Thanks very much for that. Pritesh Mehta now joins in to tell us what he's tracking on the technicals. He's from Yes Securities. Pritesh, hi, welcome to the show. If you could just start by giving us a sense in terms of the markets. We have the Bank Nifty, which has recovered a tad bit, but nonetheless, the Nifty and the Midcap still under pressure.
So see, when we look at the current structure of our index, we have been grappling with several external issues, whether it's the rise in crude oil prices, whether it is, the geopolitical tensions. But our market is stuck in a band, between 25 and 25K. Similarly, Bank Nifty is yet to show a bit of downside. We have seen a series of lower tops coming in, but we are yet to see a decline coming in. So I think the way the structure is shaping up, we are going to see a bit of consolidation. Nothing wrong with that. We have our own proprietary Nifty top 10 index, which tracks the structure of the highly weighted top 10 stocks within the index basket, and it is moving sideways. It tells us that market is not in a hurry. It's not going to do anything, would provide big moves either side. We're going to consolidate. This is going to be the same case with Bank Nifty as well.
All right, that's the case for Bank Nifty as well. Individual stocks, what are you backing? Because there are a lot of stocks, non-F&O stocks as well, doing extremely well. What do you have on your list today, Pritesh?
So yeah, we have a couple of buy recommendations. The first one is TVS Motors. So TVS Motors, it is outperforming the Nifty Auto Index. Now, Nifty Auto has not done, incredible in this year so far, but this particular stock is showing signs of outperformance. On the ratio chart, on the standalone chart, we can see a double top buy after bullish anchor column. So target is around 3150 levels, and stop loss would be 2700 levels. And the second stock is the one which is focused in today's session is DMart. Now DMart is showing a strong basing structure coming out of that point after the zone, and we are witnessing follow through moves. So buy for a target of 4600, and the stop loss would be 4050.
All right, technically as well, DMart looks like it is above the 20 and the 200-day moving average with fairly strong volumes backing that counter. Pritesh, thank you for joining in. We'll take a short break on that note. On the other side, we have Manisha Gupta joining in with all things commodities.
पढ़ें।
Welcome back, and joining us on the show now is Dr. Claudio Kovrig. He's founder and lead analyst at Kovrig Analytics. Claudio, hi, good to have you. I know you're attending a sugar conference in Bangkok right now, and yes, sugar is a topic of discussion also because we're looking at prices in the global markets trading at a 4-year lows right now with the kind of sell-off that we've seen in the New York session yesterday. There is good crop with major producers right now, but is that impact now baked into the prices?
Yes, thank you for inviting me. It's always a pleasure to be here with you. The thing is, in the sugar market, we have some bearish fundamentals on spot. Brazil is producing a lot, and there is not too much demand. So the demand is kind of lagging. Either people are expecting lower prices, or maybe they already have some stocks, and then these stocks are not getting consumed. Now, the problem is the actual conflict that we have in the Middle East, and then this is very supportive for crude oil. That's why we've seen some spike in price on Monday, because we have a lot of participants in the sugar market, our producers, consumers, refineries, but also the funds. And then the funds were about 95K lots short, and they still have a lot of room to go to 200K lots short. So that's why now they have to see with their risk management departments if they are allowed to go so short in such a turmoil. We've seen the reaction in the crude oil prices. So whenever you have this kind of conflict, generally you have to cover these shorts. But many people in the market, they think that sugar still has to trade its own fundamentals. And then what are these fundamentals saying? Are saying that, yes, we had a floor, which was led by the Chinese import arbitrage, and Chinese import arbitrage was open at around 16.5 cents without considering any cash premium in the domestic market. But then now the next floor is the ethanol parity in Brazil. And then the ethanol parity in Brazil is much lower. It's about at 15 cents for some meals, for other meals is higher. And what means this for sugar? It means that if we go so low, this means that the producers in Brazil will reconsider their position on producing sugar or doing more ethanol. So unless we see a reaction from Brazil, because Brazil has now 65 to 70% of the world's trade on raw sugar, right? So they are big exporters. So they need to do something to see now a support. So, and this support now, unfortunately for them, is at 15 cents because Petrobras also lowered gasoline prices. They precipitated a bit, I would say, of lowering gasoline prices was right before the conflict ignited in the Middle East.
Oh, well, absolutely. Claudio, also, I'm looking at various numbers right now, and while USDA does seem to feel that we're looking at a big surplus this time around, the international sugar organizations and numbers are quite different. How do you read both of these very, very contradicting numbers?
Well, many institutions, they have different numbers, right? We are analyzing, and we are going on our forecasts. We see a surplus of sugar next season, but this season is quite imbalanced. Why? This season we had plenty of, let's say, disappointments, especially in India. We had lower production there. We had low production in Pakistan. We had low production in many countries. Now, the thing is that, the funds would look on ahead. So what we will have in the next season, right? And then the next season for us is in a surplus of about 4.2 million tons. This is because we have the ongoing crop in Brazil, which looks good. Then we will have a recovery in the Indian production. We will have a recovery in the Thai production. But the thing is how consumption is reacting, because everybody discusses on production, but consumption was lagging. Consumption was kind of stressed. You see, in India, for example, if you compare the numbers from last year with the numbers to this year, we've lost 1 million tons of sugar consumption. Okay, it was not really a loss because practically the alternative exports have been replaced. Domestic pipeline has been reduced, so the drop is not so much. But okay, in the stats, you have to work with what you have, and then this consumption that was lagging is also pressuring the market now. So we see a surplus now. A 4.2 million tons surplus estimated for next season is not a very big surplus, right? We had seasons with surpluses of about 10 million tons or 11 million tons. But the small problem here is that, okay, where is this surplus going to be? And India is a country with surplus next season. What they're going to do with these stocks? They easily can carry stocks of 8 million tons, 10 million tons from one year to another. So this sugar, even if it appears in the stats, it is locked in. You cannot export 2026 sugar from India. Sure. It's a ban on export. Another thing is that Indian sugar to export is expensive. It's expensive. It's about 20 cents for raw sugar and above 21 cents for white sugar, right? So then the market has to come up to the Indian parity level if indeed needs this sugar. But we are very far away from this period.
Kind of numbers.
Next year, probably in Q1. For the moment, we have this pressure.
All right, Manisha, thanks very much for taking us through that conversation with regards to sugar prices. For the markets, the Midcap index is under pressure. It is down around 0.4%, but we need to take a break. On the other side, we'll bring you an exclusive conversation with Cognizant's top brass on their $1 billion AI bet. Stay tuned.
Welcome back. Metals are selling off as well right now as we speak. We do have GSW Steel, Tata Steel, both of them at the low point of trade. The Nifty Metal Index actually is lower as well. Now there is something with regards to FASTag. If you're traveling around the country, annual FASTag based pass designed exclusively for non-commercial private vehicles, which is worth 3,000 rupees one for the full year, effective from August 15th, 2025. So this Independence Day, you can have a FASTag based pass, which is valid for 1 year from the date of activation or up to 200 trips. So it will be very interesting for all passengers and drivers of passenger cars itself. But let's get you some exclusive offerings. CNBC-TV18 has gone inside Cognizant's new artificial intelligence lab in San Francisco. Cognizant has made a $1 billion bet on AI. And to talk more on that, Shireen Bahan caught up with Surya Gumadi, who's the President Americas, and Babak Hojat, who is the CTO AI at Cognizant.
This big $1 billion bet that Cognizant has decided to make on AI, and I think it brings to bear the larger question facing Indian IT services companies today. In an AI world, how relevant will Indian IT services companies be?
I think, they're going to be very relevant. First of all, the $1 billion bet that we made was in 3 dimensions.
Yeah.
Getting a talent ready for the AI era, getting the infrastructure ready, which is the AI labs, and then, building solutions, custom solutions for our clients. The Indian IT services companies are right in the middle of building those solutions, whether it is getting the data ready for the AI era or building the AI relevant solutions. And the $1 billion bet we have made is paying off really well for us. And our clients are loving it, our markets are loving it. And, we like it, and we are doubling down on that.
You are doubling down on that. So the question that everyone is asking at this point in time, is this going to be an existential crisis for the Indian IT services industry? You don't believe that to be the case?
No, I don't believe that at all, because it's like any other technology revolutions that we have seen in the past. In the initial phases, it appears that it's going to take away a lot of jobs, or it's going to be a significant threat to the coders and things like that. But
or a disruption to the business model as it's existed.
Correct. And the initial thinking or the initial fear was that, but as we get deeper into the agentic era, so I think, a lot of human intervention is needed to manage the agents, to build agents and orchestrate the agents. The jobs might morph into something different, but I don't think there'll be an existential crisis or existential threat.
What are some of the big use cases today that you're seeing that enterprise adoption is kind of, taking up in a big way?
It cuts across the board. And I think that transition is happening from, these very obvious low-risk use cases to, something that actually is in the mainstream of the process of a company. And what's interesting is that we talk about ROI. The moment you talk about an agent, you're assuming some level of autonomy that the agent takes. Autonomy means lower cost and perhaps more efficiency. So you can get that across the board. However, when you actually agentify a system, you're also looking for increased quality, improved quality. Quality is a function of the domain in which you're actually implementing something. So it takes that leap of faith to go, okay, where else do I apply this, and how do I measure that ROI to see that it goes beyond just the cost aspect.
What does this mean in terms of spends now, Surya? When we talk about large deals that are happening, whether it's the $100 million kind of deals or even larger deals, I mean, is there a way to understand how much of that is being driven by AI spends at this point in time? Or is it still the largely bread and butter business that's driving spends?
No, actually, the spend is pivoting towards AI. I think there was a recent research by PwC, I guess, where 88% of the senior executives polled said that they're going to increase their budgets towards AI-centric solutions. So I think, we clearly see that there is a spending pivot in that direction. And, when it comes to large deals, Shireen, it's very hard to draw a line as to where AI stops or where AI starts. So the AI is integral part of the large deals. The way we are approaching and the way the clients are thinking as well is to leverage AI to unlock the trapped value in the existing business and use that unlocked value to fund transformation, again powered by AI. In other words, leverage AI to address the cost equation and use the gains from there to accelerate the growth equation, again powered by AI. The couple of large mega deals that we mentioned recently, we approached it with exact same construct. We went to clients articulating how much of value can be unlocked from their existing setup, and we enabled them to fund that to drive growth or transformation powered by AI. So that's how clients are approaching.
So, do you see more of these large deals or mega deals now on the cusp, on the anvil, even though it is an uncertain time, and we've seen that drop in this quarter? But do you believe as the uncertainty ebbs, we're likely to see more of the large and mega deal conversion?
This framework will gain widespread acceptance is what we believe. And that translates to a large deal. We have proven the point in 2 cases in the recent past, and we have good pipeline with the same construct, where we are approaching clients with, saying that we can we can unlock the trapped value, and then we can help you fund transformation. By construct itself would become a large deal, and that would be beneficial to clients, and they don't have to look for more additional capex to, drive transformation. And we believe that this is going to prompt few more large deals in the market.
All right, and you can catch some of the biggest voices from Silicon Valley all through this week in our special offering, Voices from the Valley, every evening at 6:30 p.m. Welcome back. Well, let's focus on the insurance space now. Sources tell CNBC-TV18 that after IRDAI, our finance ministry is also likely to have sought hike in premium and motor third-party premiums. Yash joins in with more details on this.
Well, this has been the single largest demand by the general insurance industry, which is to be given a hike in motor third-party premium. Do remember that motor insurance, under that, motor third-party premium is what is regulated, and for any hike or any revision, the Road Transport Ministry has to have an approval in the first place itself. We had reported a couple of weeks ago that the insurance regulator had sought an average of 18% hike in the motor third-party premium, under which in one of the segments, in fact, the hike which was sought was about 22 to 25%. What we've been given to understand is that the Finance Ministry has also echoed the same sentiments, seeking a hike to the tune of similar to what the insurance regulator had asked for. That is an average of 18% in the motor third-party premium category from the Road Transport Ministry. Also, what we've been given to understand is that the Road Transport Ministry is actively considering providing this hike to the industry. Do remember that this hike hasn't come through in almost about 4 years, so it is very crucial for the industry and the motor portfolio of general insurance companies as well, and the Road Transport Ministry actively considering providing this particular hike. Any decision from the Road Transport Ministry, according to our sources, could come in the next 1 to 2 weeks as far as the motor third-party premium itself is concerned. How big of a relief could this be if it comes through? Well, about an average of 18% hike or a 20% hike in motor third-party premium could bring a 400 to 500 basis points improvement in the combined ratios for the general insurance companies.
Okay, all right, Yash, thanks very much for that. So that's an important update coming in on the insurance space. Well, just a quick update on the markets as well. The mid-caps have now accelerated in terms of losses. So now at the low point of the day, down around 0.6%. The advanced decline ratio has worsened. So we have almost, we have around 1,500 stocks advancing to around 2,400 stocks declining. Well, on that note, we need to wrap up on Halftime Report. Business Lunch will take all the action ahead.
Midcaps buckle under selling pressure even as large caps trade mostly steady as the Israel-Iran conflict heats up for the 6th day. Auto and consumer discretionary gains while metals and utilities sulk. Vedanta sells 1.5% of its stake in Hindustan Zinc for around 3,000 crore rupees via block deals. The transaction comes soon after Hindustan Zinc announced a capex plan for a zinc complex to be funded 50-50 via equity and debt. BSE CEO Sundaraman Ramamurthy tells CNBC-TV18 that Thursday is not a bad choice for the FNO expiry, citing market share gains when the expiry was on Friday. He expects to expand the broker base from 500 to 700 and foreign participants base to 500 in 5 years. Crude prices surged 4.5% overnight on Trump's call for Iran's surrender and fears of shipments via the Strait of Hormuz being affected, but Israel not targeting Iran's oil infra and record OPEC Plus and US output have kept prices in check. The Indian government is looking to source rare earth magnets from Australia and is planning to offer incentives beyond PLI to boost sourcing ties with Argentina, Brazil and Chile too will be strengthened. Good afternoon, you're with us here on Business Lunch at the midpoint of the midweek trading session and into the second half now, and the index fairly okay as of now, 75 points lower, not much change from where we left off an hour ago. But it is the mid-caps that are seeing some bit of selling pressure and a lot of selling pressure for that matter. 300 points down on the mid-cap index, and that has corrected very significantly from the highs of the day, almost a 600-point fall from the day's high on the mid-cap index. And the Nifty Bank too being a little choppy as we speak, fluctuating between gains and losses. So around a 45-point uptick on the Nifty Bank, and that is protecting the Nifty from further downside. Of course, there are multiple individual stock movers on the broader markets, and Hindustan Zinc, of course, among the top losers on the Nifty 500 today, 6% lower on that stock. And this is after Vedanta confirming that they were indeed the sellers in the block deal that took place earlier in the day. Of course, we'll keep an eye out on Vedanta as well at the lowest point of the day. Remember, the board meeting is scheduled for today to announce its first interim dividend for FY26. So keep that on your radar. And lastly, just keep an eye out on IKS Health. That stock too is down 8% after, of course, is the top loser on the Nifty 500 in today's trading session. But the big story, the big global story over the last few days has been the missile war between Iran and Israel, which continues for the 6th straight day. Sirens have been sounded across Israel and missiles were seen flying overnight as Israeli military said that the missiles were launched from Iran. The Israeli military has also said that it conducted strikes on 12 missile launch sites and storage facilities in Tehran. Meanwhile, the diplomatic war of words between Iran and the US continued, with US President Donald Trump warning that Iran has to accept an unconditional surrender, adding that the supreme leader could also be killed in the future since he is, quote-unquote, an easy target. Now, hitting back at Israel, the supreme leader of Iran said that Tehran will show no mercy to Israel. Now, amidst the conflict, the son of the last Shah of Iran said that it is time for Iranians to rise up against the regime, even as the supreme leader has reportedly delegated some of his powers to the Revolutionary Guards. At least 224 people have been killed since Israel began bombing Iran last Friday, as per the Iranian state media, while the Iranian retaliatory strikes have killed at least 24 people in Israel. Meanwhile, UK's Labour Party MP Emily Thornberry talks about how Donald Trump's unpredictability in the Iran-Israel tensions is deeply concerning and unstabilizing globally. Listen.
I think it's quite difficult to work out what Donald Trump is thinking quite often, because I think that he changes his mind as well. So I mean, if you just look at all the pronouncements that he's made since the beginning of this war, he said everything. I mean, he said, you know, that this is that he approves, that he doesn't approve, that there should be peace. He talks with Putin that both sides should back off. He's now saying that perhaps he'll join. You know, I mean, he fluctuates so much that this is, I mean, perhaps it's the art of the deal, but I've yet to see any product, and that's concerning. I think that, it's hugely destabilizing, not just for the Iranians, but for the rest of the world who watch on aghast and not knowing what is going to happen next. We are used to there being some predictability when it comes to the leadership of the world, and to have an American president who's so profoundly unpredictable at a time like this is profoundly worrying.
Now, earlier today, we also spoke to Marco Papik, who is the chief strategist at BCA Research, to get his views on where crude prices are headed on the back of these ongoing tensions in West Asia.
In the near term, I can definitely see oil prices going to 85, maybe even 90. But here's the fact. It doesn't really matter what Israel does. It doesn't matter what the US does. For investors, the only country that we should be focused on is Iran. Because it's very simple. Iran is either going to try to take oil barrels off the global market by interjecting the flow of oil through the Straits of Hormuz. It's either going to try to intervene in the shipment and the production of energy, or it's not. And if it does start to impact the flow of oil out of the Straits of Hormuz and out of the Middle East to the rest of the world, it's going to invite a pretty significant retaliation by the US against it.
Oil prices, Brent around $76 a barrel, currently expecting a move towards 85 to 90 is what Marco Papik said in this conversation. Now, as geopolitical concerns mount, Prime Minister Narendra Modi held a phone conversation with US President Donald Trump and discussed multiple issues, including India's stance against terrorism. Now, this comes ahead of Pakistani Army Chief Asim Munir's meeting with Donald Trump scheduled for later today. Parikshit is joining in to tell us more. Parikshit, what were some of the key takeaways of that conversation?
A very important development between India and the United States. Prime Minister Modi had a 35-minute phone conversation with US President Trump. This was the first conversation between Modi and Trump after Operation Sindoor. The phone call was initiated by the White House after Trump had to cut short his G7 visit due to escalating tensions between Iran and Israel. Prime Minister Modi and Donald Trump were supposed to meet in person, and because that could not happen, the White House initiated a phone call. According to Foreign Secretary Vikram Misri, Trump expressed condolences for the loss of lives in Pahalgam attack and also vowed to support India against terror. As per Misri, Prime Minister said that India had only targeted Pakistani terror camps in the intervening night of 6th and 7th of May as part of Operation Sindoor to retaliate against Pakistan for the Pahalgam attack. Narendra Modi said India's actions were measured, precise and non-escalatory. The Prime Minister also clarified and reiterated that no trade-related topics were discussed in connection with Operation Sindoor between India and the United States. Prime Minister also said that India never has and never will accept third-party mediation. During the phone call, Prime Minister made it clear that any further acts of terrorism against India will be treated as an act of war. President Trump also invited Narendra Modi to visit US on his way back from Canada, but the Prime Minister declined the invitation due to pre-existing commitments. Donald Trump has also accepted India's invite for the Quad Summit in Delhi later this year. What India would also be closely watching out for is the meeting between Pakistani Army Chief General Munir and Trump at the White House. President Trump will be meeting Pakistani Army Chief over lunch. Now, this comes after White House denied inviting Munir to the US Army's 250th anniversary celebrations on the 14th of June. Munir is also expected to meet US Secretary of State Marco Rubio and Defense Secretary Pete Hegseth.
Parikshit, thanks a lot for that update. Now, Prime Minister Modi also met his Canadian counterpart, Mark Carney, on the sidelines of the G7 summit in Canada. The Prime Minister praised Carney for hosting the G7 summit and said that India is looking forward to working closely with Canada to improve the ties between the two countries. Now, the two leaders also agreed to designate new high commissioners for both the countries to help resume regular services for citizens and businesses. Meanwhile, the G7 leaders failed to reach major agreements on the ongoing Russia-Ukraine war and the West Asia conflict. The leaders, however, agreed to jointly attempt to combat non-market policies that could jeopardize global access to critical minerals. Now, a senior Canadian official also said that the US opposed a joint statement on Ukraine amidst its efforts to promote its negotiations with Russia. We take a short break, and in just a few minutes from now, more news and updates continue on the other side. But the flash on your screen, Vedanta interim dividend of 7 rupees a share. We'll get back to that in just a bit. Stay tuned. Welcome back. Now, sources are saying that Australia is being considered as a possible alternative to source rare earth magnets. Abhimanyu is here with more details on this. Abhimanyu.
The Indian government is exploring several ways and means to ensure no shortage of rare earth magnets which are used across industries and are currently facing supply chain concerns. Government sources have indicated that Australia is being considered as a possible alternative to source rare earth magnets. Additionally, the government is prioritizing speedier output from the National Critical Minerals Mission and for recycling via a circular economy. Apart from that, non-PLI measures to support the industry may also be considered, and tailings may be used to boost sourcing. The government for now is focusing on raising cooperation in the mining sector with several countries in South America, which include Argentina, Brazil and Chile, and the steps are going to possibly help the overall sourcing of rare earth magnets. Now all Indian mines have to mandatorily conduct testing for critical minerals from their dumps from June 2025, that is from this month itself, and this government order which is going to come into effect was passed way back in February. So of course that is also possibly going to help the overall sourcing of rare earth magnets. Also, increased sourcing of lithium from Chile is vital for the government's plans to convert 50% of vehicles into electric vehicles by 2030. So a clear-cut plan has already been laid out, but it remains to be seen how early it is going to come into effect, and more importantly, how quickly the government is going to move as far as hedging India's risks is concerned.
And just before we move on, pull up Vedanta, the company. Just before we went into the break, we announced, the company announced that it has declared its first interim dividend of 7 rupees a share. The stock recovering from the lows of the day, and this will result in a total outgo of around 2,737 crore for the company. And the 24th of June has been fixed as the record date for this dividend. So first interim payout for Vedanta. Now moving on, SEBI has approved NSE's request for weekly futures and options contracts to expire on Tuesday. And BSE's proposal for Thursday's expiry has also been cleared. Now, to understand what this means, my colleague Prashant spoke to Sundaraman Ramamurthy, the MD and CEO of BSE. Here are some excerpts from that conversation.
Since NSE requested for Tuesday to the regulator, in the overall interest of the market, BSE decided to go with Thursday. Thursday is a good day, so we have gone with that. BSE gained market share when its expiry day was Friday, which is not a very ideal day. What we should recall is, at that point of time, every day there was an expiry day. BSE didn't have an option but to go for Friday, and BSE gained all its initial market share, only with Friday as an expiry day. And if you look at the international scenario, B is US, B is Eurex, be it Korea, Taiwan, Kospi basically I'm talking about, Japan, many of them have their expiries on Thursdays or Fridays. So if you're thinking of relative value trading, Thursday becomes an ideal day. See, we have around 525 brokers now. We want to increase it to 600 to 700. Our concentration is on foreign participants and brokers and racks and our technological capabilities. On brokers, I told you the numbers. On foreign participants, we have around 290 to 300 foreign participants today participating with us. We want to increase it to at least 500 over a period of time. So timeline put is end of this financial year, we should have 200 racks.
Now, earlier, we also spoke to Sriram Krishnan of the NSE on the expiry day change. Listen to what he had to say.
This is a huge positive for NSE. And I think that's what the market ecosystem wanted to see. And we've received feedback in the past.
Now, and what is likely to be a significant development for commuters across the country, the Roads and Transport Minister Nitin Gadkari has announced on X that the ministry will be introducing a FASTag-based annual pass priced at 3,000 rupees to facilitate hassle-free travel on national highways. Now, effective from the 15th of August this year, the pass will be valid for up to 1 year or 200 trips, whichever comes first. Now, the pass will be available for non-commercial private vehicles such as cars, jeeps and vans. Shifting focus then, the SEBI is also set to hold its first board meeting of FY26 today, with discussions likely to focus on the ease of doing business, regulatory transparency and transformative reforms. Now, some other global cues to watch out for. Of course, the big trigger is the Fed rate decision, which is going to be announced later tonight. And the central bank is expected to stand pat and not cut interest rates until September. Now, CNBC's Steve Leisman brings us the highlights of the Fed survey and the key expectations.
Despite improvement in the economic outlook, respondents to the Fed survey continue to forecast weaker growth and higher inflation than they did at the beginning of the year, and still elevated tariff uncertainty. 100% say the Fed will keep rates unchanged at this meeting. The recession probability, though, did drop by 3 points to 38%. It had been as high as 53%, but now it's down quite a bit, but still elevated. 3.9%, that's the year-end Fed funds rate, so still banking on 2 rate cuts this year. But they've kind of X'd out one for next year at 3.55, only 1 rate cut built in, and the Fed will remain above that long-run neutral rate of 3.3%, which is the estimate of respondents here. GDP, 1.13%, that's up. That's a good thing from 0.8, but it compares with the forecast we had from January, which was 2.4%. 2026, we get back to at or above trend at 2.2%. That's 20 basis points higher than the May forecast. Doug Gordon, senior portfolio manager with Russell Investments, writes in saying, quote, recent geopolitical events in the Middle East add uncertainty into an already uncertain environment on trade, tax policy, and with potentially weakening hard macroeconomic data pending. 2025 forecast for inflation, down a bit, down a quarter point, but still elevated at 3%. 2026 is when you get back to around where the Fed would be comfortable on the CPI at 260 in May. The unemployment rate also down a bit, 4.53, 4.5%, call it. That's down a couple tenths from where it was in the prior forecast. And unemployment in 2026, 4.47%. Mark Vittner, he's upbeat. He's the chief economist at Piedmont Crescent Capital. He says the economy has remained resilient, not terrified. There's no shortage of reasons to worry, but the U.S. economy keeps proving its doubters wrong. On a separate note, more volatility could be ahead, with most expecting an early announcement of Fed Chair Powell's replacement from President Trump. 64% say yes, a replacement for Powell will be named before the end of the year. 21% say no, and 14% don't know. Underlying many of these forecasts is the expectation that tariff impacts have yet to really hit the economy, along with disagreement over how much impact the big tax bill in Congress will have on growth. Both major swing factors in the growth, employment, and inflation outlooks for the year, of course, along with what the Fed ends up doing.
All eyes on Jerome Powell and company later tonight. Take a short break. More news and updates continue on the other side.
investing.
Welcome back. Now, Mount Lutobi Laki-Laki in Indonesia erupted on Tuesday, spewing a towering ash cloud 11 kilometers high, the country's volcanology agency said. Now, the agency also said that it had raised the alert level of the volcanoes to the most dangerous warning of potential lava flows if it heavily rains. Now, several flights to the Indonesian resort island of Bali were cancelled or delayed. Now, Lutobi Laki-Laki's last eruption was in May, when authorities also raised the level to the most severe. With that, we call time on this edition of Business Lunch. The mid-caps remain the center point, so we take the action forward on mid-cap radar from the other side. From me and the team that put this show together, thank you so much for watching.
Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Vamakshi Doria and with me is Hormaz Patakya. Hormaz, good afternoon to you. It's day 3 of the week and day 2 of continued selling pressure as far as the markets are concerned.
Also on the mid-caps, Vamakshi, good afternoon to you as well. And it is a slight recovery actually from the lows as well for the mid-cap index. The Nifty Bank too is starting to claw back some of those losses. But we'll take you through the next half hour focusing on the broader markets. But here are the top headlines at 1:30 this afternoon. The markets are trading near the lowest point of the day as the Israel-Iran conflict heats up for the 6th day in a row. The Nifty now trades around about the 24,800 mark. The mid-caps are relatively underperforming. The Nifty Bank is choppy but is trying to hold on to those gains.
BSE CEO Sundaram Ramamurthy tells CNBC-TV18 Thursday is not a bad choice for F&O expiry, citing market share gains when expiry was on Friday. He expects to expand the broker base from 500 currently to 700 and foreign participants base to 500 in 5 years.
Zydus Wellness is trading higher after Parag Parikh Mutual Fund picked up 7.5% stake in the company through yesterday's block deal.
Well, Vedanta sells 1.6% of its stake in Hindustan Zinc for around 3,000 crores via block deals. The transaction comes soon after Hindustan Zinc announces a capex plan for a zinc complex to be funded 50-50 via equity and debt.
Voltas is indicating a subdued summer as the management tells analysts that the room AC volumes could decline 20 to 25% year on year across the industry and for the company in April and May.
Well, the Nifty is at 24,800 thereabouts. It is trading with a cut of 0.2%. It has seen a good recovery initially in trade, but for now, this index is down and out. The Bank Nifty, though, is doing quite well, up nearly 0.1%. As far as the advanced decline ratio is concerned, that will also come up for you on the screens. It has been crisscrossing since morning, and for now, it's the declines that are actually leading the pack. We have almost 1,649 stocks declining for 951 stocks that are advancing. As far as sectoral indices are concerned, we only have 2 indices in the green. I mentioned Nifty Bank. Nifty Auto is the other one with gains coming across big names like Maruti and Eicher Motors. On the flip side, we do have Nifty Media under pressure for now. Nifty IT is one more index that is seeing a fair bit of pressure. But let's also go across to Hormaz, who now moved across to the wall. He will take us through the mid-caps that are moving around in trade. Good afternoon, Hormaz.
It's been a week of contrast, right? Around the same time yesterday, that gap between the advances and the declines was widening, as was the case yesterday. On Monday, that gap was converging. So contrasting trends that have emerged. The mid-cap index attempting a recovery from the lows of the day. But we'll start off with the losers in the broader market since the ratio is skewed towards the declines. And IKS Health is one such loser at the lowest point of the day, 8% lower here. MMTC, PB Fintech, Concord Biotech, all of them trading at the lowest point of the day, losses between 3 and 4%. Some of the newsmakers that have emerged in today's trading session, well, Avenue Supermarts, of course, on the back of a positive brokerage note at the launch of a new store in UP, 3.5% higher there. Hindustan Zinc, after the block deal, is looking to recover from the lows. Vedanta has recovered from the lows of the day after it announced its first interim dividend. And Vari Energies, though, continuing to face pressure because of the big beautiful bill in the US. Some of the small mid-sized private financials are doing well in today's session, even though the Nifty Bank is a little choppy. RBL Bank is at the highest point of the day, 3.5% higher there. Bandhan Bank is up 3.5% as well, and AU Small Finance Bank too trading with gains of around 3% in today's session. Some stocks that are doing well on the volumes front, and they will come up on your screen. You take a look at Escorts Kubota, of course, a monsoon play here. Amber Enterprises doing well for itself in contrast to some of the other room AC players. And Minda Corp too doing well with strong volumes, 2.5% higher here as well. And some of the other underperformers in the mid-cap space, Happiest Minds, we just heard from the management a few hours earlier, 3.5% lower, giving up some of yesterday's gains. CRISIL has had a very, very choppy last 1 week or so, and IGI, after a negative brokerage note yesterday, is extending its losses in today's trading session as well, Vamakshi.
Well, thank you so much for that, Hormas. This is one stock that I'd like to highlight is Orient Cement. For now, the stock is living under significant pressure, down almost 18% in the trading session today, trading at 250. But moving on then, it's a good time to welcome Jay Thakkar from ICICI Securities for a technical check on the market. Good afternoon to you, Jay. It's the second consecutive day where we're seeing selling pressure at highs. So what is your take on the Nifty? The Nifty Bank, though, is doing quite well.
Well, I would say that Nifty has been within this range. It's just that, during the monetary policies when we saw both Nifty and Bank Nifty, in fact, providing a breakout on the upside, it didn't last much. In fact, a couple of trading sessions, in fact, closed above that upward range or resistance, but then thereafter it has fallen back within that range. So if we just ignore that period, then it's been like near to almost 2 months that Bank Nifty has been trading within this range, and it's been more than 1 month that Nifty has been trading within this range. I mean, since 15th of May is when Nifty made that high of 25,112.13, and now it's back to 24,800 levels. So my stance is that till we are not seeing a meaningful breakout beyond this range, this consolidation might just continue because of the geopolitical tension, as well as tomorrow. I mean, we are going to witness the FOMC outcome, which is going to come today. So what's going to happen? How our markets are going to react tomorrow? So all of that, and then we have FTSE or FTSE rebalancing as well on Friday. So a lot of eventful trading sessions ahead. And within which I think that if at all there is a breakout beyond 25,200 or probably 24,500, then only that becomes a directional trade and becomes an opportunity rather for a trader. Until that happens, I think these indices are likely to trade within this range. It would be tough to take a call which side it breaks out around this kind of volatile scenario or the uncertainty around the world. So I would rather advise that one can, on the derivative side, rather have a non-directional strategy with the wings, or else the directional traders can just stay away from the market till you have a meaningful breakout. But then stock specifically, there are a few breakouts or the activities which are really happening. So among the two-wheeler names, if I have to recommend, then it's TVS Motors. That seems to be trading quite positive. In fact, Nifty Auto today is trading quite positive. It's trading around the levels of 2790 right now. I think it can head towards the levels of 2900 to 2950 in the near term until 2700 levels are held. So TVS Motors is looking positive. In fact, iShares is also looking positive. But then the overall chart structure of TVS Motor is much better than iShares Motors. Hence, I've recommended this. And the second buy recommendation will be from the IT pack, because that is another sector along with the Nifty Auto which is looking positive. And I think within which Persistent is one stock which I think might just continue its upward rally. I mean, it's trading around the levels of 6038 right now on spot. Yeah, it's likely to head towards the levels of 6120, 6150 in the near term. With a stop loss of 59.50, one can go long on Persistent as well. So these are the two long recommendations. On the short side, I think that Sun Pharma seems to have broken its consolidation on the lower side. However, we haven't seen much of additions coming in. But then in the short term, since pharma is in the news on the negative side due to the sanctions or the likely tariff out there, so this sector can be under pressure for some time until and unless there is a clarity out there. So one can remain negative on Sun Pharma.
Jay, thank you so much for sparing time and joining us today with your views on the index and on specific stocks as well. Take a short break. On the other side, we get chatting with Praveen Sahai of Prabhudas Leeladhar to discuss the outlook for the consumer durable sector. Stay tuned.
Welcome back. You're watching Midcap Radar on CNBC-TV18. Moving on then, consumer durable companies are in focus on the back of weak sales and demands for room ACs amid the early monsoon and weak summer as compared to last year. To discuss this and more, we now have Praveen Sahai, who's a research analyst at PL Capital. Good afternoon to you, Praveen. This is Vamakshi joining in. Well, your channel checks have indicated subdued summer. Even Voltas in the recent management meet said that they're expecting 20 to 25% fall in the RAC volume. So what does this translate to in terms of an impact as far as the top line is concerned for the first quarter, and how important is the summer quarter, if you can just quantify that for us for the entire industry?
Yeah, hi. Thank you for having me. So definitely that's our channel check as well as Volta's commentary. There is a quite subdued summer, and especially if I talk on the north, there is a erratic weather. There is no consistency in terms of the heat wave or the temperature side, and that's led to the the degrowth, and especially like of a Voltas given around 20-25% of a degrowth in their RAC segment for April and May, and that's only because they are largely in the north side, and north summer were not as good as of a last year. Also, there is a base effect of a last year. Last year they had done a very strong growth of a 44%. So that is also in the background. So overall industry in our channel check also indicated that as the entire in the country there is a erratic weather, which has led to the lower demand for the RAC, and which has actually impacted the sales volume, secondary sales volume for all the players, and that largely impacted the north player who are major markets here in the north, and especially to the Voltas because of that. What that impact to the full year, because this summer account the majority of the volume, and Q4 and the Q1, and Q1 being in a the slowdown, that's going to impact the entire volume, and I believe there will be difficult to give a positive number for the brands for this financial year. So that is the one take from the very strong degrowth in the system, because the last year also as an industry grew by around 30%, and being a market leader, Voltas grew by around 36-37%. So on that high base as well, this year is expected to be quite muted.
Praveen, good afternoon. Thank you for joining in. Fair to say now that FY26 most likely is going to be a washout year for these companies, because when your strongest period is turning out to be weak, you are now entering a period of seasonal weakness. So what does that do? As you mentioned, you're expecting a muted full year performance, but do you expect almost a double-digit decline in terms of the full year performance as well? Would that be a significant hit?
See, that's I don't think that's a single digit of a degrowth is what we are anticipating, because there is last year we had seen there is an extended summer as well. That has given some kind of a cushion, and prior to that, if you look at, there is a good sales in the third quarter also happened, because the inventory filling start from the third quarter. So these two further the weak quarters can give some kind of a cushion to the industry, even though we are also in the anticipation that from the 1st of January 26, the new B norm is around the corner. For that also the brand need to liquidate their the volume. That is another concern I can say for the industry, for the margin the way forward. So one, the season has not done well, volume were down. If the volume will pick up, definitely they will suffer on the margin as well in the coming quarters. So I think the industry is expected to give a very muted numbers as a whole.
Sure, Praveen, and your channel checks also suggested that so far, in spite of subdued demand, there have been no discounts or no offers. So do you think that probably this trend could reverse? Maybe, do you see further discounts, offers from the companies, and what would be their the impact on margins?
Yeah, so as they had not taken any kind of or given any kind of a discounts or offers so far. But when we are entering to the weak quarters and the third quarter, especially when the inventory filling happened or the liquidation of the old inventory will happen, definitely they need to come up with an offers and the discounts, and that will put a further pressure to their margin. So definitely from here onwards, we are expecting that's the volume we had already seen, the margin pressure around the corner for the companies.
Now, Praveen, since you are mentioning margins, what about the inventory levels? Now, generally, if inventory levels are low, you would view that as a positive because, okay, there is enough demand, that there is not enough inventory. But here, inventory levels are low because there is not enough demand here. The demand is low, and even Blue Star in one of our earlier interactions had mentioned that production has been impacted. They have cut down on production because of the lack of demand. Is that a cause of concern because of the fact that you are now entering this prolonged period Q3, which is generally technically winter months? Do you see this inventory levels remaining low going forward as well?
So you rightly mentioned that there are two things to that. One is inventory level of the channel and inventory level of the brands. So why the production has been curtailed? Because they are carrying on the higher inventory, one. And second, the demand is not there in the market. So dealers are also not keeping a very high inventory at this level right now. So the way forward, when these companies or brands will come for a liquidation, their old inventory, definitely that will be a big problem for them the way forward, because from 1st January 2026, the new BE norm is going to get implemented, and that will further increase around 1,000 rupees cost per unit. So those are again challenging quarters way ahead, I believe, to taking on a price hike because of BE norm change or the muted demand we had already seen in the summer, which will keeping the brand at a higher inventory. So those are the reason, and that's why I'm concerned about the margin for them.
Sure. Thank you so much, Praveen, for joining in with us and giving your take on the current situation in the RAC market. But let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other side. So don't go anywhere. Stay tuned.
Welcome back. Contrasting trends. The Nifty is down 90 points, but the Dow futures are up 90 points. So interesting moves coming in both from the last street and from Wall Street. But moving to real estate now, DLF has sold out its Gurugram project Privana North within a week of the launch. Akash Ori, the joint MD and Chief Business Officer, spoke to CNBC-TV18 on the project's success, the company's future projects, and its FY26 outlook. Listen in.
We've got about over 11,000 crores in sales, and the total units were about 64 odd numbers. So yeah, that's the number that we did. Margins are healthy; they're upwards of the 35%. So margins are healthy for this project. We are the first medium that I will announce that the Mumbai RERA has come. Our next, please look forward to the Mumbai launch now, which we are now putting together. And as we had in our annual guidance also, we had mentioned we're looking at upwards of 20,000 crores in sales. We will continue to make sure that we meet that guidance, surpass it if possible with other launches. But I think right now we've got a very healthy pipeline. We've got the next launch of the Dahlias, which is the super luxury, sometime in December. We've got Mumbai, we've got Goa, our plate is full. Hopefully some more new announcements. But at this point in time, I think we have to plan on a quarterly basis.
Well, that was the management of DLF. But one stock that I'd like to highlight is Electronics Mart India. The stock is at 156. It's seen a very sharp move in today's trading session, up almost 16% now, which is the steepest advance that the company has seen since its listing. The other stock that I like to highlight is MobiKwik. That will come up for you on the screen. The shareholder lock-in has ended. The stock is down almost 8% today, trading at 250 thereabouts. It is also much below its IPO price and has declined almost 65% post-listing highs. But that's all we have on this edition of Midcap Radar. Don't go anywhere, because your stocks when we return.
Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. And markets, a muted day of trade coming in again for the markets today. As of now, the Nifty is trading almost near the day's lowest point as well. 24,770 levels is what we're watching out for. 0.3% of decline coming in for the Nifty. The Sensex is down more than 250 points as well. Both of these are trading at the day's low. Around that mark is what the Sensex and the Nifty is trading at. Even the broader end of the market, that is not doing well today as well. Nifty Midcap, that's down 0.5%. We've seen small cap, that's down 0.3%. So underperformance coming in from the mid side of the market. So Nifty Midcap, that's the underperformance. And advance decline ratio obviously is in the favor of declines versus advances that we're seeing in today's trading session. What's holding on the bright spot today so far is the Nifty Auto. So we've seen these auto names managing to hold on to gains, whether you look at an M&M, Escorts, Bajaj Auto, Maruti, that's managing to hold on to gains. And on the flip side, coming in from the broader end of the markets, Max Healthcare, PB Fintech, Biocon, all these are the stocks that are lagging on the Nifty mid-cap index as well. So keep an eye out on that and where that's going to be headed in the last couple of hours of trading session as well. But this is the show where we solve all your stock-related queries, and to do just that, we have Asta Jain of Hem Securities joining in with us today, as well as Somil Mehta of Mirai Asset Sharekhan. On that note, afternoon Asta as well as Somil, and let's get started with the queries for today. Market is where it was even last week. It's just roaming in that range right now despite this global tension. So let's just get started with the queries for today. First query for today is coming from Hemant Kumar, who's writing to us from Noida. 15 shares of Maruti Suzuki is what they're holding, and this is at a price of 8,171, making a profit on this one, currently at 12,750 rupees. So he is asking if he should add more shares, and what is the long-term view for Maruti Suzuki if they're willing to hold for a long period of time. So Asta, over to you. Maruti Suzuki, on the fundamentals, they want to know that if it is a good bet to add more at these 12,000 levels as well. They're already holding at those 8,000 levels.
Hi, good afternoon to all of you. So I think like a day today when we are seeing a surge in the automobile stock prices, yes, Maruti is a good hold, as well as accumulation should be done in this counter at the lower levels as well. Now, talking about this counter, fundamental seems to be okay, because whatever we are seeing that there is a surge in the export volumes, and that's why we have seen the results in their quarterly numbers as well as financial year 25 numbers. With the ramp up of the production, what we see that company which is facing challenges on the higher input cost, I think production ramp up will help the company in lowering down that. And going ahead, we can see a decent set of numbers, and hence we are positive on this counter. Accumulate this counter at the lower level of around 12,700, 12,650 with a price target of 13,500, as well as hold is also recommended at current prices.
Okay. Hold is also recommended at current prices, and the levels are mentioned by Asta of what you could add at lower levels is the suggestion coming in for Maruti Suzuki. Somil, on the technical front, what's your view coming in? Last 6 months, around a 15-16% uptick is what we've seen coming in for the stock. But from here on, what's the long-term view for the stock? And would you also tell the viewer maybe to wait a bit more before they look to add some more for Maruti Suzuki?
I think for me, in the very short term, it looks like it would be a little range bound, but I have the same target in the medium to long term outlook with 13,500. So definitely you can add more. On the downside, it has been in a broad range between 12,000 and 13,000. I'll be expecting this range to break on the upside. So definitely positive. The supports would be around 12,400 and 12,000 levels. So buy on decline should be the strategy. 12,400 would be the right time to enter this stock if you get that.
12,400 is what you mentioned, right?
Yes.
Okay, so keep an eye on those levels over there. Let's move on to the next stock for today, and that's Hindustan Zinc. Alan is writing to us from Goa. He's holding 50 shares of Hindustan Zinc. Average price is 509 rupees per share today. As of now, the stock is down 6%, and he wants to know the future prospects of the stock. Obviously, do not forget the news flow that came in today as well, where Vedanta has sold around 66.7 million shares. That's approximately 1.6% stake in Hindustan Zinc. Asta, your view coming in for Hindustan Zinc, what should they be doing? They're already making a loss right now, right? does it merit holding the stock or should they get out of it? What are your opinion?
I think it's better to stay invested in this counter with a price target of 550 at the initial levels. Although I'm giving a higher levels, but I think in the medium to long term, these are the targets which we can set for this counter. Talking about this counter, what we have seen is that now the company's focus is on cost control, and I think that will help the company in posting good set of numbers. This is what we have seen. In fact, in their quarterly numbers also, complete focus on that part. So we have seen a decent set of numbers in the quarter gone by, and going ahead also on the basis of the strategies which company is taking, I believe this counter is one of the good counter in the commodity plays, and definitely one can stay invested in this counter for the medium to long term perspective with a price target of 550.
Okay, and your view coming in for Hindustan Zinc Sawmill, and what are your targets that you're keeping an eye out on?
In the short term, we have seen a very sharp correction now and trading below 20, 40, 200 daily exponential moving averages, which is a negative sign in the short term. So definitely stay away in the short term. But in the medium term outlook, if you see the stock has been basing out between 400 and 460 levels, I think it would be a little sideways at this point of time, and then start the upside rally again, resume the uptrend again. The right time to buy probably would be around 440, 430 levels, and buy and declines should be the strategy for a medium to long term, not in the short term. In the short term, it's definitely negative, and it may see a little more correction or sideways correction.
Okay, that's a view coming in there on the technical front for Hindustan Zinc. Next stock for today is Z Entertainment. That's a query on. Vinay Prasad is writing to us from Telangana. He's holding 200 shares of Z, and this is at a price of 289 rupees per share. Now he wants to know whether to add more shares or book his losses. The stock is trading at just 134 rupees per share. Obviously, Asta, there was a board meeting outcome that just came in a couple of days back as well. There was a lot of movement coming in and out for the stock. So what are you watching out for in terms of Z Entertainment? What should they do now?
So company is able to post, in their quarterly numbers, good set of numbers, because what we believe that the operational efficiencies are playing at a good level in this company. In fact, now they are focusing more on the content in the regional languages and good quality content in the regional languages that can also help the company in giving good numbers going ahead. So I believe that this counter has a potential to move more upwards from here. Maybe our initial targets are not at a higher level. We are limiting ourselves for the target of around 160 to 170, and here the cost price is little higher. But I believe one can remain invested in this counter at least till those levels, and can again review his query if those levels got hit.
Okay, keep an eye on those levels over there on the fundamental front. Technically, what is it looking like, Sawmill, for Z? There wasn't any good news coming in so far. Now, obviously, it's not a good news, but when the board meet outcome comes in, promoters saying we'll increase stake, there's some bit of that positiveness we saw coming in yesterday. But today, what's the view?
This stock has been forming low top, low bottom on the monthly charts, on the weekly charts for a very long time, and struggling to go about 200 daily exponential moving average. But what has happened in the last 1 month is that it has started making high tops, high bottom on the daily charts in the very short term, and it has closed about 200 daily exponential moving average, which is a great sign after a very long time. So I'll be positive on this stock. In the medium term outlook, 155, 160 levels would be my target. However, keep a very strict stop loss at 125 on the closing basis, which is a 200 daily exponential moving average. If the stock goes below 125, 124 levels, then I think it is better to exit and stay away for some time.
Okay. That's a view coming there for Z Entertainment. Next query for today coming in from Neha Chatterjee, who's writing to us from Jaipur. She's holding 55 shares of Wipro. Price is 278 rupees per share. She's holding it since November 2024. Right now also, it's just slightly below their buy price. Now, she wants to know whether she should continue to hold this or look to sell. Wipro, IT sector, what's the bet coming in on this one, Asta? Whenever we talk to a lot of people, they're not too positive on the IT pack. What's your view?
So if I talk about particularly this counter, what I think now the company has started focusing on improved performance due to the large deals wins which they have got in their quarterly numbers also when we have seen those numbers. So there were large deal wins. And now the company has started focusing on AI-led solutions also. So now what the company is doing, they are doing certain form of transformations through large deal wins, through improved AI-led solutions, etc. So I think these are the steps which are taken by this company, which can lead the results in the longer time horizon. So right now we are positive on this counter in the IT space. We are liking the other counters, mainly like Persistent System and Tech Mahindra. But for this counter also, we are recommending hold with a price target of 285 to 290.
Okay, keep an eye on those levels over there. And on the technical front, Saumil, what's it looking like? Because when I'm looking at the YTD performance in the IT pack, seems like Wipro is one of those underperformers, right? Versus something like an Infosys, HCL Tech, Persistent. So what should they be doing now?
I think for in the medium term outlook, medium to long term outlook, IT does not look that great. It has been struggling for a little while, and I'll be expecting more downside for Wipro, Infosys, TCS, all of these stocks. But in the short term, there is definitely a little bit of spark, and I'll be expecting a little bit of positive momentum in the very, very short term. Wipro very specifically has been struggling to go about 200 daily exponential moving average, which is at 266. So that is a very crucial resistance. I'll be expecting Wipro very specifically to be very sideways to negative, and I'll be expecting the stock to go down till 245.
Okay, keep an eye out on those levels over there for Wipro. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more of your stock-related queries after the break.
You have stood up and stood by many of India's dreamers.
I became a magnet for entrepreneurs. So there's one man who will hold our hand and take us all the way.
So what is the art of deal making?
So whenever the deal maker wants to become too big, oh, I'm God, okay, you say this and you say that, kind of attitude, not literally, but I've seen that. What percentage of people you think die, Shireen, with regrets in their hearts?
A very large percentage.
So this risk of failure, fear of failure, is the one that makes people die with regrets.
What is holding us back?
Promote and protect the good. Prevent and punish the bad. We prefer to be slow rather than fast. That's how we are a chalta hai country and not a daudta hai country.
The lack of speed would be, if you were to IPO India today, that would be on the risk factor side in the DRHP, right?
I wouldn't IPO.
You wouldn't IPO?
But to IPO, I must have a news story.
You have a special place in your heart for Charlie Munger and Warren Buffett. What have you taken from them that continues to guide and shape how you think today?
Understanding of balance sheet, because balance sheet is accumulation of good and bad.
How do you find India positioned in this mix today?
We have a resilience, we have a stability, we have a wisdom of our own. But हम एक scene दिखाते हैं, फिर we have a long break. Stop that.
Interval थोड़ा लंबा हो गया.
बहुत लंबा हो जाता है.
Welcome back to your stocks on CNBC TV18. Keeping it going with all the stock-related queries. The next query for today is coming in from Subramanian, who's writing to us from Chennai. He's holding 100 shares of BEML, and the price is 4,000 rupees per share. Making some bit of a profit on this one. Wants to know whether to exit now, continue to hold for another 3 months. So more like a short-term query coming in here. But Asta, fundamentally, BEML, what's the view coming in on this one? Q4 revenue, EBITDA, margins, everything seemed in largely above estimates. But order book guidance, that was a bit of a miss that came in. So now, if they're holding it just for a 3-month period, then should they just book out their profits and move on?
I don't think so. I think it's better to stay invested in this counter because we believe more upside is there, maybe 10% from the current level. So my price target is also at around 4,700 to 4,800. Now talking about this counter, yes, what we have seen is the order book, which is around rupees 146 billion, and that is 3.3x of TTM sales. So that holds to be okay from our side. Other things which we are focusing on right now, that in fact the guidance which the management is giving regarding the revenue is the 20% growth. So that is not bad at all. In fact, they are giving the guidance of improvement in the EBITDA margin by 150 bips. So that is seems to be okay. And now the company is saying that they are seeing good traction in the aerospace as a space also. So I think all over what we are seeing, that good demand is coming for this company, and hence we believe that it is a good counter to stay invested in the defense space with an immediate price target of 4,700 to 4,800.
Okay, 4,700 to 4,800 is your price target that you're keeping. And Saumil, what is your view coming in for BEML? Should the viewer continue to hold for a 3-month time period?
Absolutely, I agree. I agree with Asta. The target should be 4,800, probably even higher. Positive on the stock. Every time it takes support at 20 daily moving average, it starts resumes the uptrend. At the moment, hard top, hard bottom formation. Short term, a good buy in the short term as well. You can keep a very strict stop loss at 4,250 and expect a target of around 4,650 in the very short term, and medium term outlook definitely targeting 4,800, even higher.
Okay, 4,800, at least we could expect in the short term, and even higher in the medium term if you're willing to hold that. That's the view there coming in. But let's move on to the next query for today. Kishore Nayak is writing to us from Bangalore. He wants to actually know whether it's a right time to start investing in Interglobe Aviation, and this is for the long term. Asta, your view coming in for Interglobe Aviation. Obviously, in the aviation space, there are only 2 players, Interglobe and SpiceJet right now. So better bet comes in on the Interglobe Aviation side right now. But what's your view? Because SpiceJet also managed to report a good number in Q4 this time.
Right. So I think it's better to deploy the funds at the lower level of around 5,200 or 5,150. That is a better strategy as of now. Now talking about this counter company as really getting good traction in the travel demand. In fact, they are putting up in certain strategies like Indigo Stretch, etc. So I think all these will help the company in the longer term, but in the shorter term, I think some sort of downside we can see going ahead. So I think lower levels, buying at the lower level is a better strategy there, rather than entering at present moment of the time. However, price target can be set at around 5,500 to 5,600 odd levels.
Okay, lower levels is what they can look to buy the stock at. Your view coming in on this one, Saumil, would you also say wait out a bit and maybe then buy the stock?
Absolutely, it's looking a little negative to me. Low top, low bottom formation, trading below 20 and 40 daily moving average. A small consolidation has broken on the downside for Indigo, and I'll be targeting at least 4,950 levels, which is the previous swing low in the short term. So stay away for a positional trade. If you want to short, I think the stop loss on the higher side would be 5,440. That will be a stop loss, and the targets would be around 4,950.
Okay, keep an eye out over there on those levels over there for Interglobe Aviation. Wait out a bit before you actually buy the stock. And obviously, Interglobe Aviation in their con call in Q4 and FY25, they had mentioned that, some bit of a subduedness could be seen and is expected, is what they were expecting Q1 FY26. So maybe just wait out a bit before you buy the stock. That's a view coming in on the fundamental and technical front. Next query for today is Suresh is writing to us from Coimbatore. He's holding 6 shares of MRF. Price is 1,39,000 or approximately at that level is what they've bought it at. And this is for the short term. Wants to know the future prospect of the investment right now. Near term, what should they be watching out for from MRF, Asta?
I think one can stay invested in this counter for the short term as well as for the medium term. Now talking about this counter, what we are seeing that they are launching new SKUs in the motorcycle, etc. And in fact, they are a good EV play also because not from the ICE vehicles point of view, even in the EVs also, the demand is good. We have seen some sort of regrowth in the PET in the quarter gone by, and that is maybe due to the higher input cost. But I think going ahead, the company segment like the export replacement, etc., are working well. So I think in the longer term, it can be a good play to stay invested in. Our stance here is to hold this counter.
Okay, stance is to hold the counter coming in for MRF. Your view, Somil, for MRF as well. It's a short-term query, and right now they're making some bit of a loss here.
We're definitely positive on the stock. It has taken support at 40 daily moving average. I'll be expecting a small consolidation to break on the upside. So targets on the upside in the short term would be 14 or 5,000. So that will be a very, very important target. Anything about that, I think it should take the all-time high very soon.
Okay, that's a view coming in there for MRF. Both our experts are positive right now for MRF. But that was the last query for today. So thank you so much, Asta, as well as Somil, for joining in with us as always. And viewers, thank you so much for sending us your queries. Remember, you can always email us your queries on that email ID that is flashing at the top of your screens right now. And we'll address them, as always, with our experts on Monday, Wednesdays and Fridays. But that's all the time we have here on today's edition of Your Stocks. Thanks for tuning in. Up next, your closing bell to take you through the last hour of trade.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Okay, so it's deja vu. It's a repeat of what we, I think, saw yesterday. Almost exactly similar kind of price action. 100 points lower, steady since the morning. Nothing excitable either on the way up or on the way down. 24,757. Basically, just another 100-point leg lower is what you have. We are coming to you from the CNBC-TV18 Mudra Yojana studios. This is Closing Bell. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, afternoon.
Hi, afternoon, guys. And I guess it's, on Monday, I wasn't here yesterday, but on Monday, the market was still willing to shrug off whatever was happening in West Asia. But I think over the course of yesterday and most of today, I think those headlines are still weighing. There is still some element of caution. And we're seeing that. Plus, there's Fed tonight. I mean, I don't think they'll oblige the US president.
Yeah.
But, never say never.
I think we can see maybe one or two missiles from Trump directed towards Powell. Right?
That's for sure.
How he's not cut and how I'm very disappointed, etc., etc. So I think.
Interesting times. It's got even more difficult though for Powell because now you have crude oil spike as well.
Yeah, so I will say, how can I?
We'll see how that goes. But let's get straight to the action with regard to today.
No, absolutely. So it's 100 points, not very excitable kind of session. And I mean, why don't we need excitement, right? I mean, we've had lots of excitement on the way up. Maybe a little, settled in that sense. Market breadth is once again turned and it was negative, sharply negative in the morning. And then by about 10 in the morning, 10:30 in the morning, it had flipped and there were more gainers than losers. You can see that actually. And then we have kind of, once again, the gap has increased. So 1,800 stocks are lower and about 800 stocks are higher at this point in time. Lots of broader market stuff going on and I think that'll be the action in terms of single stocks, etc. There's only, I mean, if you look at just the large indices, there's only auto index which is up in any way, about 1/3% higher in the auto index. Otherwise, pretty much all sectoral indices are down in the red at this point. Surbi.
Absolutely. And I mean, if I'm looking at the broader market, lots and lots of stocks in focus. Of course, we'll talk about Hindustan Zinc and what they've announced. That stock's down 7%. But where else are we seeing profit taking? Something like PB Fintech down 3.5%. CRISIL. These are names. Subros is under a lot of pressure this afternoon, about 6-7% off there. So fair amount of consolidation going on in the broader market. If you talk about the large cap space, then in terms of weakness or what's driving the Nifty lower this afternoon, a bunch of heavyweights, TCS, Lever, these are the names on the way down, even L&T. Actually, we can maybe pull up the contribution chart. So it's a wide variety of stocks across sectors which are on the way down. There's a bit of consumer for sure. Nestle, for instance, Tata Consumer. These are stocks on the lower side. There's some financials as well out there, like Kotak for that matter. ICICI Bank itself is exerting downside pressure. The counter is IndusInd Bank, which is the Nifty winner, 4% higher. And autos are revved up. There's some very clear buying this afternoon, at least, in autos. So, Maruti, Eicher, M&M, all these stocks are positive, but otherwise, Nigel, for sure, I mean, there's a hint of caution in the market today.
Well, that's right. How do you position yourself there in the final hour of trade? Mitesh Thakkar joins us on the show. Hi, Mitesh. We continue to remain in this 600, 700-point range or thereabouts. Now we're drifting towards the lower end. Normally, when you drift to the lower end, we've seen some kind of, buying that emerges. Do you think risk-reward would favor you, buying at these levels, or would you look to enter lower?
Good afternoon. So I think, yes, my sense is that we should have lower. In fact, the intraday rally did, kind of surprise me today. But broadly, it is a market which is range and we've, been returning or we've been coming down from the upper end of the range, which is around 25,000. And today we got a high of around 24,950. I think we might head towards 24,600 and towards the lower end of the range, which is around 24,500. So they're mild towards 100 points on the lower side. But that's the idea. The index could very likely head towards 24,500 in the next few days.
Okay, Mitesh, what about individual stocks? Afternoon, I mean, what are the specific stock trades that you'd go with this afternoon?
I have a sell on Cipla. I think palm oil was slowly breaking down, and we had opened earlier. So Cipla is just giving a breakdown right now. People stop at 15, look for a target of roughly around 1460 to about 1455. And DMart is on the buy list, Avenue Supermarts. That's conditional buy. The breakout happens about 4225, and the intraday high today is 4225. So just let it get past those levels, then take a 40 point stop loss around 4185 and look for a target of around 4340 to about 4350.
Okay, all right, Mitesh, we'll come back to you with more a little later. But let's just address some of the stocks which are moving. And Avenue Supermarts, DMart is the name. Total store count is at 421. Mangalam is here to tell us why this matters. And I mean, just basically looking at how they've operated when they enter a new geography. In terms of what can happen here now. Mangalam, take it away.
That's true. So one of the quibbles that the street had with DMart is that they're not very fast or pacey at store expansion, and they're very calibrated. And to that extent, there were a lot of geographies in the country where a large part of the population resided, but DMart wasn't really present. In Uttar Pradesh, technically, it's a foray that they've made after Noida and Ghaziabad. But remember, Noida and Ghaziabad are part of NCR. So ex-NCR, if you think of core Uttar Pradesh, this is one of their first forays after, so long of being in business itself. And this is important because, one, Uttar Pradesh is the largest state of the country. We've seen, a fair amount of value retailers see a fair amount of growth in Uttar Pradesh itself. Case in point, we have V-Mart retail, etc. So the first store in Uttar Pradesh ex-NCR is a positive, and DMart typically expands stores in a cluster-based strategy. So once they open a store out there, they've actually managed the back-end sourcing, etc. for nearly 20-25 stores in and around that area itself. So this may be the first of many that may come in Uttar Pradesh, is what the street's reading of this is. And this increased pace of store expansion is one of the triggers for DMart going forward, along with improvement in product mix. Remember that core categories, FMCG, are they're not as margin accretive as general merchandise, which has been declining as a proportion of their sales. And the third thing that we'll be watching out for in the metros that they currently operate in, which are seeing competition from quick commerce, how is DMart Ready growing? So DMart Ready's expansion in the core markets of metros, increasing pace of store expansion in newer geographies, along with improvement in product mix, is something that we'll most definitely keep an eye out on for Avenue Supermarts. The stock, not particularly cheap, but has been underperforming for a very long time.
Mangalam, I remember when Vishal Megamart listed, it's of course different kind of businesses.
Correct.
But when you say product mix, DMart does it store apparel, etc.?
Yes, DMart does store apparel, yes. And they would get a fair amount of their revenue coming in from essentials, FMCG. Apparel was about 15%, if I remember correctly. But over the last few years, in fact, specifically post-pandemic and the advent of a lot of value fashion retailers and online retail, etc., apparel and general merchandise as a proportion of sale had started to come down for DMart, and that was reflecting in their gross margins and overall EBITDA margins as well. This at a time when there was competition from quick commerce on, FMCG and essentials as well, had a bit of a problem on DMart's overall margins and growth, and that's what the company, I think, is trying to fix. For Vishal Megamart, nearly 60-65% of their revenues actually comes in from general merchandise and non-FMCG business, and a large part of that also comes in from their own brands, which is why their margins are slightly higher than Avenue Supermarts because of their product mix. And improvement in product mix is one of the triggers for DMart as well, because in terms of value to customer, still DMart is head and shoulders above everyone else.
Okay, all right, got that. Thanks very much, Mangalam. Interesting insights over there. We also have Prakash Diwan joining us on the show this afternoon. Let's get some snippets in from Prakash. Prakash, hi. We're just discussing retailers before you joined in. DMart is finally seeing a bit of a good day after a long time, right? So if you want to play retail, Trent was clearly the poster boy all through 2024 till it started correcting. That's right. DMart has been out in the woods for a long time. Do you like either of them, or maybe something completely different? How would you play the rise in disposable incomes that we're all set for this year?
Good afternoon, Sabi. No, see, absolutely right. I think Trent started off an era which was, it was a phase where people, consumers, investors, stakeholders started, really getting live to the possibility of scale in this business. Before Trent came in, we really didn't know, how big the opportunity was because nobody had actualized it, right? We know the numbers, we know everything that's positive about our demographics, but to be able to translate capital investment into, that kind of a business and convert into P&Ls, that was remarkable. And that's why they got a very disproportionate share of the market premium. And I think we are probably, that's behind us now. I don't think we'll see valuations come back to those kind of levels in P multiple terms. But what I like about DMart, on the other hand, Surabhi, is the franchise that they've developed, and as Manglam was saying, they stand above the rest in terms of what they can offer as value to buyers and consumers. Now, if they keep scaling up, and today there was some news about them scaling up. I mean, setting up another store in somewhere in Agra. They did some time back somewhere in Ghaziabad. So what they're trying to do is getting into tier 2 towns, which has been the most profitable and successful story till now, them as well. And if they continue to accelerate that and without worrying about metrics and being compared with others, till the geo retail issue happens, I don't think there's anything better than Avenue Supermart. But are you willing to pay top dollar for that is the question. I'm a bit conservative when it comes to valuation, so I don't like businesses which are fully priced or overpriced, even if they offer great moats and all of that. So I would stay away from it personally. But I think representing the sector, I mean, any allocation that you were to make, there's nothing which probably seems better placed than DMart at this point in time.
Okay. All right. It's a little cautious on DMart because the valuations take that point. Let's move to the other stock that's managing to buck the otherwise weak or slightly sluggish market trend today, and that's IndusInd Bank, up 4%. It is the biggest winner on the Nifty. And that's thanks to a call that's come in from Nomura. Nomura is sounding quite optimistic. Nomura seems to be saying that a lot of the legacy issues, regulatory issues, perhaps are behind the bank now. Let's first go across to Hormuz to get a lowdown on what exactly is the brokerage arguing, and then we'll ask our guests about it. Hormuz?
An upgrade coming in, of course, after a spate of bad news that we've seen for IndusInd Bank over the last couple of months. Now an upgrade coming in from Nomura. They've upgraded the stock to buy from their earlier rating of hold. They have also raised their target by around 50% to 1,050 now from 700 rupees earlier. And as you were highlighting, the key aspect that Nomura has highlighted here is the fact that most of their legacy issues, the bank has addressed them, and their ROA, the return on assets, is likely to improve to 1% by FY27. Now, all of this, they intend to find a new CEO soon. The names that need to be given to the RBI, the issue, addressing the issues at hand, as and made Nomura say that the bank wants to start FY26 on a clean slate. And another key trigger that they are highlighting is that in case the RBI does give their promoters an approval to increase the stake in the lender, that will allay a lot of the investor concerns on the street as well. Remember, the promoter has been wanting to increase stake. He's awaiting regulatory approval for the same. And lastly, they also say that at the current price at 0.9 times price to book 1 year forward, the valuations are inexpensive, they are attractive, and as a result of which they are upgrading the stock, raising their price target, and as a result the stock bucking the trend today among the top gainers on the index.
Yeah, absolutely. It is bucking the trend today. And actually, I mean, it's risen quite a bit from the lows. Hormuz, thanks very much for that. I was just looking at a slightly longer price chart. So at the bottom, IndusInd became about a 650 rupee stock. And from there, it's already seen a 200 rupee rally. So the question is, should one be playing for a pretty swift turnaround or not? We'll ask Prakash that in just a second. But Mitesh, if I could just come to you, I know this is a very news-driven stock right now, but if you just go by price charts and structures, then what's the sense? Would you be a buyer in IndusInd?
Yeah, I think, in the short term, yes. I think the stock is extremely oversold, trying to reverse from those levels. There is a mild pivot around these levels of 853, 855. That was the high which the stock made last Tuesday, as well as this Wednesday on the 2-hour closing chart. I think that's the level to wait for the stock to clear. But once it clears 855, I would look at a possible target in the range of about 930 to 950 to begin with, and even 1,000 rupees. So there is a good potential trading upside. From a short-term point of view, it definitely interests me.
Okay, all right. Got that. Mitesh, I wanted to ask you about a couple of other names, that are making a bit of a mood in today's trading session. Biocon, that stock, in fact, is a little bit lower as we speak. What's it looking at like on the charts?
Yeah, I think, there was a positive movement a couple of days back, and then since day before yesterday, I think the stock has started to taper off. The first support is around the 340, 336 mark. It's down there. If it breaks that, we'll look at more downside. Otherwise, it's a 340, 360 kind of a zone.
Okay. All right. Got that, Mitesh. I think we've got Prakash back. So let me toss that innocent question to him as well. Prakash, I mean, we were just discussing this Nomura report, which is making the market excited today. But I think this is a wide debate. It's still open. Whether the turnaround and the move back to growth is going to be swift and fast the next couple of months, I mean, everything goes back to better than normal, or whether this is going to be a time-consuming affair. New management comes in, cleaning of the books, maybe a forensic audit, and then you get back to growth. So which camp would you be in? Buy IndusInd or stay away?
So I expect all that repair to be possible, but will take time. So I would wait for things to kind of start looking up. So I'm in no hurry to buy. Of course, you'll probably miss out on the first 15-20% of an upside, but you want it to be a stable entry into your portfolio. You'll have to see that repair being undertaken and its impact being felt. So at least 6 months away is my sense. But yeah, the bottoming out process seems to be very evidently done with. And I agree with this report to that extent. But I'm not getting too excited to buy it just because the bottoming out is over. You'll go through a time correction of sorts before it starts kind of really going back to its glory days of $1,100-1,200.
Okay, I think, Prakash, we'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC-TV18 on this session closing bell. What we'll do is we'll take a quick commercial break here. We're going to come back and focus on markets some more. 60 points. So there is some recovery which is coming in, but not very much either. Alok Agarwal of Alchemy Capital Management with us in just a bit. Okay, welcome back. You got the market, which of course is down about 60 points, 24,790 at this point in time. We have Alok Agarwal, who's now joining us, of Alchemy Capital. Alok, good to have you back on the program. Thank you for your time. I've got your holdings by weight as of the 31st of May. And I don't know when you bought BSE. BSE is the highest weighted stock. I don't know when you bought it, but I was till about 10 days back when I looked at it, it was the #1 performing stock in the NSE 500 list. In terms of large stocks above a certain market capitalization. I don't know if you've ridden the full wave, full up move. We had the BSE management with us, by the way, today. Seemed pretty unfazed, saying that change in expiry day doesn't necessarily have to hurt. There are other levers they can use to protect market share, especially in the option side. Just wanted your thoughts here.
Yeah, sure. Hi, Prashant. A pleasure to be here. Yes, with this particular stock, we have been able to participate for a major part of the rally. I could not say that I bought exactly at the bottom, but for more than a 1.5 year holding, I can't be complaining with the rally in the stock. And also to a large extent agree with the kind of change in the expiry date. Of course, Tuesday was a more preferred expiry date. Coming to Thursday, the back of the envelope kind of calculations show that a 22% market share may come down to an 18%. That's what the consensus numbers are also reflecting. But yes, with the kind of better products, better execution, and innovative strategies being used, I would say that, yeah, there's a good chance of more and more growth coming this way in this particular part of the markets.
Okay, Alok, hi, good afternoon. Great to have you on the show. So, give us a sense where going forward, next 1 to 2 years at least, you see substantial clarity on earnings growth, because the market always wants to reward the growth centers or the growth companies. So, if you could identify some pockets where you're beginning to see that, where you perhaps will take a bigger allocation call as well at some point.
So, I couldn't agree more with you. Yeah, it's the earnings growth that gets rewarded. If you look at the major index heavyweight sectors, the sectors also actually did very well in the prior decade. Those sectors' growth are actually not coming through. They're actually lagging the nominal GDP growth also. The likes of oil and gas, the banking space, the FMCG, and the IT. But the growth is coming from elsewhere, which are not really a part of the major indices. So in consumer discretionary space itself, be it the hotels, to an extent aviation, in the whole tourism basket itself, some part of retail, even in pharmaceuticals or other healthcare, the hospital segment is doing very well. Within financial services, we are seeing some platform companies and especially the capital market players are doing extremely well. So there are pockets of growth emerging, but they are not really coming down from top down, the larger segments. That's why we are seeing those segments not really doing too well. Even in the manufacturing and industrial space, we are seeing good growth coming from the power side, the defense side, and the government's focus continuously on increasing the manufacturing share in the GDP, we might have more and more of such growth contribution coming from the cyclical side of the markets.
No, absolutely. And kudos to you for having identified some of those pockets and opportunities, Alok, because again, if I go back to the top holdings, and you mentioned capital markets, of course, BSE we've discussed. You've also had MCX. You mentioned power and Hitachi Energy and GE Vernova. Some of these stocks have done so well, and you have them in the portfolio. Also, Masgaon Dock, which is, I think, almost 5.7% of your holding. On defense, a little more broadly, do you think the stocks are already pricing everything to perfection? You already have the stock, so that's great. But is there any sense in buying afresh into any part of defense?
A lot of times during the investment journey, we come across certain groups, certain sectors where the runway of growth is pretty long. I think defense falls in that bracket. Till a few years back, India was completely dependent upon imports primarily. Although we spent a substantial amount of our budget inflows into the defense side, almost 15%. And half of that is to go on the admin and the salaries and the remaining in the imports. Over the last few years, we saw some shift happening towards the import substitution. And especially of late in the last couple of quarters, especially, we have kind of demonstrated our capabilities in terms of exports also. And especially in the era that we are living right now, where skirmishes, short-term wars keep happening in various parts of the world, the demand for such things is on the defense side is actually going up. The broad numbers speak that roughly the global defense expenditure is close to $2.5 trillion or so. And with this kind of wars erupting every now and then, I wouldn't be surprised that the allocation on the defense side globally goes up. Even if it goes up to, say, $3 trillion or so, a small portion of that, even 1% of that coming India's way as export opportunity, there's a long runway of growth in this segment in our view. The players are showing their capabilities in terms of execution as well. So you're absolutely right. So we're looking at the near-term earnings, the valuations will look stretched. But given the longer-term higher growth run rate, this sector will keep on giving opportunities of finding winners and riding them.
Yeah, no, absolutely. And I think it's an interesting portfolio. Actually, it's a portfolio which has done very well. You know, holding this portfolio, I'm assuming, Alok, you've done very well. It's a mix of power. You've got exchanges, not just BSE, which we discussed, but MCX as well, defense. You got Interglobe. I mean,
he's got all the winners.
Yeah, Prashant, I can't be complaining, but as a fund manager, we keep getting greedy. So the more you get, the more you want to do it right. And of course, there are times when you don't get it right. And markets are volatile. Certain news flows or certain actions do happen. And but the kind of method that we have been following is more like a binary method, wherein something that is not really growing too much or isn't really performing, especially in terms of earnings growth, and the visibility is lacking. So having the courage of not taking them in the portfolio at all, rather than playing through a minor underweight, that also helped us.
I mean, what I can see, maybe you do own them in small sizes, is you don't own any financials, any banks, etc. Right?
So, Prashant, financials is the highest proportion of the fund. It's around 29.5%. But you're absolutely right. There's not a single bank out of that 29.5%.
Okay. Oh, 29% is financials, but no banks. Okay.
It's predominantly
you counting
the capital market.
Yeah. Okay. The MCX and BSE and others, basically. Non-banks. Exchanges, capital market plays largely.
So
a couple of lenders, but banks, but primarily through the capital market plays are one or two of the platforms.
So Alok, just to understand the style and the approach, you look at stock selection through the quantitative lens, right? I mean, quant strategies is something that you look at or use as part of your selection process. Is that right?
I do look at the quant strategies. I've been an active fund manager as well. So looking at the fundamental side of it and as well as the quality side of it is an important aspect. Most of these stocks, most of the portfolio has been constructed on the rule-based investing. Do look at a combination of the quality parameters, the growth parameters, as well as the price action parameters. Combining them in response to the kind of market we are in, as in case we are in a slightly more stronger market, so price action factors have a much larger role to play. And in a slightly more defensive or a risk-off market, the quality factors have a larger role to play. But
I brought up this point.
Right through.
Absolutely, Alok. And that's why I really brought up this point because, I mean, it's been fantastic. Like we've discussed, some of your top holdings have done so well. So from here on, and if I ask you to wear your quant specialist hat for a bit, then, we've had a momentum-driven market, then value stocks did really well. But say for the next 12 months for your portfolios, from a quantitative aspect, which are the factors that you'll pay perhaps, the greatest amount of interest to or the greatest allocation to?
It's very counterintuitive. So we'll notice that the last 3 months, the markets have rallied so much. So an expected answer would have been that the momentum-driven factors would actually rule the roost. But the fact is, it's the visibility of growth that is actually happening to be rewarded, or maybe some punishment happens when the visibility is lacking. So it's the visibility of growth, a higher growth than the overall nominal GDP growth. We recently had the concluded financial year, and our corporate earnings to GDP has hit a 17-year high. So to be able to outperform, one needs to have stocks and sectors that are growing much faster than the nominal GDP. And that visibility is the one that is more important in this ever-changing world, a dynamic world. So that's the key factor in our view, which is actually getting more rewarded.
Okay. All right, Alok, great conversation. Thank you very much for joining in. and giving us perspective on a whole range of issues. Of course, some of the sectors as well, where you have overweights or you have large positions. So that's a word coming in from Alchemy Capital. Well, with that, let's just go back to the market. The Bank Nifty has actually turned positive. So we're seeing about 113 odd point move on the Bank Nifty. The Nifty is also recovering. The Midcap index is also trying to cut its losses. So this is one more attempt, one more wave. I mean, today's been a choppy day in a band, but now the market is trying to get off the lows. Let's see. It's still got half an hour. So let's see if the bulls can manage to make their presence felt. We'll take a quick break, come back with a lot more. Of course, the buzz from the dealing rooms coming up with Nimesh in just a bit, in D-Street Chatter, and of course, some final trading calls as well.
You have stood up and stood by many of India's dreamers.
I became a magnet for entrepreneurs. So there's one man who will hold our hand and take us all the way.
So what is the art of deal making?
So whenever the deal maker wants to become too big, oh, I'm God, okay, you say this and you say that, kind of attitude, not literally, but I've seen that. What percentage of people you think die, Shireen, with regrets in their hearts?
A very large percentage.
So this risk of failure, fear of failure, is the one that makes people die with regrets.
What is holding us back?
Promote and protect the good. Prevent and punish the bad. We prefer to be slow rather than fast. That's how we are a chalta hai country and not a daudta hai country.
The lack of speed would be, if you were to IPO India today, that would be on the risk factor side in the DRHP, right?
I wouldn't IPO.
You wouldn't IPO?
But to IPO, I must have a new story.
You have a special place in your heart for Charlie Munger and Warren Buffett. What have you taken from them that continues to guide and shape how you think today?
Understanding of balance sheet, because balance sheet is accumulation of good and bad.
How do you find India positioned in this mix today?
We have a resilience, we have a stability, we have a wisdom of our own. But वो हम एक scene दिखाते हैं, फिर we have a long break. Stop that.
Interval थोड़ा लंबा हो गया.
बहुत लंबा हो जाता है.
Welcome back. You're tuned into Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, keep an eye out on the markets. Actually, we've seen a good recovery from the low point of the day. I think the Nifty Bank has turned around a little bit. IndusInd Bank, that one is up close to around 5% as we speak. So that's zooming away. Good recovery on the Nifty Bank itself. Nimesh joins us to give us a sneak peek into D-Street chatter. Nimesh?
And another day of consolidation and a range-bound trade. And I guess that's largely because of the ongoing geopolitical risk, and that persists, right? So, which is why you're not seeing big actions in the cash market or in the F&O market. From a flow perspective, another quieter day, so to speak, because again today a couple of large blocks will include, likes of Vedanta, and there was a Sky Gold block as well. So that will have an impact on the domestic number. But barring that, there is not much action, is what I understand from the larger institutions, even in today's market. The only space which has done well, and that was a feedback yesterday as well, that there is buying in select private bank names, and that stands out today as well. And that explains, the likes of Bandhan Bank, IndusInd Bank, all buzzing in trade today. Again, from a direction point of view, I guess the trend of large blocks are likely to continue. Every day we are at least hearing 2 or 3 large blocks, and the pipeline looks quite strong as well. Technically, 24,450 is a level to watch on the downside. I've been saying this for a while now, so nothing much to add there. But broadly, it's a range-bound day of trade, largely on the back of geopolitical risk, and there is lack of participation as well from larger institutions.
Nimesh, what is the chatter list today in terms of stocks?
So the first stock on my list is Sky Gold. That stock is locked at 5% down circuit today after a large block deal. Again, from a detailed point of view, I guess the promoter entry was a seller, and a couple of domestic mutual funds and few HNIs were buyers. So again, disclosures could be quite interesting in Sky Gold block. Nearly 5% equity had changed hands. The second stock is IKS. Big underperformance today. It's down 7-8% and large volumes as well. Even for IKS, the buzz is that you will hear a large block deal in IKS very soon, and one of the strategic investor could be the potential seller there. So that's the second name. The third stock is IndusInd Bank. I spoke about some bit of buying interest back in private banks. IndusInd stands out on back of very strong buying flows, as well as the number of upgrades as well. So that explains a big move there. And the last is Asian Paints. After the clean out trade, some bit of institutional interest seems to be back in Asian Paints. So I understand at multiple FI desks there is buying interest from larger institutions in Asian Paints.
Okay, all right. Lots happening there. By the way, Nimesh, remarkable resilience, right, as we were discussing earlier with regards to BSE.
Oh, yeah, absolutely. So I think it surprised everybody. And Prashant, this is despite the fact that the stock is in ASM. So for any new buying, you need that delivery-based, the funding as well to buy into that stock. So and despite that, and despite so much of brokerage notes suggesting EPS cuts and earnings cut, the stock hasn't fallen much. So maybe there is a lot of fan following or so-called love for BSE at this point in time.
Absolutely. Nimesh, so the Sky Gold, IKS, where there perhaps a large block deal coming down. IKS is just, it was up 8% yesterday, it's down 8% today. But there's a block coming, as Nimesh says, and IndusInd, Asian Paints are the others on the chatter list today. We'll keep a track on these. Mitesh is with us, back with us with what he'd like you to do as far as specific trades go for the short term. Mitesh, what do you have?
To be honest, it's a very devoid kind of a market. Market is not doing much. But I was talking about IndusInd Bank getting past 850, 855 marks. We take a BTST here. In case it starts getting past 855, 860, we will add on to the position. What is the ending of BTST? They start at 843 and a target of around 865. And I hope that once this 855, 860 zone is cleared, the stock can get into a slightly stronger trend on the upside. And JSW Steel is an STBT. Keep the stop at about 993.5. Look for targets of 970.
Okay. All right. Thanks for that, Mitesh. And thank you for all the trading calls through the day. We'll connect with you again bright and early tomorrow morning. Let's actually look at the big story of the day. And really that was the final clarity on which exchange will have their individual weekly expiries on which day. So now it's all very clear. SEBI has approved NSE's request for weekly futures and options contracts expiry on Tuesday. BSE's proposal for Thursday expiry has also been cleared. To understand what this means, Prashant caught up with Sundaraman Ramamurthy, MD and CEO of BSE, because there was a lot of worry in the market about whether this move to a Thursday expiry for BSE, whether it's going to lead to a drop in their market share. Listen in to some excerpts from that conversation.
Since NSE requested for Tuesday to the regulator, in the overall interest of the market, BSE decided to go with Thursday. Thursday is a good day, so we have gone with that. BSE gained market share when its expiry day was Friday, which is not a very ideal day. What we should recall is, at that point of time, every day there was an expiry day. BSE didn't have an option but to go for Friday, and BSE gained all its initial market share, only with Friday as an expiry day. And if you look at the international scenario, B is US, B is Eurex, be it Korea, Taiwan, Kospi basically I'm talking about, Japan, many of them have their expiries on Thursdays or Fridays. So if you're thinking of relative value trading, Thursday becomes an ideal day. See, we have around 525 brokers now. We want to increase it to 600 to 700. Our concentration is on foreign participants and brokers and racks and our technological capabilities. On brokers, I told you the numbers. On foreign participants, we have around 290 to 300 foreign participants today participating with us. We want to increase it to at least 500 over a period of time. So timeline put this, end of this financial year, we should have 200 racks.
Okay, all right. Well, that was a conversation with, the management of BSE earlier today. But let's focus on Hindustan Zinc. Well, the big headline that we got today was that the promoter entity went ahead, that's Vedanta, went ahead and skimmed off some stake. Close to around 1.5% is what they have sold. They've raised close to around 3,000 crores odd. Now, that was the large trade that took place earlier today. And in fact, the management has given their clarification on the exchanges. What they go on to state is, in fact, that they've raised this money in line with their strategy of the demerger, as well as going ahead and focusing on individual verticals as well. Now, for Hindustan Zinc, this sale comes a day after they laid out their big ambitious plan of adding capacity in zinc-lead smelting and also going ahead and increasing some, capacity in silver. This is phase one of their expansion that they've announced. The total capex will be around 12,000 crores approximately. They said that they'll be funding it via internal accruals as well as via debt. So that was the plan. For Vedanta, though, that stock will be in focus from now on. Today, they went ahead, they declared a dividend of around 7 rupees. But this is basically the pass-through of the dividend that they received from Hindustan Zinc of around 10 rupees. You equate it, it works out to nearly around 6 rupees 85 paise. And their pass-through close to around 7 rupees. Now, Vedanta Resources, which is the parent, will get around 1,500 crores. That's good because the parent entity, at the top, which is the parent of Vedanta, Vedanta Resources will be in better shape. Phillip Capital, they are factoring in 35 rupees per share because they expect Vedanta Limited to continue to pay out dividend to its parent, Vedanta Resources. That's why back of the envelope calculation suggests that 35 rupees per share. And there could be some more dividend that's coming because they've raised 3,000 crores via the sale that they have done in Hindustan Zinc, Vedanta Limited that is. And maybe in fact there'll be further pass-through of dividend. So we'll keep an eye out on Vedanta from here on.
Okay, all right. So Vedanta continues to be in focus. Let's move on to one more stock that's in the limelight today. Zydus Wellness is in focus on the back of block trades. Manglam is here with some more inputs on this. Manglam, fill us in.
Well, for Zydus Wellness, yesterday in the pre-open, there was a large trade that took place, about 7.3% equity, and that number corroborated accurately with, TPG Capital's holding in the company, and we expected that would happen, and that exactly is what the data confirmed post-market as well. But what was interesting is that the buyer, 7.3% stake at 1,900 rupees, was bought by Parag Parikh Mutual Fund, and that is something that the street is looking at as well. So two things that are a positive. One, that a mutual fund has gone ahead and invested 7.3% stake in the company. Second, that Trepsicare LLP, which is the TPG Capital investment arm, has done a clean-out trade. So no further supply in the very near future from this seller at least. So those two factors worked for the company. Add to that, in a sector which is poised for growth, Zydus Wellness has some strong brands which are in under-penetrated categories, and the company is eyeing growth. Brands like Nycil, Everyouth, Glucon-D, Complan, and very recently they bought Right Bite as well in the protein market. So if you look at what the management had told us post their fourth quarter results, they are looking at high teens growth in FY26, and they are expecting margins to come by between 17 to 18% as well, which over their last year's number is over a 200 to 300 basis points improvement in their overall margins. Add to that, they have a category which is growing between 25 to 35%. In the last few months, that number has increased to about 40%, and that's sustainable. And they're also increasing their presence in the country by reaching over 400,000 stores, or rather 4 million outlets via general trade. So all these factors working for an FMCG company which is trading at around 32, 33 times, maybe Parag Parikh saw some growth opportunities out here, and as a result of which the street is excited by the prospects.
Okay, all right. That explains why the stock's up 6% this afternoon, Mangalam. Thank you very much for that. That's Zydus Wellness. Okay, with that, let's move on to what promises to be an interesting evening for sure, because we're all awaiting the Fed decision. The market's base case is that there will be no rate cuts, especially now because of the fears around inflation that could be induced by higher US tariffs and the fact that we have a geopolitical situation in West Asia and that crude oil is on the rise. So let's actually go over to the CNBC Fed survey. Here is CNBC's Steve Leisman with the findings of what the survey is expecting this time.
Despite improvement in the economic outlook, respondents to the Fed survey continue to forecast weaker growth and higher inflation than they did at the beginning of the year and still elevated tariff uncertainty. 100% say the Fed will keep rates unchanged at this meeting. The recession probability, though, did drop by 3 points to 38%. It had been as high as 53%, but now it's down quite a bit, but still elevated. 3.9%, that's the year-end Fed funds rate, so still banking on 2 rate cuts this year. But they've kind of X'd out one for next year at 3.55, only 1 rate cut built in, and the Fed will remain above that long-run neutral rate of 3.3%, which is the estimate of respondents here. GDP, 1.13%, that's up. That's a good thing from 0.8, but it compares with the forecast we had from January, which was 2.4%. 2026, we get back to at or above trend at 2.2%. That's 20 basis points higher than the May forecast. Doug Gordon, senior portfolio manager with Russell Investments, writes in, saying, quote, recent geopolitical events in the Middle East add uncertainty into an already uncertain environment on trade, tax policy, and with potentially weakening hard macroeconomic data pending. 2025 forecast for inflation down a bit, down a quarter point, but still elevated at 3%. 2026 is when you get back to around where the Fed would be comfortable on the CPI at 260 in May. The unemployment rate also down a bit, 4.53, 4.5%, call it. That's down a couple tenths from where it was in the prior forecast. And unemployment in 2026, 4.47%. Mark Wittner, he's upbeat. He's the chief economist at Piedmont Crescent Capital. He says the economy has remained resilient, not terrified. There's no shortage of reasons to worry, but the U.S. economy keeps proving its doubters wrong. On a separate note, more volatility could be ahead, with most expecting an early announcement of Fed Chair Powell's replacement from President Trump. 64% say yes, a replacement for Powell will be named before the end of the year. 21% say no, and 14% don't know. Underlying many of these forecasts is the expectation that tariff impacts have yet to really hit the economy, along with disagreement over how much impact the big tax bill in Congress will have on growth. Both major swing factors in the growth, employment, and inflation outlooks for the year, of course, along with what the Fed ends up doing.
Okay, well, that's Steve Leisman with what you should expect from the Fed. That's later today and will be headlined tomorrow morning one way or the other. Well, on the global reset on CNBC-TV18 Prime earlier today, I spoke with veteran diplomat Anil Truganyat on Prime Minister Modi's call earlier with US President Donald Trump. Of course, this is being talked about in the backdrop of what is coming later today, which is President Trump hosting Pakistani Army Chief, Munir, and in the White House for lunch. I mean, seems bizarre, doesn't it? Well, I spoke with, the ambassador, the former ambassador, on what this could be about and what implications, if any, this has on, talks and relations between India and the US. Listen in.
Well, I think it is also related to the conflict, because there have been statements that have been coming out from Pakistan that in case Iran is, bombed with some kind of a nuclear device, then Pakistan will intervene and bomb Israel. I mean, that is the thing they are saying. There is no guarantee, but this is how Pakistan is able to keep itself relevant in the bargain. And as you know, that they had hired this very influential PR company, which has arranged this visit. And as such, General Asim Munir and the CENTCOM chief have very good relations, and that's how this visit was planned. And the fact that President Trump is meeting the so-called Field Marshal Asim Munir states that they will like to buy some equipment, get some support, more support in return for keeping quiet in this bargain. Of course, Pakistan wants to show to the Islamic world that wherever the Islam is in danger, they are going to stand up. And that's how their bomb has been always projected. I mean, it was said to be Islamic bomb. And so I think that this is how they have made themselves relevant in this whole complex.
You just heard our Foreign Secretary explaining the conversation between President Trump and Prime Minister Modi. You think all that also sort of gets into play here?
Well, I'm quite sure that while Prime Minister Modi may have spoken to President Trump on several issues, and he also clarified India's position as far as the mediation and other aspects are concerned. But USA remains our global comprehensive strategic partner. And the kind of shifts that is being witnessed in recent times, for whatever reasons, maybe transactional or otherwise, is definitely a cause of concern, obviously. So I'm sure the Prime Minister Modi would have told President Trump about the terror dimension, essentially, of Pakistani state, which uses it as an instrument of its foreign policy against India. So that the clarity is very much there. And hopefully President Trump will tell Asim Munir to not use that as an instrument anymore if they want to continue to have some kind of assistance from the Americans. But since for the superpowers, especially the United States, everything is a part of the chess game, we'll have to see and figure out ourselves how things play out.
Okay, I think those headlines later tonight from the US with regards to that meeting will be very, very closely watched, and I think it's important to track. Remember to tune into the all-new CNBC TV18 Prime programming. So these are the programs that we have for you every day, bringing you insights from policymakers, business leaders, economists shaping the world and India's future. So you've got the Global Reset at 12 noon each day, Monday to Friday. You've got the Big C tracking currencies, commodities, cryptos at 1 o'clock. And then later in the evening, you have the Global Lens with my colleague Parikshit. So that's the lineup on CNBC TV18 Prime. We'll take a quick commercial break here. We'll come back with Mayuresh Joshi on the other side.
Welcome back. Just the last 4.5 minutes of trade left. We have Mayuresh Joshi joining in for some fundamental ideas. Mayuresh, good to have you on. So the market has been fairly resilient. I mean, it hasn't collapsed in the face of what is a big conflict out in West Asia, but there's still caution out there. Let's talk about some of the stocks, which have been facing a little bit of this correction, cool off, so to speak. On the particularly within the oil and gas space, do you have any clear, actionable, things to do because of any anticipated move in oil prices? Right now, when crude spiked, it's staying around that level. But whether it's oil marketing companies or the few upstream players that we have, I mean, any buy or sell advice on oil and gas stocks?
Afternoon, Surabhi. No, again, I think it's very, very fluid and transient as we speak. So since the conflict has escalated over the past few days, we've obviously seen Brent prices move significantly higher from the levels they were a few days back. And therefore, I think the kind of momentum that you are probably seeing in upstream stocks is a very logical reasoning. However, I think in what direction will oil finally move? Does this escalate? Nobody knows. How far will the escalation last? Nobody has a clue. Will it end in the next 3 or 4 days? Nobody has a clue. So because there is so much of uncertainty around the entire escalation in the Middle East right now, I think it's really very difficult to take a strategic call in terms of where prices might head, both in terms of how Brent is placed, how LNG is placed. And therefore, I think oil and gas prices might be very, very fluid, very, very transient. You'll have to see how the entire global political aspect probably goes, how the crisis in the Middle East unfolds, and therefore then take a probable call. But we are not taking a call on the sector as well. I think we're more on the sidelines, seeing what is probably happening for crude and gas in particular.
Hi, Mayuresh. Good afternoon. Good to see you. And, earlier the starting of this week, we thought maybe there'll be some de-escalation. Just going by the cues, that we're looking at. Trump left G7 early, saying something big will happen, national security. I just hope that we're not bracing for escalation, in the next 24 to 48 hours. And that's the hope, from an equity market perspective, humanity perspective as well. That said, let's talk about a couple of stocks. The big loser today is Hindustan Zinc. It was at around 540 rupees a week ago. Today it is at around 440 rupees. So that's a sharp 18% cut on the stock. It was very, very expensive, and that's why we as well were saying above 500 rupees, the two large holders will be tempted. At 450 rupees, what's your take on Hindustan Zinc?
Afternoon, Nigel. No, again, I think it's a neutral for us, I think, for two broad reasons. One, obviously, I think the kind of commodities that Hindustan Zinc has, zinc, lead, aluminium to a certain extent, silver prices moving higher, giving that amount of a sentimental reset for the stock itself. The announcement that they have done in terms of the capex, the phased manner in which the capex will come through over the next few quarters and years. Obviously, I think what will come through will be back-ended over the next 2 to 3 years. But how prices move over that periodicity of time, and specifically over the next 2 quarters, how is global demand going to reset itself in terms of all the global uncertainties that we are going through, either geopolitically or on the geoeconomic front as far as tariffs are concerned. And if demand probably still remains muted, the volume of take, even if you assume silver going higher, ex-silver will still probably remain a little bit on the softer side, which then makes us believe that the LME realizations itself might remain soft. Obviously, I think the two bright spots, inventory levels are at low levels, which means any demand aspect which starts coming back and inventory refilling, which starts happening again, might lead to better prices. But I think it's very uncertain at this point of time. So I think we're better off at the sidelines, even if the stock probably gives you a 5.5–6% dividend.
Okay, all right. Stay with us, Mayuresh. Just going to wrap up things with the market and just come back to you with more questions. It's basically a routine kind of close. I mean, not even a 0.25% cut by the end of it. So 50-point recovery coming through in the last 30 minutes or so. So 24,800 is where we finally leave off at. And let me just take a quick look at where the 20-day is at. So slightly under the 20-day. Bank Nifty closed under the 20-day. Today, the Nifty is also now under the 20. But, I mean, very, very small change there. That's nothing decisive in that sense. As far as the large caps are concerned, the losers coming through in TCS. But again, bit of a reversal. Yesterday, for example, the IT stocks were all higher. So TCS was down about nearly 2%. Adani Ports, JSW Steel and HUL were down 1.5% each. On the upside, you had IndusInd Bank, which was up 5% on that Nomura note. Titan, Trent, of course, we've been highlighting since the morning. Something like a Maruti and Mahindra. So actually, if you were to pick a pack, throw in an iShares as well, it is autos. And it showed up. The Nifty Auto Index was the only one, which was the large index sectorally, which was up and about in the green. Surabhi.
Okay, so that's the overall broad picture. On the mid-cap side, the mid-cap index has ended, of course, a little lower than the Nifty. Nifty lost 0.2%. Mid-cap index is down 0.5%. Some of the names that can be picked out, Hindustan Zinc, there was a large, of course, block trade that kept the stock in action today. But even beyond that, IKS, for instance, has lost 8.5%. Happiest Minds is down 4%. Symphony, Subros, just some examples of stocks that came under pressure. MobiKwik, look at this one. I mean, down about 9%. So plenty of profit taking coming in on the mid-cap side. However, there were, as always, there were some gainers as well. So let me just name some of them. Avenue Supermarts, 4% as they're looking to expand in UP. And some of the stocks from the power equipment space like GE, Vernova, T&D, almost 4% higher there as well. So some interesting moves coming in, but largely down and fairly cautious in the market today. 24,800 pretty much. That's the close for the Nifty. Well, that's where we take your leave on this edition of Closing Bell. Many thanks for being with us, but don't go anywhere because we have all the market action coming up. Up next is Markets Forward.
Market ends with minor cuts amid West Asia tension. Nifty holds on to 24,800. Financials are relatively outperformed with IndusInd Bank being the top contributor. Midcap underperformance keeps the market breadth in favor of declines.
Vedanta sells 1.6% of each stake in Hindustan Zinc for around 3,000 crore rupees via block deals. The transaction comes soon after Hindustan Zinc Limited announces a capex plan for a zinc complex to be funded 50-50 via equity and debt.
BSE CEO Sundar Raman Ramamurthy tells CNBC-TV18 that Thursday is not a bad choice for F&O expiry, citing market share gains when expiry was on Friday as well. He expects to expand the broker base from 500 to 700 and foreign participants base to 500 in the next 5 years.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading session. I'm Vinny Motiwala and with me is my colleague Mangalam Malu. Mangalam, an interesting day coming in. Yesterday also we spoke about some range. Today also seems like the range is just lowered and again moved in that pattern as well.
We're in that range. At the start today, the GIFT Nifty was implying a 37-point downtick. That's exactly what happened yesterday as well. Today, the good part, however, was even though the Nifty was in a range, it wasn't as bad as we saw in yesterday's trading session. And also overnight, we saw some weakness come by on Wall Street. Two parts happened. One is that the baton was passed from the underperformer yesterday to the underperformer today. From the outperformer yesterday to the outperformer today. So yesterday, we had the Nifty Bank, which was underperforming, and the IT index, which was outperforming. Today, that flipped. We had the IT index, which was underperforming, and the Nifty Bank actually was mildly higher in today's trading session. What was also interesting and similar to yesterday was we started with more stocks advancing than the number of stocks which were declining. Sometime during the middle of the day, those two lines intersected, and by the end of it all, we had way more stocks declining than the number of stocks which are advancing. So, that's an important data point that we need to keep on our radar. The other part is that the 20-day moving average. Now, that seems like a bit of a fulcrum for both the Nifty as well as the Nifty Bank. The Nifty Bank managed to close in the green, managed to close mildly above the 20-day moving average. The Nifty, however, is just about 20-30 points below the 20-day moving average. So those are a couple of levels that we'll be watching out for going tomorrow as well. All important FOMC meet outcome is something that we will be tracking.
Absolutely. It's going to be key to watch out for in terms of the trading session that we have as well. Just a couple of sectors that I would like to highlight. Autos today, that was the one which managed to hold on to the green today. So that is something to watch out for. Top sector there, while PSEs, that didn't do well. So public sector side of entities was something that was missing in terms of the green there. So we saw all of that in terms of PSEs that were under pressure. But on that note, let's take you through the lineup that we have in store for you all today. We'll start with the top movers and shakers of the day with Hormuz and then move on to the important stocks, Hindustan Zinc, which slid after a large block deal, and then move on to IndusInd Bank and Avenue Supermart that gained in a trade today. We'll give you all those reasons as well why they were in focus. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. But on that note, first up, let's start with the first segment of the day and go across to Hormuz, who's joining us from the big wall to take us through the top movers and shakers. Hormuz.
As the index continued to sulk for yet another day, it was the broader markets that were in the thick of things. But of course, there were stocks that kept the Nifty gains or any potential recovery in check, and it was the index heavyweights that did so. Look at ICICI Bank, look at TCS, HUL, Infosys, L&T. All of them among the top contributors on the downside in today's session. The newsmakers, there were plenty of them. All eyes were on BSE this morning, and after the pre-open fall that it had of around 5.5%, a smart recovery seen from the lows, ending just 1% lower. Vedanta, of course, the dividend that it announced and the stake that it sold in Hindustan Zinc, which ended 7% lower. MobiKwik, of course, 9.5% lower, shareholder lock-in ending today and now heading towards its post-listing low as well. And Zydus Wellness, after positive mutual fund buying coming in there in that stock, 5.5% higher on that stock as well. A lot of brokerage commentary that came in. IndusInd Bank, of course, after an upgrade after a very long time, 5% higher on that stock. Bandhan Bank, CLSA reiterating its high conviction outperform. Avenue Supermarts as well having a good day. IGI extending its losses from yesterday's Kotak note, and Trent also doing well on the back of its annual report and subsequent analyst commentary. Stocks that ended at a 52-week high in a market like this, included the names like PSP Projects that ended at a 52-week high. Axis KH2 was at a 52-week high in today's session. Steel Strips Wheels, AU Small Finance Bank, a lot of these small private financials did well today, and Lumax too ending higher at a 52-week high. And lastly, some of the other movers in the broader markets, and most of them saw double-digit moves. Look at Electronic Smart, 18% higher there. Veranda Learnings another 9%. Orient Cement was down 17%, and Subros seeing some profit booking in today's session. Back to you guys.
All right, we take that point, Horibaz. Thanks a lot for that. All those stocks which were moving around in today's trading session, some with volumes backing them as well. But let's welcome our guests today. We do have Mayuresh Joshi joining in from MarketSmith India. We also have Shrikant Chauhan, the AVP at Kotak Securities. Thanks a lot, gentlemen, for joining in. Shrikant, let's ask you, we've been in this range for such a long while. What would it take for us to break out or break down from this range, and which side is your inclination towards?
Afternoon, Mangalam, Vinny and Mayuresh. Mangalam, like market is not going anywhere. It is in the range only, and it has spent a lot of time. While looking at the entire setup of the market, I am of the view that it's not easy for the market to cross the level of 25,200 only on the basis of domestic reasons. We need something which is like really concrete and very strong in terms of, let's say, news from the global markets. That can only lift the market beyond 25,200. In the absence of that, I am of the view that the market can again come back to the levels of maybe 24,500 or even 24,200, where the market has left the gap. So till the market is in the complex corrective pattern, we need to be more and more stock specific and sector specific instead of taking any broad view on the market.
Okay, that's a view coming in there on the markets. Mayuresh, I just want to talk about a couple of names today that were in focus, right? The retail side, whether you look at Avenue Supermart, Trend. Spencer Retail also seems like some agency reports were coming in terms of some growth story. So that was also buzzing. Anything that you're looking at in terms of the consumption story, retail side specifically?
Afternoon, Vinny. Again, I think the expectation largely getting built in is that consumption might make a very, very strong comeback, both urban and rural. Urban more or so specifically for the tax cuts that have now got initiated, and therefore discretionary spending should come back in a steady state in the second half. With better monsoons, rural consumption should come back. And therefore, I think a lot of these retail-oriented stocks had started showing signs of resilience over the last few days. Having said that, I think the expectations in terms of revenue per square feet for stocks like a DMart, as an example, for stocks like Star Bazaar within Trend, I think are expected to be a tad bit better compared to what FY25 was. And again, as discretionary spending patterns improve, you've got stocks like a V-Mart Retail as an example. Vishal Mega Mart went through a massive block deal yesterday. Their presence in tier 2, tier 3 towns is highly underrated. As demand comes back strongly and the price points at which a large part of their average selling prices are, whether it's apparel, non-FMCG, or even FMCG to a certain extent, I think is well defined. And therefore, I think if growth comes back strongly, it can come strongly in these pockets. So yes, I think we remain optimistic on these areas at the moment.
All right, we will talk about these areas in just a bit, Mayuresh, once again. But Hindustan Zinc is the one which saw its shares tumble after Vedanta sold about 1.5% of its stake in the company via block deals over 3,300 crores. Nigel D'Souza joins in with more on this. Nigel.
Well, that's right. Hindustan Zinc was under pressure today. It ended with a cut in trade today. And that was because of a large trade. And Vedanta, the parent, has confirmed that they were the sellers. They have sold closer on 1.6% stake in Hindustan Zinc. They've raised closer on 3,000 crores. And the management says that this is in line with their strategic focus, that every business will be treated differently, and they continue to delever the balance sheet as well. So that was the big headline today. And keep in mind, Vedanta has sold stake in Hindustan Zinc just a day after Hindustan Zinc had given out their big capex guidance of around 12,000 crores. They're looking at adding capacity, particularly on the zinc side, and some part on the silver side as well. This is phase one, and phase one will incur close to 12,000 crores of capex. This goes on over the next 3 years or so, and it'll be a mix of internal accruals as well as on debt. Vedanta, well, they in turn have gone ahead and declared a dividend of close to around 7 rupees per share. And this is the pass-through of the dividend that they receive from Hindustan Zinc. Now, in addition to this, the street is optimistic that Vedanta will continue to pay out higher dividends. Phillip Capital, for one, they have gone ahead and they have factored in 35 rupees of dividend in this fiscal year itself. And there is some hope because now they've raised some money via the proceeds they'll be getting from Hindustan Zinc. which amounts to around 3,000 crores, and some part of that could get passed through as well. So that's why, in fact, the street continues to, harp on the fact that Vedanta could continue to pay out some more dividends. So both these two stocks in focus. Hindustan Zinc under pressure because Vedanta sold, some stake out there, and Vedanta because in the days to come or the months to come, we could hear in that further dividend payouts coming in from Vedanta Limited.
Thank you so much for that, Nigel. In fact, earlier on in the day, we spoke to Arun Misra, who's the CEO at Hindustan Zinc, and he says that the capex for a complete mining to smelting plant is in the line with global benchmarks and adds within 2-3 months, it will be able to make the capex announcement. Listen in.
This capacity is not just a smelter. This capacity includes, your another roaster, melting casting, fumer. No, earlier days we never used to build smelter with a fumer. Now we have taken fumer from the very beginning, and along with, of course, leaching, purification, cell house. At the same time, we'll put up a mill for processing of ore, and then of course mining expansion. So altogether 12,000 crores for creating this capacity from mine to smelting and 250,000 tons of metal. It's a good money, and to us, it's a benchmark capex that we are proposing. In a manner of 2 to 3 months, we will make entire announcement for 2 million ton project expansion. Date we will decide depending upon how we are progressing. See, roughly in my calculation, we do about 10,000 crores of PAT year on year. If we do that for 3 years to 4 years, it's about 40,000 crores we are talking about. So we shouldn't be there, and this will be also spent over about 4 years. So we have enough of internal accrual power to fund the project, but also we will have to take care of strategic interests as well. So we will take some amount of debt, maybe up till about 40 to 50% of the project cost.
All right, so that's about Hind Zinc. Let's talk about the top gainer on the Nifty today, and this after a very long time. In fact, it's seen a big cash from the top. That's IndusInd Bank. The shares rallied today, up nearly 5% after there was a brokerage note that turned positive. Hormaz joins in with the details of that one. Hormaz, after a big fall, someone seeing value in IndusInd Bank.
Someone seeing a value indeed, and it is Nomura that is finding some value here. The stock, of course, recovering from its 52-week low, which is around 600 rupees, and continuing that recovery. Nomura upgraded the stock today to a buy recommendation from its earlier rating on neutral. They raised their target by almost 50% as well to 1,050 from 700 rupees earlier. They mentioned the fact that IndusInd Bank is taking steps to address all of its legacy issues, and as a result of which the return on asset, the ROA, is likely to improve to 1% by FY27, and all of these steps that it is taking is giving the message that the bank wants to start FY26 on a clean slate. And the other big trigger that Nomura has highlighted is the fact that in case RBI does give its approval to the promoters to increase their stake in the lender, that will allay a lot of the concerns on the street as well. Additionally, the price at which it currently trades at 0.9 times 1 year forward price to book is an inexpensive valuation, is an attractive valuation. And based on all of these factors, Nomura has gone ahead and upgraded IndusInd Bank to a buy after a slew of a bad negative news flow. Some positivity coming in for IndusInd Bank, the top gainer on the Nifty today.
All right, take that point. Thanks a lot, Hormaz, for that. Murish, IndusInd Bank, would you fancy a chance here after a big fall?
No, I'll still bide my time, Mangalo. Obviously, I think it seems that the worst is over, because in terms of the recognition and the provisioning that was needed on the balance sheet, I think a large part of that has got cleaned out. Obviously, there is expectations to be a management change, which should happen over the next few weeks. Which name comes up? And if there is an interesting name which comes up, I think the street will be highly enthused with that. But I think it's going to take at least a couple of quarters, 3 quarters for the repair work to start happening on the balance sheet, as far as both the trust factor is concerned and as far as core numbers are concerned. Valuations are absolutely inexpensive as we speak. But in my sense, I think it's better to wait for a quarter, look out for numbers, see what changes are happening at the management level, and then probably take a go.
Okay, surely wait out for a bit before you actually get into IndusInd Bank. That's what you're saying. But, Srikanth, on the technicals, is that a similar story, or do you think now is the time to start adding some bit of IndusInd Bank?
Yeah, Vidya, based on technicals also, if we go through with its daily and weekly pattern, one thing is very clear, that the intensity of selling is completely over. It is whenever there is a fall in the stock and market, we see very nominal sort of activity in the stock. But whenever there is a recovery or specific buying interest in any bank sector, or any bank, then in that case, we see good amount of attraction in this particular stock. And now it is very close to its multi-resistance of last 2 months. So close to 855, 860, the stock is having strong resistance. And if it crosses that, then we may see the levels of 1000 where the stock is having resistance of 200-day simple moving average. So the ideal strategy should be to look for adding position if there is any correction in the stock, but with a very short-term view, not with a very long-term view, because the overall pattern of the stock is still showing a lot of weakness. But because of the extended sell-off, we are seeing some recovery in the stock.
All right, we take that point, Shrikant. Thanks a lot for that. Meanwhile, we have Avenue Supermarts, which did well after a long time as well. The stock's been an underperformer for a while. The reason today the stock saw some up move was largely because of one. Yesterday, they informed the exchanges that they have started a new store in Ratan Mall in Agra. Now, why is this important? Because it's their first foray in Uttar Pradesh ex-NCR. Yes, they have presence in Noida and Ghaziabad, etc. But it's the first foray that they've made in the largest state of India when it comes to population. And this implies an increase in TAM for them as well. And it's the first foray into a new state in 8 years. The last time they did that was in 2017 in Punjab itself. Since then, there has been, this entire cycle of post-COVID, quick commerce, their core market's not doing too well, them not expanding stores at the pace that they used to earlier. And now that's the key trigger for them. Given their cluster-based expansion strategy, is the street expecting increased pace of store expansion in Uttar Pradesh, improvement in their product mix, which would improve their gross margins, and in the core markets, in the metros, are they expanding DMart ready enough to battle the competition that is coming from quick commerce or not, is what the street is betting on. DMart, valuation-wise, not particularly cheap, but has been an underperformer for a while. This gives them a glimmer of hope when it comes to increased pace of store expansion. Mayuresh, we were talking about retailers earlier in the show. Do you think DMart fancies a chance right now?
So we will wait it out. And for all points that you've appropriately mentioned, Mangalam, I think the numbers are going to be a key in terms of the re-rating for DMart. Obviously, it's underperformed because numbers were not coming in. But if consumption comes back, which is the belief that more participants on the street are of the opinion, I think DMart showing should improve in the second half. However, at this juncture, as I said, we prefer retailers like a Vishal, Megamart or V-Mart retail, where our belief is that the volume growth should be relatively better of tier 2, tier 3 cities. They've got a good mix, as I said, in terms of apparel, FMCG, non-FMCG as well. And the price points are also extremely attractive. So to that extent, I think within the retailer at this juncture at markets where the rating, rankings, institution holding, all the parameters that we see in cancel are concerned, I think these two players seem to be a more potential candidate where earnings might be a little bit more resilient compared to the rest of the bank.
Okay, Mayuresh, thank you so much for your view coming in. And Mayuresh as well as Shrikant, thank you so much for joining in with us on the show as always and helping us understand the markets as well as individual stocks. But on that note, we're going to slip into a very short break. After the break, we'll come back and get you the top corporate voices along with the key market events to watch out for in tomorrow's trading session. Welcome back to Markets Forward on CNBC TV18. Now let's go across to the key corporate voices for the day. And first up, we had BSE. The management reasoned with its decision to go ahead with the Thursday expiry. It stated that since global market expiries are on Thursday or Friday, the decision to go ahead with Thursday expiry was not a bad choice. Added that the exchange gained market share when the expiry was on Friday. Also claims that products tend to trade more on expiry days, and the exchange is now aiming to increase brokers to 700 and foreign participants to over 500.
We also spoke with the management of Punjab National Bank. The management does not expect challenges in the liability side, adds that due to rate cuts, the net interest margin will be impacted in the first 2 quarters. The short-term impact on NIMs would be in the range of 5 to 7 basis points, and then they will improve from the second half of FY26. The lender says recovery for the bank is strong and well on track to achieve the guided range of recovery this year. They're confident of reasonable growth across the system and guides for credit growth to be around 12% for this financial year.
Next up, we also spoke to CEAT. The management says that the domestic rubber prices continue to hold up even as international prices slide, as it expects real impact of lower input costs to start coming in from the second quarter onwards. CEAT reiterates its guidance, saying double-digit growth will continue even as demand remains mixed. That's not all. The growth from US is expected to come back in the coming quarters. The tire maker continues to see healthy growth in Europe and Latin America, which are CEAT's big markets.
All right, with all the corporate corner that we had, all the corporate commentary, we will look to wrap up on this edition of Markets Forward. But as we do that, let's get you some key market events to watch out for. We have Ria standing by with all that you need to know for tomorrow. Ria.
Well, yes, big day on the global economic calendar. In the UK, all eyes on the Bank of England's interest rate decision, while over in Europe, ECB President Lagarde is set to speak in Kyiv tomorrow. In the US, it's a major Fed day, interest rate decision, FOMC economic projections, as well as a press conference by the Fed Chair Powell is what we'll be watching out for. But remember, it is Juneteenth, so the US financial markets will remain closed tomorrow. Back home in India, we've got Infibeam Avenues, Nexus Select Trust, as well as Thirumalai Chemicals, which will be holding board meetings tomorrow to consider fundraising proposals. On the corporate front, Siemens Energy will debut on the bourses tomorrow. Britannia Industries is holding an investor meet, and IFL Enterprises opens its rights issue for shareholders. And finally, Commerce Minister Piyush Goyal begins his official visit to the United Kingdom today, scheduled for June 18th and 19th.
All right, take that point, Ria. Thank you so much for that. With that, we are out of time on this edition of Markets Forward. Thank you so much for watching. You stayed into CNBC TV18. More news and updates on the other side.
Hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening. Thousands flee Tehran after a new wave of attacks. Israel claims to have struck factories producing centrifuges and weapons. President Trump demands Iran's unconditional surrender and considers the possibility of direct US strikes. Iran's supreme leader says that the battle begins as the conflict enters the 6th day. Global markets trade mixed as geopolitical tensions rise. Investors await US Federal Reserve's rate decision later tonight. Crude oil prices remain firm, with Brent hovering around $76 per barrel. Sensex and Nifty end with marginal losses after a volatile session. Financial stocks outperform, but mid-caps underperform. Prime Minister Modi and President Trump hold a 35-minute phone conversation. Modi tells Trump India never has and never will accept third-party mediation on Pakistan dispute. Clarifies that no discussions were held with the US as a mediator or a trade deal during Operation Sindoor. President Trump is scheduled to host the Pakistani Army General at the White House today. India and Canada take the first step towards resetting the strained relationship. Both nations agree to appoint ambassadors after Prime Minister Modi meets Prime Minister Carney. The diplomatic ties were scaled down after Canada alleged India's involvement in the killing of a Sikh separatist in 2023. 6 days since the devastating Air India plane crash, 190 bodies have been identified as the DNA matching continues. 159 bodies released so far. Vishwas Kumar, the sole survivor in the plane crash, has been discharged from the hospital. India's aviation regulator says a surveillance conducted on Air India's 787 fleet following the Ahmedabad plane crash did not reveal any major safety concerns, but raises concerns over recent maintenance-related issues reported by the airline. At least 70 people waiting for food assistance killed by Israeli forces in the deadliest attack on aid sites. Reports suggest that more than 300 people have been killed at food assistance centers run by Israel and the US in the last 3 weeks. Government announces a 3,000 rupee annual pass for FASTag, which allows 200 trips on national highways. The pass will be available only for non-commercial vehicles like cars, jeeps and vans. Well, the top story this evening, the Israel-Iran conflict has entered the 6th day and the United States is considering direct involvement. Israeli Defense Forces claim to have struck factories producing centrifuges and weapons. Major explosions were reported in Tehran overnight. The extent of the damage remains unclear. Israeli Defense Minister said that Iran's supreme leader could face the same fate as former Iraq President Saddam Hussein. Meanwhile, Iran fired a pair of ballistic missiles, barrages, at Israel after Supreme Leader Ayatollah Khamenei warned that the battle had begun. Sirens and explosions were heard over Tel Aviv. Israel said it intercepted most of the missiles. Khamenei also warned that Iranians will show no mercy to what he referred to as Israel's terrorist Zionist regime. The Iranian leader's comments came after US President Donald Trump demanded an unconditional surrender. Iranian media reports suggest that Khamenei has handed over key military powers to the Supreme Council of Iranian Military and relocated to an underground bunker. As per reports, Trump is also considering a range of options, including the possibility of direct US strikes on Iran. The US will shut its embassy in Jerusalem starting today till Friday. Meanwhile, the G7 summit in Canada concluded with a broadly worded statement that called for a de-escalation in tensions after Trump's early exit. It also said that Iran cannot be allowed to obtain a nuclear weapon.
We do not want Iran to get nuclear weapons or have ballistic capabilities. I believe that the biggest error today is to seek a regime change in Iran through military means, because that would lead to chaos. Therefore, our responsibility is to resume discussions as quickly as possible to restore a framework for addressing the nuclear and ballistic issues. This is what France has consistently done for the past 10 years.
US President Donald Trump called for Iran's unconditional surrender Tuesday, ratcheting up tensions and marking a new escalation to the air war between longtime enemies Israel and Iran, now into its 6th day. After meeting with his National Security Council Tuesday to discuss the conflict, Trump wrote on Truth Social, "We know exactly where the so-called supreme leader is hiding," referring to Iran's Ayatollah Ali Khamenei. While he said there was no intention to kill Iran's leader for now, he added, "Our patience is wearing thin." Minutes later, he posted, in all capital letters, "Unconditional surrender." Trump had spoken to Israeli Prime Minister Benjamin Netanyahu by phone on Tuesday, according to a White House official. Meanwhile, the US president also dismissed a verdict by his spy chief, Tulsi Gabbard, in March that Iran was not developing nuclear weapons. Responding to reporters on board Air Force One Tuesday, Trump said, quote, "I don't care what she said. I think they were very close to having one." In clashing with his spy chief, Trump now appears to side with Israeli Prime Minister Benjamin Netanyahu's justification for launching strikes last week on Iranian nuclear and military targets. Iran expert Trita Parsi, the executive vice president of the Quincy Institute in Washington, D.C., says the latest developments have the U.S. on the brink of a major escalation and that the Iranians likely won't submit to Trump's demand.
If they don't trust that surrender actually is an option because they believe that once they were to agree to it, the Israelis would not be content with just destroying the nuclear program. They would go after the missile program, and then it would snowball to a whole set of other things. And as a result, I don't think that they think is an actual option. So if Trump goes and insists on surrender, if talks even take place, I think it will ensure war.
The U.S. is bolstering its forces in the Middle East with more fighter aircraft. Those include F-16s, F-22s, and F-35s, according to officials Tuesday, who stressed the jets will be used defensively to shoot down drones and projectiles. A large buildup of tanker aircraft to Europe and deployment of an aircraft carrier have also given additional options to Trump as the war continues. Iran denies seeking nuclear weapons and has pointed to its right to nuclear technology for peaceful purposes, including enrichment, as a party to the Nuclear Non-Proliferation Treaty. Israel's Netanyahu, meanwhile, has stressed that he will not back down until Iran's nuclear development is disabled. Ever since Iran-backed Hamas attacked Israel on October 7, 2023, and triggered the Gaza war, Tehran's regional influence has waned. That was as Israel pounded Iran's proxies, from Hamas in Gaza to Hezbollah in Lebanon and the Houthis in Yemen.
Well, meanwhile, global markets traded mixed as tensions rise in the Middle East. Indian stock markets ended with minor cuts after a volatile day. The Sensex fell by 139 points, while the Nifty held on to the 24,800 level. The Midcap index underperformed, keeping the market breadth in favor of declines. Now, speaking of market triggers, the U.S. Federal Reserve is set to deliver its policy decision today. According to a CNBC Fed survey, majority of respondents expected Fed to keep rates unchanged. The percentage of respondents expecting a recession in the U.S. has fallen to 38% from 53% in the month of May. However, USA's GDP in 2025 is expected to grow at 1.13%. That's a fall from expectations of a growth of 2.4% when respondents were polled in January. 54% also expect the US to reach a new trade deal with China in the coming months. And in the commodities space, crude oil prices remain elevated as the Israel-Iran conflict intensified for the 6th consecutive day. Prices are now close to a 5-month high. The market remains worried about supply disruptions in the Strait of Hormuz, which carries a fifth of the world's seaborne oil. India's chief economic advisor, V. Anantha Nageswaran, has said that higher oil prices raises essential risks for India.
The current conflict between Israel and Iran is an important development which may not be very very good for us, because what it has done is in the last 1 week or so, the price of crude oil has gone up to almost $73, $74 per barrel. It was in the low 60s. We were hoping that it would go below 60 because OPEC countries were looking to increase production for the third time in July. So this obviously raises important risks for India.
Well, Prime Minister Narendra Modi and US President Donald Trump held a 35-minute phone conversation after Trump cut short his G7 summit trip to Canada. This marked the first direct conversation between the two leaders since Operation Sindoor. As per a statement by Foreign Affairs Secretary Vikram Misri, PM Modi maintained that there was no mediation by the United States in the India-Pakistan conflict or any discussion about the trade deal during the conflict. Prime Minister Modi also stated that India has not and will not accept any form of mediation by a third party. President Trump accepted Prime Minister Modi's invitation to attend the next Quad meeting.
प्रधानमंत्री मोदी ने राष्ट्रपति ट्रंप को स्पष्ट रूप से कहा कि इस पूरे घटनाक्रम के दौरान कभी भी किसी भी स्तर पर भारत अमेरिका ट्रेड डील या अमेरिका द्वारा भारत और पाकिस्तान के बीच मध्यस्थता जैसे विषयों पर बात नहीं हुई थी। सैन्य कार्रवाई रोकने की बात सीधे भारत और पाकिस्तान के बीच दोनों सेनाओं की एग्जिस्टिंग चैनल्स के माध्यम से हुई थी और पाकिस्तान के ही आग्रह पर हुई थी। प्रधानमंत्री मोदी ने जोर देकर कहा कि भारत ने न तो कभी मध्यस्थता स्वीकार की थी, न करता है और न ही कभी करेगा।
A very important development between India and the United States. Prime Minister Modi had a 35-minute phone conversation with US President Trump. This was the first conversation between Modi and Trump after Operation Sindoor. The phone call was initiated by the White House after Trump had to cut short his G7 visit due to escalating tensions between Iran and Israel. Prime Minister Modi and Donald Trump were supposed to meet in person, and because that could not happen, the White House initiated a phone call. According to Foreign Secretary Vikram Misri, Trump expressed condolences for the loss of lives in Pahalgam attack and also vowed to support India against terror. As per Misri, Prime Minister said that India had only targeted Pakistani terror camps in the intervening night of 6th and 7th of May as part of Operation Sindoor to retaliate against Pakistan for the Pahalgam attack. Narendra Modi said India's actions were measured, precise and non-escalatory. The Prime Minister also clarified and reiterated that no trade-related topics were discussed in connection with Operation Sindoor between India and the United States. Prime Minister also said that India never has and never will accept third-party mediation. During the phone call, Prime Minister made it clear that any further acts of terrorism against India will be treated as an act of war. President Trump also invited Narendra Modi to visit US on his way back from Canada, but the Prime Minister declined the invitation due to pre-existing commitments. Donald Trump has also accepted India's invite for the Quad summit in Delhi later this year. What India would also be closely watching out for is the meeting between Pakistani Army Chief General Munir and Trump at the White House. President Trump will be meeting Pakistani Army Chief over lunch. Now, this comes after White House denied inviting Munir to the US Army's 250th anniversary celebrations on the 14th of June. Munir is also expected to meet US Secretary of State Marco Rubio and Defense Secretary Pete Hegseth.
India and Canada took the first steps to reset the strained relationship. Both nations have agreed to appoint ambassadors after Prime Minister Narendra Modi met with Canadian Prime Minister Mark Carney. The diplomatic ties were scaled down after Canada had alleged India's involvement in the killing of a Sikh separatist in 2023. Sanjay Suri now joins us from Alberta, Canada, with more on the talks held between the two prime ministers.
After 2 years of a near collapse in relations between India and Canada, the prime ministers of both countries took a giant step forward at the G7 here in Kananaskis with the decision to designate new high commissioners to restore diplomatic services to citizens of both countries. And this marked a major diplomatic breakthrough after a diplomatic war of sorts over the past couple of years when each expelled the High Commissioner of the other and other staff. Foreign Secretary Vikram Misri said the move to appoint the new High Commissioners was only the first in a series of calibrated steps agreed to restore ties towards normal. But already agreement has been reached on a wide number of areas, and these range all the way from cooperation in critical minerals, clean energy, digital infrastructure, AI, supply chains, even more. According to the Canadian readout, the two leaders reaffirmed the importance of Canada-India ties based upon mutual respect, the rule of law, and a commitment to the principle of sovereignty and territorial integrity. Carney, according to the Canadian readout, raised the issue of transnational crime and repression, security and the rules-based order, and that clearly all arose from Canadian concerns since the Niger killing 2 years back. Carney has cautioned that the meeting was foundational, in line with the Indian view that it's all calibrated, and Carney said that a lot of work needs to be done yet ahead. But he also said that the meeting was frank, suggesting that views were expressed rather bluntly.
Well, with that, it's time now for a short break. But coming up, India's aviation regulator says that a surveillance conducted on Air India's 787 fleet following the Ahmedabad plane crash did not reveal any major safety concerns. More on that when we come back. Welcome back. Now, nearly a week after Air India AI-171 plane crash in Ahmedabad, DNA matching has been completed for 190 victims so far. The Boeing 787 Dreamliner aircraft had 242 people on board. Mortal remains of 157 individuals have been handed over to their families. As per the Superintendent of Civil Hospital, Rakesh Joshi, the process of matching the DNA of other victims is still underway. The sole survivor of the plane crash, Ramesh Vishwas, has been discharged from the hospital late last night. And India's aviation regulator, DGCA, has said that 24 of the 33 Boeing 787 aircraft operated by Air India have cleared enhanced safety inspections. CNBC-TV18 Shivani Bazaz is standing by with the latest updates on the enhanced surveillance. Shivani, give us a rundown of where the safety checks stand and what are the takeaways for the airline.
Well, yes, in the aftermath of Air India's Boeing 787 Dreamliner crashing in Ahmedabad, India's aviation regulator met with the airline's top brass to review the airline's safety protocols, maintenance systems and recent operational issues, especially of its fleet of wide-body Boeing 787 Dreamliners, which are used for long-haul flights. And the regulator has confirmed that so far, the surveillance of the fleet has not revealed any major safety concerns. The DGCA says that the aircraft and the maintenance systems used on them were found to be in compliance with existing safety standards. So far, these enhanced safety checks have been completed on 24 of the airline's 33 Dreamliners as of 3 p.m. on the 17th of July. 4 more were in various stages of the exercise at various MRO facilities and will be released from their respective maintenance hangars only once these checks are done and the aircrafts are cleared. The rest are scheduled to undergo these checks as soon as they return to India. However, the DGCA did raise some concerns over recent maintenance-related issues that have cropped up and been flagged at the airline internally. In this context, the aviation watchdog has advised Tata-owned Air India to strengthen coordination between engineering, operations and ground handling teams and to ensure the timely availability of spare parts to minimize passenger delays. Now, Air India has cancelled 83 flights between the 12th and the 17th of June. Of these, 66 flights were to be flown using Boeing 787 Dreamliners. Some flights have also been delayed. The airline has clarified earlier that these have not been due to technical snags. The DGCA has now confirmed this, saying the enhanced security and safety checks, maintenance schedules and new airspace restrictions like the closure of Iranian airspace have forced the airline to rework its flight schedules. Back to you.
Hindustan Zinc shares fell after its promoter Vedanta sold 1.6% equity in the company worth 3,000 crore rupees in block deals. 1.71% equity changed hands at 460 rupees per share in block deals. Vedanta said that it sold stake to strengthen its balance sheet. Hindustan Zinc has also said that it will invest 12,000 crore rupees to increase zinc, lead and silver output. The company intends to raise production by 250,000 tons per annum over the next 36 months. And Transport and Highway Minister Nitin Gadkari has said that the government will introduce a FASTag-based annual pass priced at 3,000 rupees. In a post on X, Gadkari said that the pass will be issued from August 15th and will be available only for private vehicles. The pass will be valid for a year after date of activation or up to 200 trips, whichever comes first. The CEO of BSE believes a Thursday expiry of weekly futures and options contract is not a bad choice. This comes a day after SEBI approved the stock exchange's proposal while allowing a Tuesday expiry for rival NSE. Ramamurthy, the CEO of BSE, says that there are advantages in shifting the expiry days to Thursdays.
And if you look at the international scenario, B is US, B is Eurex, be it Korea, Taiwan, Kospi basically I'm talking about, Japan, many of them have their expiries on Thursdays or Fridays. So if you're thinking of relative value trading, Thursday becomes an ideal day.
Well, here's a look at some global headlines. At least 70 Palestinians have been killed and hundreds have been injured after Israeli forces opened fire on crowds waiting for aid in Gaza Strip's Khan Yunis. The attack involved tank shells, drones and machine guns. Since the Gaza Humanitarian Foundation began distribution of aid in May, over 300 people have died while trying to collect aid. Hospitals in the region are overwhelmed and severely under-resourced. Ukrainian President Vladimir Zelensky left the G7 summit without a joint statement of support from members or a chance to meet US President Donald Trump amidst the war with Russia. Zelensky told G7 leaders that diplomacy is in crisis and urged them to push the US President Donald Trump to use his influence to end the war. However, the silver lining for the Ukraine was that Canada announced $1.47 billion in new military assistance for Kyiv, as well as new financial sanctions on Russia. Mount Lewotobi-Laki-Laki in Indonesia has erupted, sending towers of ash cloud 11 kilometers in the air. The smoke from Volcano was visible from cities nearly 150 kilometers away. No casualties have been reported so far, but authorities have issued a high alert. Residents have been warned to stay cautious, as heavy rains could trigger lava flows. Dozens of flights to and fro from Indonesian island of Bali have been cancelled or delayed. And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
Let's talk money.
Hello and welcome to another edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, India's retail investors are all set to get a brand new asset class to invest in. This new product will be a bit more sophisticated perhaps than regular mutual funds, but hopefully not as complicated as PMS or AIF products. I'm talking about an asset class that will be known as the specialized investment funds, an asset class that will look to bridge the gap between mutual funds and products like PMS, which is Portfolio Management Services, or AIFs, which are alternate investment funds. Now, we have to discuss what the risks are, what are the tax implications, what are these new, more sophisticated strategies involved, and should we investors really care? Well, to do this, I have two very special guests with me in the studio, Radhika Gupta, MD and CEO of Edelweiss AMC, and Swaroop Mohanty, Vice Chairman and CEO of Mirae Asset Managers. Thank you so much, Radhika and Swaroop, for joining in. It's a pleasure to have both of you in person with me in the studios. And with your presence together, I know this is an exciting moment for investors. What are we looking at? Lady, let's start with you.
Thank you. It's lovely to be here. I think, I usually have more mixed opinions about new things that are launched. But with the SIF launch, I am reasonably bullish. You said it's a middle path between MF and PMS and AIF. I actually think that for the consumer, it brings the best of both worlds. What and I came from an alts background, so perhaps this is closer to heart, but I think what PMS and AIF offered is flexibility in investments, flexibility in subscription redemption, how you use credit, how you use derivative. But what mutual fund offered was comfort. People are comfortable with the structure. You can do SIPs, huge sense of tax advantage. The consumer doesn't pay any tax. I think SIF gives you the flexibility that that AIF and PMS had, with all the comfort that mutual funds have. And the 10 lakh ticket size, I really think opens this up to consumers, a much wider range of consumers, because when you were talking AIF, you were talking 1 crore investor, which
Minimum
means someone with 10 crore net worth to hoga, because you won't put more than 10%. So that versus someone with a 1 crore net worth, I think the ambit of people that we can speak to is very good. So I think in India's asset management evolution, you saw the evolution of passives, multiple investment styles, smart beta. I think this is a welcome step in the evolution, and I'm glad the mutual fund platform has been chosen, because it's a platform people have gotten comfortable with.
Okay. Well, the objective is to make it as simple as possible for people to understand, because there are nuts and bolts and nuances of this new product. Swaroop, what are your opening thoughts? Do you see this as a big stepping stone, or well, it'll be one more product that AMCs offer?
No, it's a step forward, both for the investor as well as the asset manager. I mean, look at it, we are graduating forward into a slightly more evolved space. I won't say complicated or easy space, but for an asset manager, it's great to start expressing ourselves into new areas of investments. The regulations have made it far more broader than what we used to do. The risks are very different, so how we manage it, how we look at the whole space will be different to each fund managers. And I think it's the emergence of style-based investing coming out from each fund houses. So it's a great platform to express our backend to the investors. At the same time, from the investors' perspective, and I say this with all humility, when I look at the last 2-3 years in particular, when return chasing has become so blatant, risk understanding needs to go up. Finally, you start your investment journey thinking it's a process of return generation, but it's a process of risk mitigation. I think this will set the tone for people to understand risks more, and the safer or the better approach to risk will be a better approach to investing. So it's a great step forward, and I echo what Radhika says, and it's fantastic that mutual funds were considered to be this vehicle for the future.
To offer this new product. So I think the first checkpoint, I think we've all taken note of, that you need to have a minimum investment threshold of 10 lakh rupees, which is not too much if you're looking at the mass affluent, households of India. Most of us are investing, that amount or maybe higher across mutual fund schemes. But let's understand the nuts and bolts of this product. So what the original understanding was that this product, the SIF, will have more flexibility in terms of taking long short strategies, more derivative positions, something known as naked shorting in the market. Radhika, if you could just expand on this, what are some of the basic differences, say, or in architecture perhaps, between regular MFs and this new product?
So I think there are three differences that consumers should know about. One is derivatives. Now, mutual funds were allowed to use derivatives. It's a myth that they were not. Arbitrage funds use derivatives, balanced advantage funds use derivatives, but they use derivatives for the purpose of hedging. They don't use the derivatives for the purpose of expressing a view. So if I was long stock A by 50 rupees, I had to be short stock A by 50 rupees in absolute amount. Now I can be short stock B by 10 rupees up to the tune of 25%. So in that sense, I'm allowed to express a negative view or use derivatives beyond the purpose of hedging. So that I think is the number one flexibility. So suddenly, you know, if you look at the SIF categories, you take a category which was a normal flexi cap category, but you are allowed to apply derivatives. You take a category, they've got one called X top 100 long short. It's like a mid and small category of the old mutual fund, but suddenly I can express a view that is negative.
And this is capped at 25%,
25%.
right? The total short position, so to speak.
Is capped at 25%.
Okay.
So that's one. The second flexibility is around exposure to credit. Now, most of the conversation around SIF has centered around equity, long, short, etc., which is okay. But there are substantially larger relaxations for credit, which is a good thing. And maybe you will see the revival of credit funds post 2018 in some format. We saw the private credit industry grow in a big way. The third, which is related to both of these, is that mutual funds are daily subscription and redemption instruments. Here, depending on the category, you don't have to provide daily redemption. The asset manager can choose to provide bi-weekly redemption, or in the case of a fixed income fund, weekly redemption. So many of the issues of the old of having illiquid credit but having daily liquidity perhaps can be mitigated more sensibly.
To simplify this, what it means for me, the investor, is that there could be products which don't allow me to redeem on a daily basis. It could be perhaps once a week or once a fortnight.
And which is why it's very important in SIF, and we can talk about this more, to read the risks and understand the fine print, because it will not be the same.
No, absolutely. In fact, we should try and flash that. I have that disclaimer that the regulator has also put out. I'll read this out since we're just starting the conversation. Here's what SEBI is saying, and there's a mandatory disclosure that will go with all of these new funds. Investments in specialized investment funds involve relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all the investment strategy related documents carefully before making the investment decisions. I've taken more than 30 seconds to say it for sure. So, Swaroop, come in on this. I mean, and expand on some of these points, that there are more sophisticated strategies, some of the derivative strategies that Radhika alluded to. From an investor's perspective, I'll say, क्यों करना है? If I'm getting more return, तो ठीक है. Otherwise, why do it?
See, at this moment, forget SIFs. If somebody is not investing, it's that person's problem. It's probably the best phase of the country, and the best way to get that growth of the country into a person's portfolio is probably the capital markets, right? And this offers a far evolved position, like I've been using the word evolved, for the investor. Now, a lot of investors have different risk profiles, right? And this is a product which is catering to a slightly evolved, somebody who's been investing for 20, 25 years in mutual funds for that, can look at these in a far graded manner than they used to. Now, here's the thing. Now, suppose the flexibility is for 25%. We need not go 25%. Now, suppose the option is to go 12% in lower credit rating papers. We need not go 12%. Each fund will have its own way of expressing that same risk profile to the investor. And hence, the need for the investor to read a little bit more about this is very important at the beginning of this journey. And once that, and it's no rocket science to understand all this. Okay, guys like me will come and pose that it's a rocket science vehicle to make ourselves more important. But just a little bit of reading can ease out a lot of things. What can happen through these products will be far more evolved than what we've put on place in mutual funds is a submission.
So derivatives is one important aspect that Radhika touched upon. I believe that there is a greater exposure that these funds can take in REITs as well. For instance, REITs in REITs. Anything you want to add?
All those exposures have doubled. I mean, 20% we can go up to.
Okay.
And that's why the flexibility on redemptions. Yes. Some of the underlying assets need not be as liquid as we have to take on the mutual fund side, because we have to give redemptions on a daily basis. And that gives the difference of flexibility to the fund management. One can dig deeper into these papers and hence aspire to give a higher yield, right? And that's where the maturity of the product comes in, and it's up to the investor to understand why the need for periodical redemptions. It's for the betterment of the investors. See, in any portfolio, there are three types of investors. The investor who's coming in, the investor who is there, and the investor who is leaving. The fund manager has to be fair to all three at all point of time. Now, if the product is at the underlying is a little bit illiquid, then the person should be able to sell it, realize that value for the person who is going out, and also for the essence of investors who stay back.
We're staying back.
So all these have been thought through, and what has come out is a far suitable product for the underlying product, for the portfolio from an investor's perspective.
Okay, I want to quickly go over the categories, the strategies that the regulator is allowing. Like that, for mutual funds, there could be one large cap fund, one mid cap, one small cap. So regulators very clearly defined what kind of funds can be launched by AMCs on the mutual fund side. Similarly, now they're talking about very specific strategies that can be launched within an SIF. So let's start. So equity-oriented strategies, debt-oriented strategies, and hybrid strategies, similar to mutual funds. So Radhika, let's start with the equity-oriented strategies. What are we talking about here?
So I would just break this if you just look at mutual fund parlance to simplify. They have equity. Now they have three categories. They have an equivalent, or they have something called equity long short. What is that to me? That is a flexi cap fund in the mutual fund world with additional flexibility around derivatives.
Okay.
You can go everywhere, but you can also use derivatives.
Okay.
Then they have a category called X top 100.
X top 100 long short.
Long short. Now again, that is your mid and small cap. You used to have, we have mid cap and small cap. We used to have a mid and small cap category in mutual fund. We used to run one fund. That's mid and small cap. So you buy beyond the top 100, but you have the flexibility to short. I want to add one point to what Swaroop said. Just because you have 25% flexibility to short doesn't mean you're always 25% short.
Right.
You could like a stock for the long term, for instance, in the mid cap space, but have a negative view for a month because there's an event going on, and then take a short position on it. So it's not mandatory short, it's flexibility to short. So that's your second. And there's a sector rotation category, which in my view is like a business cycles category of the old. But there you were expressing views, you were taking very concentrated bets on sectors. Here you can take negative bets. So I can be long financials, short technology. So that's your equity category in a sense. It's your old flexi cap, mid and small cap, and business cycles with the layer of shorting.
With the layer of shorting and the new nomenclature. Got that. There are debt-oriented strategies as well. There's a debt long short, and there is a sectoral long short fund as well. So do you want to sort of explain that a little bit?
Again, same analogy. The debt long short is like your old dynamic bond fund, but you can use interest rate future. Flexible in debt in terms of where it can go in terms of credit and duration.
Also interest rate futures. You can
use interest rate futures there. So it's dynamic bond fund with shorting. That's shown up. And then the second one is your sectoral. I think that will probably be used for credit kind of funds because you can do financial services. So all your HFCs and BFCs, etc., kind of exposure can come out. So again, dynamic bond fund and credit fund with shorting.
Oh, okay. All right. So
and liquidity.
Okay. So those would be some of the debt strategies. Then in this SIF, there are also hybrid strategies, which the regulator is allowing. There is an active asset allocator long short fund and a hybrid long short fund. Now, these products will evolve as we go. But Swaroop, I mean, broad thoughts on how they could look like, what they could be like?
Like you said, I mean, early days, and the beauty of this product is, every fund house can express the same category very differently. Unlike, in the mutual fund side where the categorization has defined a lot of it, and ideation is somewhere taking a back step, and that's the beauty of this side. Radhika can take a completely different view of the same category than what we can take. Right, and both can be right.
25% short on that particular one sector and that sector fund. You could be long on it.
Yes, absolutely. And that is why I said it is evolving of the entire environment. And that's why we all have to go for a re-examination, passing thing of the whole thing. The environment will be reassessed. All of us have to go through
and a new name.
New name, everything. And you see, when you look at the new name, it's very important that it's been given a completely new perspective with our parent not being, we can carry, say, Platinum by Midday Asset, but Platinum has to evolve.
Well, which is very important. Let's tell that to our viewers as well, that we have two of these SIF identities that have been launched so far in the market. The one that Midday has put out, as Swaroop is saying, is called Platinum SIF, and the one that Edelweiss has put out is called Altiva SIF. Right?
Yes.
Individual identities.
Individual identities.
And that's how these funds are going to be.
No, but I think it's important to have the individual identity because mutual fund, especially with Sahi Hai and everything, and I'm sure Swaroop agrees, has a connotation that it's very simple, it's very standardized. So with due respect, a Midday Midcap and Edelweiss Midcap, there's not that much difference in what we do.
You play in the same
it's the
250
same
stocks or, yeah,
and I know I'm going to get my money back in one day. There's that promise.
Yeah,
So with SIF, I think for the consumer and the distributor, the challenge is the nuance will be a lot more. He's been saying evolved, I'm saying nuance, but you can't just rank sort to X top 100 funds. You really have to look deep.
Absolutely. And I really hope that viewers are listening, because viewers, if you want to be in these sophisticated products, you have to do more homework for sure and ask more questions. And we'll continue with our questions after a very quick break, because we need to understand taxation and also general sense of return profile when we're looking at these new SIFs. Back in just a moment after the break.
Let's talk money. Let's talk money.
Welcome back. Well, we're in the midst of a very, very interesting conversation on a brand new product that's about to hit the market for all of us retail investors. It's the Specialized Investment Fund, the SIF as it's being called, and AMCs are in the process of launching this out. Remember, minimum threshold is 10 lakhs. The strategies are a little more sophisticated than ordinary mutual funds, but then can the returns be enough to sort of justify that higher risk? That's what we're discussing. As I was thinking about our conversation in the previous segment, Radhika and Swaroop, it seems very important to me that the knowledge building around this product is going to be critical, because these are sophisticated strategies. And let's face it, when we're looking at investments, 90% of the conversation with our advisor or distributor is focused on return. Milega kitna? So how will, this will have to be dealt with differently, won't it, Radhika?
It needs nuance. I've been saying that again and again. And, we as a brand under Altiva are spending a lot of time and effort in consumer training and in distribution training. I know distribution has to pass a certain set of exams, and many of them already are, but we are spending the effort on doing that. the greatest tragedy would be if SIF is seen as which PMS was, as a route to, I will get higher return.
Yeah.
Actually, SIF is not about that. What's the flexibility you've been accorded in the equity side? It's derivatives. Derivatives may be used to give better risk-adjusted returns. So, if in an arbitrage fund, in mutual fund, I was getting X return, maybe I can use some more sophisticated strategies to get arbitrage plus. Maybe I can get an equity-like return with lower drawdown than equity. But these are nuanced conversations.
Yeah.
And we've moved to a world, as I said, where we have this sorting investor. You go to a website and you sort which is rank 1 fund.
Past 3-year returns.
No, past 1 year return.
Or past
Trust
1
me,
year
no. And I'm saying that is not healthy in mutual funds because all of us have different styles. It's even more unhealthy in SIF because we talked about equity long short. He could run a fund with 45% net equity exposure and I could run a fund with 0% net equity exposure. He may obviously have a higher return, but are the risks comparable? So the conversation has to be about risk-adjusted return.
So, Swaroop, how will the investor navigate this? And, isn't there, I don't want to be negative, but isn't there a very clear risk of mis-selling as well if the distributor doesn't explain all of this nuance and the risks that Radhika is speaking of?
I say that the beauty is we are at the beginning of the whole thing, and a lot of that responsibility lies on us AMCs to form partners who will go out and propagate the risk. I mean, while we were discussing this, I was reflecting on myself as a salesperson. When I started my career, I was very afraid of talking about risks. But as I became more open about talking about risks, I developed better partnerships and better investors. And hence they stay with us longer, as simple as that. Till we are not afraid or think that risk is a bad thing, risk is actually the best thing that we can talk about. The more the customer understands, the bigger the wallet share will be. And so at the beginning, I think a lot of that responsibility lies with us. And like Radhika said, I think all of us will put our efforts to educate people. And more important, I think it's also to tie up with people who will understand and propagate it in the right manner. That responsibility lies with us, I think.
So now let me ask you, what do you think will the sales pitch be? I'm sure your teams are already working on this. And when we talk about risk-adjusted return, see, the mutual fund investor over the years is very clearly understood. Stay in equity funds, and I'm talking only equity right now. Stay invested 5, 6, 7 year period. 12 to 14%, maybe in good years, 15%, basically 12, 13% compounded CAGR. We've, come to understand this and internalize it. Explains how SIPs are still steady in volatile markets as well. So what is the pitch going to be to the SIF investor now? What should be a realistic risk-adjusted return to watch out for?
See, finally, there is a pyramid of the investor breakup. I mean, at the bottom is participation, where you come in and buy the market, right? Above that, you come into a mutual fund category, which is broadly I can say on the verge of being a commoditized product because it's very similar to each other. Above that, you come for these pretty specialized and very skilled kind of products, which PMS AIF were reached to a certain extent, and we now come into that entire picture. An investor has to choose where he or she wants to be, right? And it's that mitigation of risk which defines a better investor.
See, but Swaroop is not talking about the risk-adjusted
average
return expectation.
See, there is this cliched.
He should not talk about
there is
it.
that cliched statement that higher the risk, higher the return. The statement should be higher the risk, higher should be the return.
Absolutely.
Now, in these three parameters, if the risk-adjusted return is not higher, then why should the investor come? It's up to us to come and say that because you are taking this additional risk, hence the chances of this return being higher are there. And that's something which we have to demonstrate. Right now, it's not right to talk because we have to demonstrate it and build track record. I'm sure the talent of the industry is such, and we are coming to it after 20, 25 years of doing that same business. But now, since we have the flexibility, maybe my initial thought is a lot of us will approach it with a little bit of caution, but then the fund managers will be free to express themselves. And trust me, the same manager will express himself or herself far broader than what we used to. So when this product unfolds and the communication becomes clear, clearly the need for a person to go up the risk ladder will also be justified is the simple point I'm making.
Almost running out of time, but Radhika, very quickly on this point of return expectations, and I'm saying compounding, 5 years if someone is in this product, it would be fair to expect, I don't know, maybe at least more than 13, 14%? Because MFs are giving you 12, 13%, right?
So here's where I disagree, and I'm glad Swaroop didn't answer the question, because when the question is asked in a normal mutual fund, what is your return expectation? Kitna return dega? This is India. I go crazy because I'm like, kaun sa mutual fund? Mutual fund can be small cap fund and it can also be equity savings fund. And expectations are very different. Now, mutual fund has a wide variety of categories. SIF is so much wider. So
the equity SIFs, let's
I'm
say.
telling you, in an equity SIF, which has 80% equity exposure versus an equity SIF that's long short and has 20% exposure, the return will be very different. So at least our intent with this is, under Altiba, one, we're not going to rush to fill all 7 categories in one go. This is not NFO central. Each category, in my view, requires very different capabilities. It's not like you have a consumption fund and a healthcare fund and an IT fund and mid and small. Each category is a different capability. We'll launch a category, educate on the so if we're launching something in the hybrid category, we'll educate on the nuances of that category. What's the right time horizon? What's the risk you're taking? What's the return you could get compared to a traditional instrument? What could go wrong? And we'll do that for a while.
Okay. Out of time, I realize we need many more classrooms. The journey has only begun, right?
Yes.
But in 10 seconds, broadly, taxation is similar to what we have in mutual funds, right?
As of now. Product.
It's a mutual fund product with a new set of rules.
New set
or
of rules.
Different category of mutual funds.
Okay, fantastic. I think this is a great starting point, and thank you very much, because now we have some, opening thoughts and understanding of what this new, lovely little animal is going to look like, and how it evolves is something that we have to watch out for. Thanks very much, and this is already an open invite for round 2, maybe a couple of weeks down the line, when some of these strategies start coming to market, and that's when we really need to pay attention and understand what they are and whether they suit our risk profile or not. Thanks very much, Radhika and Swaroop, for joining in. Promises to be, the first of many, many conversations on specialized investment funds. Well, viewers, with that, we have to take your leave. Do keep sending us your feedback, comments, and queries. See you again next week.
Let's talk money.
Hello and welcome to News Center. I'm Parikshit Luthra. Prime Minister Narendra Modi has told US President Donald Trump that India has never and will never accept third-party mediation with Pakistan on the issue of Kashmir. The Prime Minister conveyed this in a 35-minute phone call with the US President that was initiated by the White House. The Prime Minister also clarified that no discussions were held with the US on mediation or a trade deal during Operation Sindoor. This according to a statement by Foreign Affairs Secretary Vikram Misri. The Prime Minister declined President Trump's invitation to visit the US on his way back from Canada. Prime Minister Modi cited pre-existing commitments. President Trump accepted Prime Minister Modi's invitation to attend the next Quad meeting. The phone call came ahead of the US President's meeting with Pakistan's Army General Asif Munir, which is scheduled today. To take this forward, I'm now joined by Meera Shankar, former Indian ambassador to the US, and Pramit Pal Chaudhary, head of South Asia at the Eurasia Group. Thank you very much for joining us. Pramit, if I can begin with you, how do you think this conversation would have gone down with Donald Trump?
Well, I think for Trump, I think there's a recognition in Washington that partly out of ignorance, I would say, in an administration that lacked any South Asian expertise, there was an acceptance that the mediation, the talk of mediation, the talk of nuclear war, and so on by Trump had gone down very poorly in India. And we saw, for example, that when Indian parliamentary delegation had gone to America to try to explain India's position, they were met by US Vice President J.D. Vance. This was the highest ranking person to meet any of the parliamentary teams that had gone anywhere in the world. And I think that was a sort of olive branch from the United States saying, okay, we accept that the president had misspoken or had been poorly briefed on what was going on. And this was effectively accepted that this was an opportunity for Prime Minister Modi to, at least for his public audience back home, to make it clear that what India's position was, and let Trump accept this, that there was an error made. Neither side could really say error, but you saw that even after this explanation, Trump then invites Modi to drop by Washington on his return from Canada. A clear indication that Trump accepted that this was something that this was should we say, an explanation that he was accepting.
That's an important point. Ambassador Meera Shankar also joining us on the program. Ambassador Shankar, do you believe that somewhere Donald Trump wanted to make it up to Prime Minister Modi by inviting him to the White House, by making a gesture, saying that why don't you drop over to the United States while you're on your way back from Canada?
Well, could be that he wanted to make it up. Could be that he wanted to carry on his mediation efforts because he just had the Pakistan army chief over there and then picking up the thread. So we don't really know. And that's why Prime Minister Modi did not accept the invitation to just drop by in Washington on the way back. This is a bee in Trump's bonnet because he wants to claim success as a peacemaker, as a negotiator, and a deal maker. But his efforts in Ukraine and, of course, vis-a-vis Iran have not yet met with success or yielded results. So this was one kind of area where he thought that he could claim success. And it's something which predates his second term. It's right from his first term, I remember when Imran Khan was visiting Washington, President Trump offered his mediation to resolve the Kashmir issue. And the State Department at that time, well aware of India's position, that we want to deal with these issues bilaterally and that we do not welcome mediation, walked back the president's statement saying that this is not the policy. Obviously, mediation will be only if it is acceptable to all sides, etc. So they walked it back, basically saying this is not US policy. This time round, I think there's no one who can walk back anything that President Trump says. So let's wait and see. But yes, the fact that he reached out via a phone call to Prime Minister Modi because he could not meet him on the sidelines of the G7 summit, I think that was kind of a reaching out to him. And the Prime Minister made our position clear to President Trump, which till now, actually, we have not done very clearly. And so I think it's just right. Maybe our parliamentarians did, but it's not the same as it coming from the highest level of the government. So that leaves no political wiggle room, that this is our position.
Right. Pramit Pal, if I were to come to you again. Now, while we made our point very clear that it was Pakistan-sponsored terror groups that were behind the 22nd April Pahalgam attack, and India was retaliating in a precise and measured manner only against those terror groups in Pakistan on the intervening night of 6th and 7th of May, what we are seeing also play out in Washington, D.C. is that the President Trump's schedule shows a meeting at 1 p.m. United States time, Washington, D.C. time, with Asim Munir, the Field Marshal of Pakistan. Now, this is unprecedented. Protocol would never allow an army chief to sit down with the president of the country one-on-one over lunch. So, how would you describe this meeting at a time when U.S. also extending an olive branch to India?
Well, I think, I don't think that's a total surprise when you look at the record of America regarding Pakistan. The Trump administration and previous administrations have always made it clear that they have interests in maintaining a relationship with Pakistan. We've had odd points of time when there have been U.S. presidents or presidencies who are very hostile to Pakistan. President Biden was, for example, but that was over personal grudges that he held against Pakistan, not because of strategic concerns. And the Trump administration has made it clear that it sees Pakistan as useful, both on the counterterrorism front, and it's expressed some mild interest in mineral resources in Pakistan, though that's, I think, more of a Pakistani flag than anything else. Red herring, sorry. There is no, but I think what is also recognized, Trump is not particularly protocol driven. He does his own foreign policy, if you wish. And I think he knows very what he does. It's a statement of the reality of Pakistan that General Munir, Field Marshal Munir, has always been the most powerful person in Pakistan. Shahbaz Sharif came to power in a election rigged by the military. The leader of the de facto leader of the opposition, Imran Khan, is in jail because of Marshal Munir. So if you put all of that together, there is no doubt a reason that meeting will take place. The good thing for India is that Pakistan has very little to offer these days. Its economy is a shambles. It doesn't have much strategic depth, or doesn't provide in America once America's left Afghanistan. And it has very little role or anything to offer America in the long run. But nonetheless, we should not expect America to be dropping Pakistan because we have concerns about Pakistani terror. And we need to be looking only at the simple fact that India's economic growth rate, India's economy in the past 20 years ago, Pakistan's GDP is 1/3 ours. Today's ours is 11 times larger than theirs. There is virtually no American corporate interest in Pakistan whatsoever. And so Pakistan is basically playing a weakening hand in its relationship with the United States. It's doing a reasonably good job given all of this. But ultimately, I think that's going to be the telling game in a president, especially in an administration where money matters a lot.
Right. Ambassador Shankar, do you feel that Pakistan, which shares a border with Iran, is offering something to Pakistan? Because just a few days back, you had an Iranian general saying that Pakistan has promised Iran that if Israel were to drop a nuclear bomb on Iran, Pakistan would hit Israel as well. So even though Pakistan has completely denied it, do you think Pakistan has something to offer to the United States right now?
I think the main interest that the US has in Pakistan is because of its geographical location, where it borders Iran, Afghanistan, and China, and Central Asia. So this gives Pakistan some location advantage. But as Pramit Pal said, the economy is in a shambles. The polity is limping along, with the government propped up by the army from outside. And there are deep fissures within the Pakistani polity, as you saw by the demonstrations which greeted General Munir in Washington. So in the long run, I don't think anybody sees Pakistan as, some major, carrying major strategic weight for the United States. But given the current situation in the Gulf, it is possible that Pakistan has offered some clandestine listening posts or something to the Americans vis-a-vis Iran, because Pakistan has long had the habit of running with the hare and hunting with the hound. So they can say one thing and do another. So for instance, all their statements have been in favor of Iran. And in the past also, they've been reasonably careful about allowing, anyone to exploit this. But it's possible, given their situation and their dire need for a IMF bailout and, ADB bailout and so on, that it's possible that they have given some kind of assurances for some listening posts or something, maybe not staging posts, but possibly listening posts. I really otherwise can't see why this sudden about turn in US policy. What is it?
Right.
Because Trump is extremely transactional. He's not going to be sentimentally drawn to Pakistan. So what is the transaction?
Okay. Right. Pramit Pal Chaudhary, do you believe that this is going to throw up a strategic challenge for India, a diplomatic challenge for India? India has had long-standing ties with Iran. We've had historical relations. India has even offered to mediate and help if need be. Could the Indian government have reached out to the US saying that we could help you with this crisis between Israel and Iran? We know both the countries very well. And is there also a worry that Pakistan may get some strategic assurances from the United States, some defense support that it is needing?
So on the first issue, I'm not certain if we're doing anything in the middle of the actual conflict. But if you've looked at the speeches of the Indian foreign minister and his interviews before the conflict broke out, he has, I think, at least twice said, when asked about India's role in the Middle East, he has said, we see a gap in communication between Tel Aviv and Tehran. And we are trying to fill that gap. We're trying to be a bridge on that. So it's pretty clear that India has provided at least some sort of messaging acted as some form of communication link between Iran and Israel. In the midst of the war, there's not much point in providing that. But the point, more importantly, as far as the United States is concerned, Trump is quite openly and violently pro-Israeli. He has openly demanded unconditional surrender from Iran. He has said that even if you want to have negotiations, you must surrender your nuclear weapons beforehand. That is not the position of a person playing a neutral mediating role. So I don't think it makes any sense for India to intervene at this stage of the game, unless, for some reason, both Israel and Iran asked. Modi was asked the same thing on Ukraine when he has gone to the G7 summits. When G7 summit leaders, would you prepare to mediate? And he said, if Kiev and Moscow both ask, we are prepared to consider. But until both ask, we are not. If only one side asks, there's nothing for us to do. And that right now, obviously, there's no interest on Israel's part for any mediation requests, and I don't think there is one from the United States either.
Right. Ambassador Shankar, coming back to you, does this become a diplomatic challenge for India? You have Pakistan, which Donald Trump, during Operation Sindoor, very openly hyphenated with India. He, at least 14 or 15 times over the last 1.5 months, he went on to say that I brought the conflict to an end. I offered to trade with both countries. I told them that if you want a trade deal, you need to stop fighting. And he kept on saying that. Hopefully, he will now stop. But does this somehow show growing importance of Pakistan for the Trump administration?
I think there are voices in the US establishment who do seek to balance India in South Asia to some extent. Or they say that you can have good relations with both India and Pakistan. India in the context of China, that is the Indo-Pacific, and Pakistan in the context of CENTCOM and the Middle East. Obviously, the weight of the US relationship with Pakistan is certainly not as significant as the relationship with India. But, it's always tactical. If they have some other interest and Pakistan serves that interest, then there is a sudden coming together. We've seen that in the past. And Pakistan too has sought to play this to compensate for its, military inferiority compared to India. So they've always sought outside balancing or outside assistance to be able to compete with India. But for India, I think the basic thing is that we need to concentrate on our own economy, to see that it grows faster than it is growing now. It's doing well in terms of the way the world economy is doing. Right. But for our own requirements, we need to see if we can push it up to at least 8%. And then also have a concerted push to acquire the capabilities that we need to have rather than depend on other countries. For instance, in pharmaceuticals, APAs.
I'm running out of time. Yeah, Ambassador Shankar, I've completely run out of time on this segment, but thank you very much for those important views and also the last point about the need for greater self-reliance in critical areas such as possibly APIs, semiconductors, even rare earth magnets for that matter. Thank you very much, Pramit Pal Chaudhary, as well. We're taking a short break, but don't go anywhere. Lots more coming up on News Center. Welcome back. Time now to turn the spotlight on the Modi government's flagship credit scheme for small businesses. The Pradhan Mantri Mudra Yojana, launched in 2015 to fund the unfunded, has completed a decade. Shivani Bazaz tells us more on how the scheme has fared since its inception.
52 crore loans, 32.6 lakh crores in credit. It's been 10 years since India launched the Pradhan Mantri Mudra Yojana to fund the unfunded. But do the numbers support the thesis that this massive push has translated into real business success and job creation? Let's take a look. Since inception, the scheme has scaled up sharply from 1.3 lakh crore rupees in FY16 to over 5.3 lakh crore rupees in FY24. Even during the COVID dip in FY21, 3.1 lakh crore was disbursed. Demand bounced back fast with over 6.6 crore loans disbursed last year alone. Let's take a look at the states now. Tamil Nadu leads the country with over 3.2 lakh crores disbursed, followed closely by Uttar Pradesh and Karnataka. Bihar, West Bengal and Maharashtra, as you can see, round up the top 6. But states in the northeast and union territories remain underserved, with disbursals as low as few hundred crore rupees over the last 10-year period. Now, the beneficiary picture in the scheme is also quite encouraging. Women account for 68% of all Mudra loan accounts. That's over 35 crore loans. SC, ST, OBCs and borrowers together form 50% of the total beneficiaries. And 11% belong to minority communities. So when it comes to reaching out to the most underserved, the scheme has ticked all the boxes. Loan sizes have also gone up in the last 1 decade. Initially, 90% of the loans were under 50,000 rupees, which is the Shishu category. By FY25, however, the share of the category has dropped to 52%. Kishore loans, which range from 50,000 rupees to 5 lakh rupees, now make up 45% of all disbursals. The average loan size has nearly tripled from 38,000 rupees in 2016 to 1.02 lakh rupees now. The government says that this change in trend is because the scheme has resulted in successful business being built. It claims nearly 10 crore jobs have been created by Mudra funded units. But there is some concern as well. RBI data on bad loans from the scheme is a little concerning. 17,000 crore rupees worth of Mudra loans have turned NPA by 2019. However, the average default rate for this scheme is just 2.2%, much lower than the 8% default rate at public sector banks. Experts, however, warn that while credit flow has improved, business training and market access are still missing from the scheme. They worry that many borrowers may be taking loans repeatedly but not truly scaling up. And in states with high NPA levels, banks are tightening scrutiny. This means future disbursals may slow down as well, and deserving businesses and ideas may not get crucial funding this scheme aims to provide. So to wrap up, the hits are massive credit inclusion, women-led enterprise growth, and deep rural penetration. And the misses stand at uneven regional spread, default risks, and limited business mentoring. But as Mudra enters its second decade, the key takeaway should be that money alone is not enough. It's time to shift focus from just giving loans to building lasting businesses. Back to you.
With that, it's a wrap on this edition of News Center. More news and updates continue right here.
The way to get started is to quit talking and begin doing. Walt Disney, the founder of the Walt Disney Company, simply yet profoundly articulates what entrepreneurship is truly about. It's having the courage to try, the conviction to follow through, the consistency to execute, and the compassion to share the success of your endeavor. My guest today embodies each of these attributes, having started not just his own entrepreneurial journey in 1984 when he started Enam Securities, but also having supported and stood by many of India's dreamers who, through their enterprise, scripted a new story for India, her capital markets, and her economy. You have stood up and stood by many of India's dreamers.
I became a magnet for entrepreneurs. So there's one man who will hold our hand and take us all the way.
So what is the art of deal making?
So whenever the deal maker wants to become too big, oh, I'm God, okay, you say this and you say that, kind of attitude, not literally, but I've seen that. What percentage of people you think die, Shireen, with regrets in their hearts?
A very large percentage.
So this risk of failure, fear of failure, is the one that makes people die with regret.
What is holding us back?
Promote and protect the good. Prevent and punish the bad. We prefer to be slow rather than fast. That's how we are a chalta hai country and not a daudta hai country.
The lack of speed would be, if you were to IPO India today, that would be on the risk factor side in the DRHP, right?
I wouldn't IPO.
You wouldn't IPO?
But to IPO, I must have a new story.
You have a special place in your heart for Charlie Munger and Warren Buffett. What have you taken from them that continues to guide and shape how you think today?
Understanding of balance sheet, because balance sheet is accumulation of good and bad.
How do you find India positioned in this mix today?
We have a resilience, we have a stability, we have a wisdom of our own. But oh, hum ek scene dikhate hain, we have a long break. Stop that.
Interval thoda lamba ho gaya.
Bahut lamba ho jata hai.
When did this happen? When was the start of it, this inner journey?
So first was, when I lost my mother. I was 13. Very attached to my mother, and so you can understand.
Yeah.
If you're sensitive when something like that happens, you really start pondering, questioning. But I wasn't a pessimistic kind of kid. I was a very optimistic. Someone held my hand, and that's how I read Gita, and that was very transforming. And kept finding new masters in my life.
Okay.
And I continue to. And so once I came across a book on Vipassana, it just fascinated me. This must have been 1972 or something. And
wow, as far back as that?
As far back as that. I met somebody who had returned from a Vipassana course. Vipassana was just 3-4 years old in this country. And I knew, well, I'm going to do it. I did it eventually many years later. But I knew that it had all the answers. So I went by my first course in 1989.
Wow.
And I knew I had got the path.
So at the end of that 45-day period, what was the outcome? What was the result? I mean, how?
It's a journey. Firstly, you learn that it's a journey. And what is a journey? A journey is that we don't see clearly. So you see clearly. You are able to walk on this path in this manner is because you start seeing something. And you see that, most of the time, you are not seeing clearly. In our tradition, this is called Maya. Our vision is clouded by Maya. And what is Maya? Maya is seeing what is not there. And Maya leads to Moh. And what is Moh? Moh is getting infatuated with something.
Attachment.
There.
Yeah. And all of this while you've been in the world of money.
Absolutely.
And material.
And Maya and Moh. And
exactly.
But you can imagine that when you have that internal clarity, how easy it is not to be trapped by it. And maybe even very easy to deal with it. And I found this, that our masters and our guides in life, ever since we discovered them, that is Buffett Saab and Munger Saab, they are masters. They are so advanced spiritually, I can't tell you. In my other office, I have made this very famous painting where I put Buddha, Mahavir, Emperor Ashok, Gandhi, and Buffett Munger at the same level.
Wow. That is quite something. So they hold that much of a sort of closed space in your life?
Absolutely. Absolutely.
Did you get to spend a lot of time with them?
Not a lot of time, but I did meet them, and I got a book autographed by them. I got a chance to touch their feet.
You touched Warren Buffett and Charlie Munger's feet. But what is the one book that you would recommend to somebody? One book outside of the Gita that you would recommend to people?
So, a book on Vipassana, I would say, definitely. And there are 2-3 choices. One is Art of Living by Bill Hart. The second is by a McKinsey partner, senior partner, practicing in New York.
Oh.
So accidentally he took a Vipassana course. Life got transformed. And so he's written a book on seeing with eyes closed.
Seeing with eyes closed, that how important is that?
You can't have a bigger advantage in life.
But I'm going to ask you to take a seat here while we mic you up.
This is the third. This book has been written by my daughter.
Wow.
And so she is a top Ayurvedic consultant in America.
Oh.
And dedicated to women health.
What was it that made you want to start up? What was it that made you believe that you could be entrepreneurial? What was that moment like, if I could get you to go back in time?
Well, I think I had no choice. I mean, I didn't see that as a considered choice. I remember that I passed CA exam with flying colors, and I had 50 job offers. And I said, well, it'll be fun to go for a couple of interviews. And I did go for them. And obviously I did quite well. But one of them was an embarrassment. And they said, they kept me for 4 hours. It kept making me meet this person, that person, until I met the managing director. And then I said, this is too much. I must tell them very clearly that, look, I am not interested in any job, not only this. But then I developed a friendship with that gentleman for life. So Shireen, for me, it was very clear that I was going to be an entrepreneur. And the journey has not been easy. I had a lot of false starts. But I obviously have zero regrets because they were all there to teach me. And that's the beauty of entrepreneurship. Until you call it a day, it's only a lesson. It's not a loss. So I've learned many lessons, and it's been fabulous. And I'll tell anybody and everybody to take that attitude. Entrepreneurship is not necessarily, taking up a job in today's times, where you have so much freedom, compared to when I started, more than 50 years ago. Today, you have, so much freedom in your job to be creative, to call your shots, to define your rules. So I think there is only one way to live. Nature wants you to be an entrepreneur because it gives you unique capabilities. Like every creature in the world, it has a defense mechanism, it has an offense mechanism, it has a creativity of its own. And if you don't use it, let me ask you a counter question. What percentage of people you think die, Shireen, with regrets in their hearts?
A very large percentage.
Because our systems don't encourage entrepreneurship. So this risk of failure, fear of failure, is the one that makes people die with regrets. And people who have all the capability, education, resources, dying with regrets, what can be more painful? So not only that I was an entrepreneur, but I supported entrepreneurship big time.
Yes.
And I continue to kindle that in everybody.
And as you pointed out, not just your own entrepreneurial journey and the many lessons associated with that, but as I pointed out, you have stood up and stood by many of India's dreamers, people who were not necessarily seen as visionary or ahead of their times. What made you bet on them? What was what would you consider today your highest conviction bet?
So firstly, I saw the transformation in myself. But I felt that if I could change and I could do whatever, everybody can.
So as long as you don't have a broken value system, given everything just falling in place, you have a good chance of coming up and making it. And second part was that the bulk of my journey was post 91. We started in 85 itself, and we started working with Reliance in since 1985, and nobody did more work while I was still a banker with Reliance. But that besides, so when came 91, much before reforms were announced in India, I was in America, saying that India will happen, meeting Wall Street. I had that abiding faith that India's time had come. And therefore, when entrepreneurs like Narayan Murthy and Subhash Chandra and Anil Agarwal and so many of them started approaching me, and then I became a magnet for entrepreneurs. So there's one man who will hold our hand and take us all the way. We can take some legitimate pride that we played a very key role in the first 15, 20 years of India's shaping. Sector after sector were opened by us, kind of thing. We did the defining IPO for that sector. So not only we presented the company, but we presented the potential of the sector. We did, whatever pioneering things in capital markets we did.
And I want you to narrate for us the 3 or 4 things that stand out or so vividly sort of, resonate with you in your memory, in your mind, as the defining moments of that period between 1991 and 2000.
So as a country, if I were to say that the period 91 to 93 has been so eventful, I don't know how many people think about it. Just imagine. 91 March, we go bankrupt, we pledge our gold. And IMF is talking to us about, $4.4 billion in 2 tranches of loan to us, and the terms are being negotiated. From that time to 93 March, when we had the bomb blast, the world had changed completely in India. Reforms happened. FIIs came.
Yeah.
Divestment happened of, several PSUs got listed. Harshad Mehta happened and fell, by the way, in that short period. Yeah. More importantly, NSE was formed. SEBI came into being. Market went on a whole big roller coaster. Outcry started to give way to, technical platform of computerizing this, that, etc. The grand story of BSE, 108-year-old institutions by them or 118-year-old institution by them, we started to decline and the BSE couldn't see it. And by 93 September, 2 very landmark companies had already got formed, Infosys and CTV. And therefore, the 2 stories that stand out are these from personal point of view, Infosys and this. But one story I would like to recount and request the whole country to put it as a center, as a guidance for the future, is that of a gentleman called N. Vittal. He was a secretary in the Department of Electronics and Information Technology. Information technology industry hardly existed.
Yeah.
This man saw the potential. He had experience in export zones and export policy, etc. And he saw that, most people don't understand what software exports mean, but I've come to understand by and by that what they mean. And this is magic because they create high-paying jobs. There's such a big potential. So I must do something. Never before or after, he did what was making the government follow business. So there's something called STPL, right? Software.
Yeah.
And he said the principle there was that normally the government wants the businessmen to tail it. You follow our rules, you come to Delhi, etc., etc. He said, no. We will come where you are. Yeah. He said, if you set up you set up a software park in a forest, I will set up an office in the forest. We will help you. So this approach of helping a sector all the way, and then he found solutions to creating links and telephone lines and power and doing deals with the states to give them land and whatever they needed. One man who's a missionary, and look the result of that.
Yeah.
That one little innovation is $300 billion of exports today. Country has floated, if on anything more than anything else, it is the software export zones and software exports. So you've got at least 10, 15 such ideas where we need to do a vittal.
What would be the top three?
So there could be AI, it could be quantum, it could be medtech, medical devices and technology, it's pharma itself, where we need to redefine the rules. And we have seen what we have done in drones, what we have seen in space. Nuclear capability is just opening up. Some of our small companies have done wonderful work on this. Bharat Forge, as we know, is a leading forging company and very research-minded. We have had a relationship with them for more than 40 years. And they said, what is the most logical thing to do is to create high value-added products. Gun would be great.
Yeah.
And so India was looking for a substitute for Bofors. And they said, well, we'll make one. They're so ambitious. So they built one. And they thought it was a great gun. But until you fire a gun, you don't know. So they're looking for what we call a firing range to fire it. And they tried for 4 long years, no success. After 5 years, US government, they started trying for 1 year, and the US government gave them permission to fire an Indian gun on a US firing range. And it did brilliantly. He had to play a video. With great difficulty, got a chance to play a video to a defense conference, which had Mr. Manohar Parrikar in it. And Mr. Manohar Parrikar froze because the gun was 40% more efficient, 30% cheaper than anything available in the market. And this gun was not allowed to fire for 4 years in India. The rest is history, as they say. So this is the kind of talent available in select areas. And these are the kind of difficulties they face, where we need to take a vittal approach. Tell us what you want. Typically, it means 2-3 things. It means that I need funding, which has tolerance for failure. I need funding which is patient. Because if I have to be cutting edge, a lot of the things that you're seeing today have been in the US labs or other labs for very many years, 5, 10, 15 years. And so maybe we will not take 5, 10, 15, but whatever number of years. I will need market support whenever I'm ready. Because just as, if India doesn't buy the first gun from Bharat Forge, who will? In this case, actually it was Saudi Arabia who gave them a $150 million order. But that won't happen everywhere. So I think, and we have some stories, like, for example, the COVID vaccine, where the government came forward and Modi ji did an amazing job by taking the first shot of, the Bharat vaccine. So you will need things like that. And then you need consistent policy, friendly policy regime. Government changes, ministers change, bureaucrats change, policies change. These stories are absolutely legion. But the idea is that how do you leapfrog? And you leapfrog with technology. So when mobile technology came to India, for example, this illiterate vegetable vendor suddenly had an advantage. She learned how to read all the relevant stuff. She learned enough technology to operate a feature phone or a smartphone or whatever. And so it's such a great leveler. An ATM is a leveler. So technology is a great leveler, and it is fantastic news for people who are less privileged. So if I have that vision and that logic, what is holding us back?
What is holding us back?
Painful reality of India. So not only, I feel very strongly to commission, I have done films in various areas, and a film on, Indians against India. There is something in us, Shireen, where we prefer to be slow rather than fast. That's how we are a chalta hai country and not a daudta hai country. And speed and innovation go together. How do things become speedy? How does a Vande Bharat happen? Unless you love speed. So the record of deregulation and success of private enterprise has been so phenomenal. There will be failures, there will be frauds, but that's not to prevent all children from running around, because they will fall occasionally. Some will, get seriously hurt. That's okay. So this daudta hai se dar lagta hai. How will that India change?
So since we're talking about India, I would imagine that this the lack of speed would be, if you were to IPO India today, that would be on the risk factor side in the DRHP, right?
I wouldn't IPO.
You wouldn't IPO?
unless I had two things to present. And, you know, let's just face it. Indian stocks are not cheap. They don't go down because they don't deserve to go down. Because, you know, we're still doing a lot of good things. And therefore, maybe my P is justified in some manner that quality, people want to hold on to quality because it's a rare thing. And that's the principle of valuation, the principle of the markets. So I wouldn't sell all my blue chips, even if they are highly valued. Where do I go from here? So they won't perform for some time, but that's okay. But to IPO, I must have a new story. I must create room for higher P, higher profit growth, etc. And that won't happen. What do you think will take India ahead? The government or people?
People.
Then government should be after people, no? Why are people having to change the government?
But not after, but supporting or...
Exactly, exactly. So you know where is the engine and where is the dabba. So the government must play the role of an arbiter, providing a track. So I say that, okay, promote and protect the good, prevent and punish the bad. That's all.
You're saying we're still over-regulated?
100%.
Across sectors?
Well, you know, I mean, you can't pin me down on this expression, but you know what
Capital
I'm meaning.
markets?
See, question is it is a mindset question, right? Look, what did capital markets do? Capital markets, the creation of NSE, saying that, look, BSE was a fantastic institution, absolutely what role it played, blah, blah. But if you are not forward-looking, you will get into trouble. And people thought that without this badla and what will happen, nothing happened. And dematerialization. How can we forget dematerialization? We never thought this was possible. In the crazy world of transfers and whatnot, and how inefficient and, you know, what poor use of time it used to be. And look, 90% got dematerialized in no time. We think our people are illiterate, कि चिमन भाई को क्या आएगा, सुब्रमण्यम को क्या आएगा, what nonsense. So we just don't learn that how capable our people are. And we were more dematerialized than UK and England, UK, US, Germany, France for many years. I don't know what the current thinking is.
you're a man who's supported IPOs across the length and breadth of India. As you look at what's happening in the IPO market today, some of these new age companies listing in the Indian stock markets, the Indian startup story coming of age, so to speak. How do you read that?
So it's not new. So I've seen the age of mega issues. I don't know if you were even around that time. So in 1989, you had 4 companies attempting that, and L&T was a surprise, guest to the party. But you had something by Reliance, you had something by Usha Rectifier, you had something by Oswald. People have even forgotten.
Yes, forgotten. Yeah.
And the 200 crore issue was a mega issue. So there is a mood in the market that people want to give money, and there will be people who will collect it by selling an idea, selling a dream. That, oh, this is a mega idea and it will create mega results and all.
As you look at what's happening globally today, the state of uncertainty, flux, volatility, changes that some we didn't expect at all at this point in time, geopolitical relationships changing. How do you find India positioned in this mix today?
So there's something about India, right, that we have a resilience, we have a stability, we have a wisdom of our own. We had the Asian crisis. We did the nuclear explosion. We had the Kargil war. The Indian corporate balance sheets were in a mess. Government of India balance sheet didn't look good. You know what the interest rates were?
Yeah.
The market were 18, 19, 20, 21%. Government was borrowing at 9%. Institutions were borrowing at 16%. And the interest rate reset happened under Dr. Jalan and Montek Singh Ahluwalia. And the interest rates have been falling ever since. So what all surprising things we've done. We've come back, and the COVID is a classic example. From one picture to another picture. So India has this great story capability of its own, and now you have a people that has tested future. But hum ek scene dikhate hain, फिर we have a long break. Stop that.
Interval thoda lamba ho gaya.
बहुत लंबा हो जाता है. So I think we need to just do that, and you adopt speed as the way to innovate faster. And I think a brilliant.
But are you concerned, since you're talking about innovation and the debate is on whether Indian private sector is investing enough in R&D, is investing enough in innovation, as we look at what's happening in China and the US and so on and so forth? Does it worry you? Does it concern you that we may fall behind?
It's a statistic. See, innovation is a mindset. I can't force, say, a talented hockey player to play cricket. They are completely different mindsets. My appetite for failure. See, as we say, necessity is the mother of invention.
Yes.
The automobile car in America is the result of military defense, military spending support. Some of the most amazing products were supported by the government. So, somebody has to lead the way, and the government has to lead the way. And I think things will happen. So I wouldn't, because then it's a non-starter for me. So I don't talk that language. I will look at the R&D that we are spending only 0.7% of GDP. They are spending only 0.78% of their corporate profits into it. But that's a statistic. Let me change what will lead to innovation, where I will show the path, I will create vehicles, and I will support the initial investment, and then people will come. It will be a flood. Do that for 3-4 years. Government has already shown the attitude, right? 1 lakh crores, 20,000 crore allocation this year. Let this money start rolling out. And then, some academic institution, and we don't have academicians today to take up the research dollars. We have a huge opportunity. US is Mr. Trump is throwing out its research scientists by tons. Why don't we go and grab? Government has a program. Now, need to accelerate 10 times more money and bring them all to IITs, IIMs, RDCs, this, that, wherever. First, आदमी तो इकट्ठे कर लो यार, बाद में सेना बना लेंगे.
But you talked about Mr. Trump. Let me ask you about what you anticipate in terms of capital flows, with the world being in this sort of state of flux today, and the opportunities that present are presenting, that India finds itself presented with, whether it's manufacturing and so on and so forth. How do you see capital flows in this current milieu?
See, investment is a micro decision. It's not a macro decision. Macro is a small part of it, but micro is the main part of it. Does it make sense? Do I see safety in it, etc., etc.? So I have to provide the fit for the money, and the money will come. Some part will come because a lot of money is there and we have to do some allocation business. But what we call investing per se will happen on a micro basis. So say, for example, if some of the semiconductor companies, they have good stories to write, we are seeing this, they are attracting partnerships and they're attracting money. Some of our renewable energy, where we have a huge opportunity, we could be a world leader, right? Mr. Mukesh Ambani talks about it, Mr. Adani talks. We have a real opportunity. Money is coming in, money will keep coming in. So also if I support AI, this, that, etc., money will come in. So I think if I provide, just the stability, I provide this better governance, I provide better ease of doing business, my rank has to go from, in beyond 50s, just to come within 25 in the next 3 years, 4 years. Let me take drastic action. If I see that kind of momentum, I have no doubt money will come. And I say, you create that environment here. Money has to come because we have some great advantage, which we did not use like China did, the domestic market. Visualize this. US and China, they cannot live without each other. Trump is realizing it. But even to whatever extent, they don't allow access to their own market to each other. Where will they go? They want a large growing market for 5, 10, 15 years, or maybe longer. India is that market.
Since we're talking about money and, your relationship with money, but more importantly, what you now would like to see being done with the money that you've accumulated. What is the purpose?
Well, I didn't accumulate money, really speaking, Shireen, in the sense that even while I was in business, we wanted to give. Not only we wanted to give, we told our employees, you give one, we will match it. Then we say, you give one, we will give you two. Give. That has been our approach. And therefore, say whether we take Flame University, for example. Like Flame University is a very different story of investment. It's the best investment we made.
Why do you say that?
With no return that people can count, right? There's no tangible return, but it's fabulous. That redefining education, higher education in India, doing something for Indian values, doing something for R&D, doing something for a global statement, doing something for, reversing brain drain. Say, for example, one of the areas out of many is doing something for democracy. That how democracy from a very eloquent definition of, for the people, by the people, of the people, it has become for some people, by some people, etc. And how will it change? Why will it change? One can't imagine that a political class will say, let me empower my citizens. I will always make them feel, I'll say, okay, you be entitled, main hoon na. I will somehow provide for it. So I'll create a welfare state of whatever kind. Do you know what Socrates said about democracy? Very interesting. More than 2,500 years ago, Socrates said, well, be careful of democracy. Because there will come a day where the criminals will say, no, we should not be punished. And there are enough of them. Sure, they will not be punished. And therefore, you need a very intelligent democracy. There is no democracy at the end of the year if there is no democracy today. There is no democracy unless I participate in democracy. So I have visualized a democracy 2.0, where it is democracy of actisans, where the citizen is an active participant in democracy. So we have created a concept called actisan. Actisan means alert, informed, and active, and not activist. And now we have taken that program to 10,000 schools, government schools in 4 states. Very difficult job to think of what we can do, to create a program, to take it to school, experiment, evolve continuously, But today we have several states and thousands and tens of thousands of schools waiting. But until we build capacity, we won't take it.
As you look at not just your own journey, but the journey of so many entrepreneurs that you've been closely associated with, who've grown, scaled their businesses, some have even had global ambitions and global aspirations, what would you say have been some of the most underrated management principles that entrepreneurs must focus on?
Values. Values is a tool of management, highly underrated. So you will hear about humility at times. You will hear about honesty at times. What about empathy? It's the most powerful tool, empathy. I have used that in my deal making, in running my empire, running my business, in my NGOs. That at the end of the day, we are not the role that we have. There's always an emotion inside us. And when you go to that level, obviously it is accompanied by honesty. And if there's no humility, you can never achieve empathy. So empathy is not easy to achieve.
So what is the art of deal making? The 3 or 4 or the top 5 things that one must focus on?
See, you have to be very authentic. You can't do a win-win without authenticity. There can't be anything sly about it. So if the buyer and the seller themselves are not stating it, as a deal maker, you've got to bring that out. You have to be creative. Obviously, that's why things are setting apart, because there are assumptions, there are norms, etc. And how you break norms rather than rules to see things, right? We started talking, seeing things as they really are. And that's the art of deal making. Then you need patience, you need empathy, and you need real skill. You need diligence to how to see things deeply over time.
What's been the most fun deal that you've done?
Oh, there have been too many.
The top one.
Let me talk about one of them, because it made tremendous amount of money. This is the L&T deal, right? And I was not the deal maker primarily. In the first place, I was not the first banker of the deal. And Mr. Birla wanted to buy L&T, as you know.
Yes.
This is probably in early part 2001, 2 or something like that. And then, Mr. Naik wouldn't have any of it. And not only that, he mounted a counter-attack, and things were a complete mess. Obviously, it was so depressing for Mr. Young Birla. He had just come into power, and he thought this was too tempting, so
he was going to go
like
after
a
it.
Tiger cub attacked an elephant. And then, I came into the scene, and we said, what can we do? And so we started working systematically and saying that, look, firstly, can we break the company? So it was not only I, but there were a lot of other people attempting. But I was doing the deal structuring, holding him, encouraging him, taking him out of his depression. And it took us 3-4 months to turn around the whole thing. L&T carved out a large part. It carved out a brilliant deal for its employees. They created a stock option, employee stock, very brilliantly created. Yeah. And there were a lot of doubts as to, whether the deal will pass muster or not. But through all of that creativity, we were able to take that cement business. It became Ultratech. It is the largest asset of the Birla Empire. So from a completely lost deal, becoming very regretful and remorseful that your company guy and nothing can be done. So even what looked like half a deal or even less than half a deal became the most amazing. So the art of possible, do what is possible. That was not possible, forget it. Don't think that, there's animosity, this, that, etc.
I know that you have a special place in your heart for Charlie Munger and Warren Buffett. As you look at what's happening today, and some of their principles, investing principles, are timeless, as we've seen. What What is it that has guided your investment thesis, your investment philosophy? What have you taken from them that continues to guide and shape how you think today?
So two things. That the man at the helm is very important. Large part of it is that. And the second is understanding of balance sheet, because balance sheet is accumulation of good and bad. Not many people pay attention to the balance sheet. And balance sheet is, a tangible balance sheet and an intangible balance sheet. So, my relationship with my customers, my suppliers, my employees, my regulators, my community, etc., is also balance sheet. And of course, what sort of liabilities I am ready to take, what sort of asset policies I have, how do I write them, how do I recognize, how do I write them down, how do I recognize them. Once you have that study, it reflects the character of the promoter, the founder, the management. These are the two principles that guide us. That when you meet a person, you see the value system, what is that person trying to do? And if you see an alignment, that this is fine, because nobody knows what will happen tomorrow. But we know if something goes wrong, how will this man react? That's enough. And then the balance sheet shows us how has it been on an accumulated basis. And sometimes the way we look at the balance sheet is actually surprising to the promoter themselves. That, look, we didn't realize this, how it shows up in the balance sheet. And what you say is right? Because they are on a day-to-day basis. We have the advantage of, peaceful evaluation. So that's how, we buy, make our investments. And very typical for us to sit for 5, 10, 15, 20, 25, 30 years with our investments.
Let me end by asking you, what to your mind is your leadership language? What is it that you would like people to remember you for?
Well, here was a reliable guy who always wanted to be useful. That would be my epitaph. But as to, leadership, my leadership language is probably twofold. As I said that, we all have a desire, but we don't have a design. Many times you don't have a design. So, for example, in today's world, suddenly we don't know what will happen. And the company, the business may face so much uncertainty. What do you do? So the leader or a CEO has two roles, one of a mother, one of a captain. And what does a mother do? Mother has to create children who are a lot more educated, a lot more skillful, a lot more capable, taller, stronger than her. So it requires inspiration. It requires a value system. Mother has to show courage, stability, patience, learning to do with less, creates solidarity, a feeling of oneness, etc. And that's what nurses children have become. There are times when you have a design clarity, when you become a captain. A captain is a coach, he got strategy, he will give a chance to everybody, he's a team player, etc., etc. So you have to alternate between mother and a captain role. Uncertainty, you become a mother. Certainty, etc., you become a captain, you create more ambition, this, that, etc. And I've seen that play out. And let me give you one example, and I think it will become very clear. In the Infosys journey, not from public, but much earlier, right? Mr. Murthy was a mother. All his partners were, far less capable. They were not really partners in terms of stature of him, but he is the one who encouraged them. They wanted to sell Infosys. He said, I'm not selling Infosys. He showed that courage, that example. And then later on, he became a captain. And look at the man. He came back a second time. 2005, he retired. 2013 or something, 14, he came back. And he still performed. He knew how to be a captain a second time. So there are few leaders who have this very, very clear in their mind that can I inspire people? So my language is one of inspiration, having implicit faith, letting them take risk. I used to tell my people, look, I'm not going to teach you anything. I'm going to take you and put you in a swimming pool. You have to learn swimming on your own. But they would have so much confidence, I will not drown. This is such a protective environment where I can go 20 times and ask. And people, they learned One person who is a big fund manager today, we taught him how to read a balance sheet. We gave him that opportunity. कोई बात नहीं, आजा बेटा तेरे को सिखाते. So, that mother attitude, okay, everybody a chance. Okay, you'll become all right. But they would learn so fast. So, that's the kind of game, that's the kind of fun I've had, Shireen.
Alternate between being a mother, the nurturer, the provider, the supporter, the protector, and the captain, steering the ship through certain times, not the uncertain times. The uncertain times, the mother comes in.
Absolutely.
The mother comes
Absolutely.
in. But Mr. Bhansali, what an absolute pleasure it has been to have you on the program. Thank you so much for sharing.
I don't know. I am a fluent guy. I just flow. So I hope it is meaningful for your audience.
It was absolutely fabulous. We truly do appreciate it. And I think, as I've been listening to you narrate your stories and share your insights with us, I'm reminded of what Mark Twain said. He said, don't let your education interfere with your entrepreneurship, or broadly that. And I think to add to that, what I've learned from you today is don't let your ego get in the way of your entrepreneurship either. It's been an absolute pleasure. Thank you so much for joining us here
Absolute pleasure
on the
talking
Leadership
to you,
Language.
Shireen.
Appreciate your time.
Thank you for giving me this opportunity.
An iconic building in San Francisco, a building that was constructed in 1907 after the devastating earthquakes. It's only appropriate that this is home to Notion. Notion, of course, is the productivity powerhouse started in 2013 by Ivan Zhao, Simon Last, and then Akshay Kothari joined them a couple of years in. It's got all the makings of the Silicon Valley dream. It started strong, went almost belly up, came back in 2016 in a new avatar, and today has over 100 million active users, $330 million in funding, and a $10 billion valuation. It's hoping to become the everything app as it takes on Google and Microsoft. To talk to us about the past, the present, and the future is co-founder Akshay Kothari, joining us now on Voices from the Valley. Stay tuned for the Notion story. Akshay, it's great to see you again, and thanks so much for having us here at the Notion headquarters, a pretty iconic building constructed in 1907, and this is now home for you.
It is our new home. We just moved in here about a month ago, and it feels like graduation from maybe kindergarten. We're on Market Street now, and it's a sign of our business also moving up market. Starting to, actually really see more and more enterprise customers use Notion. And so it's fitting for us to come to Market Street.
Yeah, and it's also fitting because this is a timeless building, and that's the ambition, right? To build timeless products. So it kind of converged.
It very much is. Our ambition is to build a timeless tool. In fact, all these conference rooms are named after timeless tools that we look up to. And we hope Notion is something that will be around for generations to come.
Let's talk about Notion and the many pivots that you've had to make along the way, from the start in 2013 to, of course, the big breakout moment in 2016 to where we find ourselves in 2025. I have to say, I was pleasantly surprised because as I was driving down the highway, I see a billboard and it says software is beautiful. Now, I've heard software being described as many things. Beautiful is not one of them. But take me through why you're placing all your bets on software being beautiful.
Well, it really goes to our ethos of the company. I think we are rooted in a lot of the work that computing pioneers of the 70s did. One of them, Douglas Engelbart, really talked about augmenting human intellect. And so when you drive by, you see all these billboards about AI replacing humans. That's not our ethos. Our ethos is very much about augmenting people in a way that can make them do more. And it goes back also all the way back to our first office 12 years ago was in a design studio. And that intersection of liberal arts and technology is where we love to thrive.
And that's where Ivan thrives.
That's where Ivan thrives.
That intersection. I mean, this looks a little bit like a chair museum as well, because I believe he handpicks every chair that we find here. And they're stunning pieces, by the way.
Handpicks every chairs, but not just chairs. I think every piece of furniture, down to the pen we're using, is something Ivan picks.
Curates everything.
And I think it's very important for him because he really thinks about the environment we work in. We are trying to build a timeless tool, and he wants to make sure we are surrounded by timeless tools that we're inspired by. So the natural light, the things we're using around us really pushes us.
Jazz in the background.
The jazz music in the background. It really pushes us to do our best work.
So let's talk about AI and what that's going to mean now as far as Notion's future is concerned. How do you see yourself making an AI pivot?
Where AI is like new electricity for us. We've spent about a decade building an incredible editor, an incredible database where people are doing lots of work. There's tens of millions of people using the product. And now what AI does is it infuses all this power. One of the things that we always hear from people is that people really love the product, but they find it hard to really customize it or build it to a place that they would like. And AI enables that. AI knows how all the different parts of Notion work. And so now you can essentially speak English or your language and and it converts it into a setup that is customized for you.
So the think it, make it philosophy is being taken forward courtesy AI today.
Correct. And in some ways, people had to do this work, or people had to rely on the community to build the things that they can use, and now they can build it themselves. This idea that every person in this world, there's 1 billion knowledge workers, and every one of them can create a customized software by just asking it what they want.
So here's what I want you to address now, Akshay, because I know that the ambition of Notion when it started was to be the building block, was to be the Lego equivalent of the software world. From that to now the ambition of being the everything app and kind of taking on the big boys. This arc, this journey that you're transitioning to, what does that mean in terms of what you change inside and what you change on the outside as well?
Well, in some ways, there's a connectivity to that. We always thought that people are drowning in too many tools. And we always thought that maybe fewer tools that can actually help you do your work was actually better. And so instead of every person inside a company using 100 tools to do their work, we thought Notion can enable you to do all of that in one place. Now, what AI has done is that really enable that for the long tail. And people come to Notion for all sorts of very interesting use cases.
Okay.
Some people are,
What's the most interesting use case?
I think people use it to, in the personal side, track their workouts, to manage their plans, to figure out their fridge inventory for what they're cooking in recipes in Notion, all the way to the work where people are managing their projects and their OKRs and they're, running their company on it. And with an interesting product which works for 5 people, but then also the same product works for 50,000 people. And that's quite unique, right? Basically having 4 orders of magnitude difference, and it's the same product. And so it has to be simple enough so that the next college student can use it, but also it needs to scale so that when they go on to start a company and it becomes 10,000 people, the product continues to scale.
So, what's been the big learning in making this much more of an enterprise-oriented? As you said, the product remains the same, but from a distribution point of view, to take this to enterprise customers, what's been the big learning there?
Well, there's a lot of focus on sort of security and privacy and controls that we've built, but the ethos of the company is the same. What we're seeing now is that the consumers who were using the product maybe 5 years ago, they've gone on to start a company, and they've gone on to, that company has become an enterprise. And so in some ways, our focus is to make sure that the end user, the customer, continues to find value, continues to find the innovation and the creativity in the product. Part of the time, people, when they think about going up market or serving enterprise customers, I feel like the product becomes boring. Product becomes robust, or product becomes like, and I don't think we want to make that trade. We want to continue to be a tool people love. We want to build software that is beautiful, and at the same time, something that is secure, that your IT person or your CTO feels comfortable using.
So, as you make this journey now, what do you see as being the next steps necessary? I mean, some of the fundamentals of the company, which was basically to ensure that it is profitable from the get-go, of course, after having almost gone belly up to then restarting in 2016, the idea has always been to sort of stay profitable. As you look at the future, profitability, as you look at enterprise, I mean, what could we be talking about in terms of potential revenue expansion?
The company continues to grow, and at the moment, we're really sort of moving towards a path where we'll get to $1 billion in ARR. As you said, in the coming years, I think not too distant future. And as you said, we've been cash flow positive for many years, and something that I grew up in Ahmedabad and my roots are Rajasthan, so it's something that my dad approves of.
Cash flow is king.
Cash flow is king. And it's quite rare actually in the Valley to have that, right? I think to have a business that continues to, almost the business continues to fund our expansion. And I think part of it also comes from our ethos of keeping the team small. We care a lot about talent density. We care about having the fewest number of people here that can have incredible leverage in terms of what we build and what we can do, and to give that leverage to our customers as well.
You're talking about people, and we're also talking about AI, and I think we're almost in this race at this point in time with companies claiming that, look, 20% of our code is now being done by machines, 30% is being done. It's almost become this sort of, slogan. How are you seeing that? I mean, how do you find this balance between what machines can and should do and the contribution that humans should and will continue to make?
I think Notion has a slightly different ethos. I think a lot of people talk about artificial and general intelligence, AGI, and I think a lot of the focus is on replacing humans and being as good as humans or better than humans. We really think about it as augmenting human intelligence, and this idea that what can a human, with the help of AI, with the help of robots, can do? Like, what can we do together? And I'm actually extremely optimistic and bullish for the world, because I actually think that so much of your day-to-day life is currently focused on all these monotonous things that you wish you didn't have to do.
Yeah.
And so I think you can kind of take two different views, which is like, will those jobs go away, or will people's 30% of their time will be recovered by people, and people will be more creative, and people will suddenly have the time to build things in the world that they didn't have before. I feel that way right now. Like, I feel like, oh, there's all these things that AI is helping me with, which means that I can build so much more.
So what are you building today?
We're building so many things so if you just think about Notion, like even 2 years ago, we were focused on a singular product, which was Notion. In the last 2 years, we launched Notion Calendar last year. We launched Notion Mail this year. And we're slowly becoming the suite or the connected workspace that the future generations are using. We want to get to a point where people don't have to use any other tools. They can live in this deeply connected world where your meetings have the perfect meeting notes in Notion, and your emails can schedule meetings perfectly in the calendar, right? And all these connections that should have existed actually in the last 2 decades, but haven't. And so that's an area that we have really expanded, and things that we're able to do now because we're all accelerated by AI.
But this is a space dominated by the big boys, right? Between Google and Microsoft, it's the lion's share of the market. Now, how do you take on these large legacy incumbents? What is the strategy to go after a share of that pie? And what do you see as the addressable market for yourself?
It is a multi-decade path, and it has been done before, so I'm excited about that. I was in school, maybe in college, 20 years ago. 20 years ago, Google Docs and Gmail came into life, and when I was in school, it felt like the best thing since sliced bread. Like, we all grew up using these products, and when I went to work, I demanded that we should use Google products because that's what I grew up with.
That was the gold standard.
That was the gold standard. And if you talk to students today, high school students, college students, startup founders, they're all growing up on Notion. They're all so used to having this flexibility in the workspace. The way Notion knows them is very much the only way they know how to work. They are going to go on to build the next generation of enterprises that will all run on Notion. And so I think part of our biggest bet is to make sure that we inspire the future generation to be using Notion.
So that's the bet that you're making, but let's talk about the expansion as well. I mean, outside of here in San Francisco, in the US, you've got offices in Ireland, you've now got your first engineering center outside of the US in Hyderabad, in India. How critical is India going to be as part of your strategy?
Oh, India's going to play a big role. So outside of the US, as you said, the only engineering office we have is Hyderabad, and we're continuing to invest quite a lot of investment there. We're growing the team quite a bit. It actually started a couple of years ago when we acquired a company in India. And if you have to think about Automate is the company we acquired, and when you think about like all the future developers who are going to really build the tools of tomorrow, I think India is already the #1 or #2 market in terms of developers and knowledge workers. And so I think we're very excited about the market in India, both from a standpoint of us growing our team there, but also the market.
As a user market.
Yeah.
What numbers do you have in India today?
I think if you look at the number of unicorns around the world, like what percentage of them exist in India, it's starting to grow quite a bit in the last few years.
Yeah.
And a lot of them are customers of ours. And this happened without us being there in the early days, right? So again, it was probably a designer who decided, actually, my portfolio looks better on Notion, my work looks better on Notion. They bring it into their company, and in a couple of months, the entire company is using it.
So, staying with India, the expansion has been by way of M&A through an acquisition. Is that potentially something more that you could consider in India at this point in time?
I think we definitely look at that as a way to expand, but we're also, I think the acquisition became a core hub for us in Hyderabad. And so now that we have such great engineering leadership there, it gives us the ability to really sort of invest in it more.
Yeah.
And I think one thing that I'm really excited about, especially because I've spent some time in India myself, is that our office in Hyderabad is like a front office. It's an office that is building core products that is used by everyone around the world. It's not a support center. It's not a build these things so that people here can build. No, they're building things that literally our global customers are using, and they're a core part of our strategy. This was important for me because, of course, I grew up there, but I also worked there for 3 years when I was at LinkedIn. And I saw the talent. The talent we have there is comparable to talent, some of the best talent we have here. And we think it's an important part of our strategy to continue to invest it there.
You bring up LinkedIn, and I don't know how many people will remember how you ended up at LinkedIn in the first place. As I said, this is in a way your third entrepreneurial innings, if I could call it that, because in Stanford you launched Pulse, which was your startup then, and it took you 11 weeks to take it to the market, because you were supposed to take it to the market as part of your project work that you were doing at Stanford. From there to selling that company to LinkedIn for $90 million, what has been the biggest entrepreneurial lesson so far for you, Akshay? The lessons that you've taken from that experience that you use here at Notion?
So actually, before Pulse, there was a bunch of failed projects, a lot of them that didn't work. And I sort of think I got lucky in Pulse in that it was built as a class project. Steve Jobs mentioned it in his keynote.
And that was the big breakout moment.
That was the big breakout moment. So I feel like in many ways I got lucky a few times. But the lesson I take with me from the failed projects is to just focus on the problem, the customer. I think when you're young, it's very easy to feel like you want to be a founder, you want to be an entrepreneur. It really, and it's amazing. I feel like it's actually great that people think of that as a viable career now. But what really matters at the end of the day is whether you're solving problems, whether you're making someone's life easier, whether you're saving people money, saving people time. That's the thing that makes it long-term sustainable.
Yeah, and part of the lessons and learnings from the failed projects that you're taking forward here in Notion to some of the new ideas and approaches that you're instilling here as part of the culture. And I know that one of the commandments is that, you don't build anything ugly. But what are some of the others?
I think there's 4 values at Notion that we care deeply about in terms of how we work. And the first one is that we're all owners of our mission. Our mission is to help build beautiful tools that can help build your life's work. The second one is that we're all pace setters. We're all truth seekers. And then the last one is we're all kind and direct. And those values very much, define the work we do. And we've picked those words, over a course of 18 months, really playing around with all sorts of different words to make sure it's authentically us.
Yeah.
So, for example, kind and direct is something that was very deliberate. You can say that you want everybody to be kind, but I think that can be sometimes misinterpreted as just being nice to each other.
Yeah.
And I think we added the word "and direct."
Okay.
Because we want people to push each other to do our best work. Like, we don't think it's going to be, we don't think we're going to operationalize our mission by just being nice to each other.
Yeah.
We will have to push each other and debate, and that's where the truth seeking comes through, right? So I think we've thought about these values, and of course, I think what the outcome of all of that is to build something that is beautiful, and beautiful not just in terms of how it looks, but in terms of how, I think there's like a positive emotion you feel when you use Notion, and think of like how many work software makes you feel that way. There's very few.
Yeah.
And I think part of that comes from sort of the work that the team puts in to like sweat the tiny details. Like, things could be 1 pixel off and you could go ship it, but I think people here care about that being right. And sometimes it feels kind of painful. It's like, oh my God, like we've been working on this for 3 months. Why is it not out yet? But we sweat the details. And the outcome of that is we build something that's beautiful, that makes you feel good.
So you would sacrifice speed for perfection?
That's where our values are interesting. We have one value that's pace setting, the other one is truth seeking. And by design, they have to fight. Because as a startup, you have to have a sense of urgency, but you also have to make sure that you're truth seeking for the right things. And there can be actually interesting debates here, right? So for example, decisions that are clearly reversible, you might want to pick pace setting.
Yeah.
You want to move fast because you can roll back, you can do some changes. Things that are irreversible, like, I don't know, opening a new office, starting a new product, I think we like to truth seek a lot before we take an action on those.
You know, I want to go back to your equation with Ivan. And again, I don't know how many people remember this or perhaps even know it, but you were one of the first few investors in Notion when Ivan started the company in 2013. And it was only until much later that you actually decided to come on board. You know, take me through to what made you want to leave LinkedIn and say, okay, Notion is where I believe I'm going to find my truth.
I think also very serendipitous, right? So I think I invested in 2013 right out of the Pulse acquisition.
Yeah.
I had made a little bit of cash, and then
a little bit.
And then I think as people do in the Valley, I think people choose to pay it forward.
Yeah.
And so I think Notion was my first investment, and I invested because Ivan is someone I tried to hire at Pulse. He was a designer, and I lost that battle. And so when he's starting a company, I said, "Here's my check. I'd love to support you." And of course, I was extremely inspired by his vision of democratizing software, and but it's been I think first 3-4 years I thought I'd made a mistake because the company didn't really launch a product, ran out of money, and only in 2017 it started to sort of emerge out of the shadows, and in 2018 I think I was here for one of those like summer planning exercises as part of LinkedIn, Microsoft.
Yeah.
And I had breakfast with him, and you could see the numbers moving every week.
Yeah.
And he asked me if I could join him as the COO. It was only 8 people back then, so it's pretty small. And I don't know what, but I never thought of a different opportunity. I never considered doing anything else. But as soon as Ivan said it, it clicked that this felt like the right opportunity. And it was a big decision, which to me professionally, I sort of knew that was the right call. But personally, I was, based in Bangalore. We just had a kid. I think to bring them back.
Move everything here, yeah.
It was a big decision. So I took the summer to convince my wife that this is something we should do. And 4 months later, I came here, became the 9th employee here.
And a co-founder as well. So how does it work between how you split your responsibilities, how you kind of debate and discuss on what the next steps should be, how you strategize. I mean, you know, it's easier said than done, but you know, you're working towards a common purpose, you're working towards a common goal, but very often you may end up looking at things from a different lens. So how do you build in that alignment? What has that been like for you?
I think between the co-founders, I feel like we have one job, which is to make Notion win. And I feel like, I think people ask me this, but I feel like my own role has changed so much in the 7 years I've been here. So when I was hired as CEO, I was responsible for everything except product, because product is what Ivan was focused on. And so I helped build our go-to-market teams, our people, finance, legal teams. I did that for 4 or 5 years. Then I hired the leaders and I nuked myself out of all of those jobs. So I think 2 years ago, I had nobody reported to me. I was essentially like an individual contributor, just hacking away on AI things. And about a year ago, Ivan said that he wanted me to take on product. So now I work on product. But that can change tomorrow. And like, you know, at the end of the day, I think part of what makes you feel like the ownership mindset is that, you know, if I have to, I don't know, order kombucha for the team, I would do that. That could be my job. Or if I need to go out there and talk to people as a way
That's such a Valley thing. The CEO is ordering kombucha for the team.
Seems like a great value add. You know, the engineers and the designers are really the people building.
Yeah.
In many ways, we are making sure we are setting the vision, we are cheerleading them, and we're supporting them in every way we can.
Hello and welcome to this special edition of Voices from the Valley. I'm Shireen Bhan and we're coming to you from the Cognizant office in San Francisco. And this is also home to Cognizant's AI lab. Now remember, Cognizant has made a pretty bold bet on AI, $1 billion bet that is. Joining us now to talk about how that's paying off for the company is Surya Gumadi, the president of Cognizant for Americas, and also the man who is, of course, responsible for the AI lab, the CTO for AI, Babak Hojat. Thank you very much, gentlemen, for joining us here on this edition of Voices from the Valley. It's great to have you back on the program.
Thank you, Shireen. First of all, welcome to the Golden State. And thank you for taking time to visit our AI labs here in San Francisco today.
You know, and this is what I want to talk to you about, this big $1 billion bet that Cognizant has decided to make on AI. And I think it brings to bear the larger question facing Indian IT services companies today. In an AI world, how relevant will Indian IT services companies be?
I think, they're going to be very relevant. First of all, the $1 billion bet that we made was in 3 dimensions.
Yeah.
Getting a talent ready for the AI era, getting the infrastructure ready, which is the AI labs, and then, building solutions, custom solutions for our clients. The Indian IT services companies are right in the middle of building those solutions, whether it is getting the data ready for the AI era or building the AI relevant solutions. And the $1 billion bet we have made is paying off really well for us. And our clients are loving it, our markets are loving it, and we like it, and we are doubling down on that.
You are doubling down on that. So the question that everyone is asking at this point in time, is this going to be an existential crisis for the Indian IT services industry? You don't believe that to be the case?
No, I don't believe that at all, because it's like any other technology revolutions that we have seen in the past. In the initial phases, it appears that it's going to take away a lot of jobs, or it's going to be a significant threat to the coders and things like that. But
or a disruption to the business model as it's existed.
Correct. And the initial thinking or the initial fear was that, but as we get deeper into the agentic era, so I think, a lot of human intervention is needed to manage the agents, to build agents and orchestrate the agents. The jobs might morph into something different, but I don't think there'll be an existential crisis or existential threat.
No existential crisis or threat at this point in time, at least. But Babak, let me come to you now. You're not new to the world of agents at all, going all the way back to 2011 when we actually saw Siri come into the picture. And, I don't know how many people still remember this, but ChatGPT, if you don't, Babak, was the main inventor behind the natural language technology that Siri used. But, how much has the world changed since then, Babak?
It's amazing. The world has changed, but also kind of come full circle as well. And not only was the original technology around Siri, something that we worked on in the late 90s, but not too many people.
Any function you can talk about where people are not using it or leveraging it in meaningful ways. And so maybe the thing that feels different is the pace. Somebody said this recently, which really resonated with me, is like, we all grew up and like evolution just happened, like you didn't feel it. I think last 2 years feels like we're experiencing evolution. Like it's so fast that what happened last week is already old news today.
Yeah.
And so the pace is quite fascinating.
How do you engineer in an environment like that, where, as you pointed out, what was exciting and cool a week ago is obsolete today? I mean, how much of what you're building and even the culture do you need to sort of break on a daily basis just to be able to keep pace with the kind of change that we're seeing?
There's no other way. I think you just have to stay connected to everything that's going on. It is something that is almost necessary for every company to stay relevant. And part of it is like, I think sometimes I get grief from my team saying like, hey, we did this planning, just finished planning, and now you're already changing plans. But it's like, but that's just the world we live in now. Like, I think what was true in December is just not true in March anymore, right? And so part of it is you have to sort of throw away the dogmatic things you have inside your company, and you have to rethink it from a standpoint of like, well, if I was trying to build a new company today to take on Notion, what would I do? And then I have to do that, right? I think that's the only way to stay relevant. And
so what are you most paranoid about today, you know, in terms of staying relevant, in terms of why you believe you continue to have the winner's mindset? I mean, what are you most paranoid about today?
Well, as we discussed, I think we're up against some of the giants who've had decades of distribution advantage over us, right? So the thing that keeps me up at night is primarily like distribution.
Yeah.
I want to get to a point where hundreds of millions of knowledge workers are using Notion every day. And that is my ticket to staying relevant as a way to make sure that we are going to be considered as a tool, as a company that is amongst the top 3 things you buy when you start a company. Like, we have to be in that top 3 list, because if we're not, then we're not mission critical. And we want to build something that is mission critical, not for a small niche, but for hundreds of millions of knowledge workers.
You know, you talked about the big boys. I'm sure the big boys have come calling, have come knocking. Is that an eventuality that you consider? Have you looked at it, or would you look at it in the future, should that to happen?
Well, as you know, Pulse was acquired by LinkedIn,
yes.
And then LinkedIn was acquired by Microsoft.
Yes.
So I've gotten to see that twice before. I hope Notion goes all the way and becomes a public company. I actually think this is also something that Ivan told me as a way to recruit me into the job. He said, do you want to continue working at Microsoft, or do you want to build the next Microsoft? And I think that was an inspiring vision for me to join Notion.
As you look at building the next Microsoft, and you talked about potentially going public at some point in time, I mean, how much of an aspiration is that? Are you actively considering that possibility?
We're investing a lot. I mean, in many ways, our business is already public scale. The fact that we're cash flow positive doesn't force us to hit the public markets right away. We don't have any needs for capital. But what we are doing internally is really trying to operate as a public company. And what that means is that we have our own forecasts for what we're trying to do every quarter, and we try to hit those. We are improving the internal controls. For example, you know, making sure we're audited every year, and we're closing the books on time. We have all the right processes and controls, that we're, you know, compliant with all the things that larger enterprise needs. And so in some ways, we're actually doing everything we need to do to be a public company, and then that will give us an option to go public. And whether we take that option or not probably depends on a bunch of other factors, including...
What are the factors, besides, of course, the market conditions?
Market conditions, and I think there is...
Exits?
There is value in being private. Which is that I think you can take many more long-term, bolder bets. So if you think about AI being a disruption, I think if we wanted to completely change our business model, we can do that much more easily as a private company than in a public company.
Yeah, because you're less accountable to outside stakeholders, and, you know, more accountable to the vision that you have for the company. But what would you potentially think you may need to change, or could change, or would have to change as you look at the environment today?
Well, I think the big one that we're starting to see, at least in software lens, is potentially a shift away from like a seats-based pricing to a usage-based pricing. This idea that I think you can almost buy intelligence as a service might become more of an important thing that is important for us. And so today, Notion's, you know, very economical. It's like $10 to $20 a seat per month. You can buy it yourself, or you can buy it for your team. But you can also imagine a world where we have that base tier, but on top of that, if you want to tap into the maximum intelligence in terms of the best models to do your work, or get an AI intern, a lot of that could be based on usage, where, you know, you don't have to pay anything up front, but then as you use it more, as it does things for you, as it gives you specific outcomes, is when you have to pay.
So, you know, as you look at the ecosystem, and we're seeing a lot of collaboration at this point in time, how do you approach partnerships? How do you approach collaboration, especially with the exciting companies that you're in the midst of?
We're partnering a lot in the last 6-12 months, and I think our focus for us is really around distribution. And so we're looking at a lot of different ways where are the knowledge professionals, where we can really plug into. So we've done a lot of things with investor community around the world, around making sure Notion is the tool every startups can get. We're talking to a lot of companies where people use other tools with Notion. So for example, Notion is used concurrently with Figma, it's used with Slack, these are all complementary tools.
Yeah.
And one of the things that I'm seeing is that more and more, you want to make sure that these tools have context of each other. So like if I'm writing a document of a specific product, I should be able to tap into those designs in Figma, or I should be able to tap into the conversation happening in Slack. And so, we call ourselves the connected workspace.
Yeah.
And part of the connected workspace in the past used to be that things within Notion are connected.
Yeah.
I think as I think about the future, I think it's our job to make sure things outside Notion, all the tools you use, are connected as well.
But that's a very different world, right? I mean, especially when we're so used to living in these walled gardens, it's a very different approach to take.
I think so, but I think that's actually going to be really important, because each tool is going to try to tap into AI to help you do things, right? And AI will operate best when it has the context. And so if you're using 5 different tools and they're all isolated, then I feel like AI doesn't have context on what's happening in the other 4. And so I'm not sure if it'll happen like broadly, but I think at least within the core tools you use, I think it's very important for AI to have that context. And there's some new protocols like MCP that's come up that's allowing each tool to make sure that like you have that connectivity and that openness with other tools.
So how much of a Notion nerd are you yourself?
I use it quite a lot. So of course I use it a lot at work, but then I track my angel investments on it as well in a database. I also tracked my daughter's kindergarten applications on it. I collaborated with my wife on it.
Is it as competitive as India?
It is. It's a funny story. I think we moved back in 2018, and we were applying to kindergarten. I remember preschool or kindergarten, and they said, "Oh, your kid's only 2 years old. You should have applied when you were pregnant."
Yes, clearly as competitive.
Clearly as competitive.
But as you look at the exciting, cool stuff that's happening around you, outside of everything that's happening in Notion, of course, lots that keeps you on your toes and is inspiring you. But what are you inspired by as you see what's happening outside?
There's a lot happening. I feel like in some ways it feels like the renaissance, like AI has enabled all these different things that probably were not possible. One of the things I was looking at in the last week was just consumer hardware. Like there's a lot of like bold consumer hardware companies. Many of them actually started by Indians here. There's like Matic, the cleaning robot, that is incredible, and there's the Daylight computer, which is like like a new hybrid of Kindle and iPad. And I don't know, hardware used to be like a tough space. Investors would shy away from it. But because of AI and the software layer, I think people are realizing that if you can actually build the right hardware that plays with software, I think you can build some incredible experiences. So I'm pretty excited about that.
So you think that it could be potentially a new breakout moment for hardware? I mean, OpenAI possibly looking at hardware as well.
I think so. I think I don't know, if I asked you 5 years ago, would you think you need any other hardware besides your iPhone? I think the answer was probably not. But now suddenly, like, I already wear glasses. So for me, if like a bunch of stuff existed on my glasses, like I might not have the phone on me. The fact that a lot of stuff happens on my watch. But also like all these incredible consumer hardware, like I think cleaning robots, people were annoyed with them because like they would miss 2 times out of 10. But they're getting so much better now that I think there's going to be more robots. Someone showed me the other day, like this machine that prints dosas. It's incredible.
Machine that prints dosas, okay.
Literally, you put the batter on one side and it prints dosas, which and perfectly, right? And so, like, I think there's something has shifted in the last couple of years where
on the hardware side,
suddenly, like, the hardware is there, but then hardware combined with software, the ability to actually control that and have that experience here seems to have changed in the last couple of years.
You know, you were talking about luck and serendipity and being at the right place at the right time. And I know in the past you've spoken about how entrepreneurship is a little bit like going surfing. So as you see, you know, the environment today, what's the next big wave that you're hoping to catch?
Well, the biggest wave is AI. I think it's probably the biggest wave I've experienced in my short 15-year career. And when you get a wave that big, I think you can kind of focus on that wave, because it feels like one that can cause a lot of, not disruption, but I think it's like what creative destruction in some ways. Like I think you can feel it, like all these companies that existed for decades, you thought they could never be displaced, suddenly feels like, wow, there's an opportunity to do it. I think that...
but don't you worry about that for yourself as well?
Of course. Which is why we always try to reinvent ourselves. You know, we launched our AI product 2 weeks before ChatGPT came out, because we could sense some things going on. Like the models are getting better. We applied it to our own product and we realized, like, oh, so much of the knowledge work can actually be better. And before somebody else could say, we're Notion, but with AI, we became that company. And we have to continue to do that. We have to continue to win the right every week to be the sort of the most advanced, most modern company. And the day we stop doing that will be the day we'll die.
So, you know, the right to win in an AI world up against the big boys with deep pockets, you know, Zuckerberg hiring every AI specialist at this point in time, throwing in the big bucks. What are some of the big challenges that you foresee in being able to deliver on that right to win?
I think you said it right. There's incredible, like the talent market is incredibly hot, and I think our ability to attract the best talent is going to be really important in that journey. And part of the draw for people to work at Notion versus maybe the big labs or the big tech is not because of like the compensation or the food in the office or the fact that you have already a public company. The fact is people will join us because they're drawn to our mission and our ethos of a company, where we are not trying to replace humans, we're trying to augment them. Where we are much more humane in the way we design our products. We're really focused on making people feel positively when they use our software. That's not something that other companies are trying to do. And so I think we don't get to hire everyone, but we get the subset of people who believe in those ethos. I think you and I were talking about all the billboards you see when you come from the airport. And I think every billboard is talking about AI and talking about, you know, the AI SDR to the, you know, to the AI marketer or whatever.
You're not talking AI on the billboards. I saw that.
Even our AI stuff is very much talking about having your own dream team. Because we think if we can help every individual in this world to now have a team of AI agents that can help them be better, more productive, be able to like be more creative, we would have done our job well.
So, you know, you said you're already operating with a public company mindset. You're looking at delivering on numbers every quarter. You're optimizing for efficiency and for cost. Where do you believe Notion is likely to be in the next 5 years? What's the internal targets that you've set? You talked about $1 billion in ARR, and that's potentially the target in the foreseeable future. But outside of that, what are some of the key metrics that you've put on the drawing board as the aspirational targets over the next few years?
So our goal is, like, primary goal is to make the product ubiquitous. And so I really think about how do we make sure that hundreds of millions of knowledge workers are using the product. And my own personal goal is like in about 10 years, my daughter will go to college. And my hope is by the time she goes to college, every person in her classroom is on Notion.
Is on Notion. That's the demographic that you're going after.
That's the demographic I'm going after, yeah.
But let me ask you to leave us with one piece of advice that has stayed true for you through the course of your entrepreneurial journey of starting up the many ventures that you attempted to before Pulse, then Pulse, and now Notion. What is the one piece of advice that you would leave all young entrepreneurs with?
One thing I learned when I was at Stanford, I took this course at the design school there, and I think one of the values they had was about this bias towards action. And I thought I think it really materially changed my life, because I feel like before that, I actually had ideas. Like I was thinking of startups, I was thinking of all the ways I can be solving it, but I would not do anything about them. I would just sort of keep it in my head. And I think one of the things I learned at the design school was that actually, like, you can create a prototype. Like, you can create a prototype in 5 minutes. You can prototype something that might take you 2 weeks, and it just increases in resolution. But actually doing something about it enables you to have that conversation. It could be a sketch where I can just show it to you, and now we suddenly having a conversation. And so I think one of the things I've thought about is like, okay, well, in this world of AI, are humans going to have the agency to go do things? And if they can, then suddenly they'll be able to tap into anything that they want to do, right? Because you'll suddenly get help on the design front, on the building front, on the selling front. And so I really feel like this bias towards action, bias towards wanting to do things.
And you believe AI is only going to make it better, and it's going to make it easier for people to actually be able to do things and get things started?
I think so. That, but also it's going to be important for humans to survive, the agency to be there, right? If you're going to wait for your manager to say something that you have to do, then at some point the manager may prefer the agent, right? And so I think part of it is like, well, what's really important in today's world is whether you have the agency and the creativity to want to do things. Because if you do, couldn't be a better time to build things.
So how do we beat the machine at this point in time? I think that's the big question that everyone's asking, right? I mean, and I think there is, and of course, we've gone through cycles of fear and what will technology do and the kind of disruptions that it will bring about. But given the fast pace of change, what is it? What are the questions that we should be asking ourselves as people as we deal with this?
I think to me it's very inspiring and optimistic, where I think if we can just take some of the ideas we have and put them into work, I think those things are now 10 times easier to happen, right? And so, is a robot going to wake up and think of like a specific startup idea or a specific problem? Maybe, but I actually feel, I continue to believe like the humans that have agency will go do things and will be able to actually execute on those things. And I think that's how we will survive. It's like we will have the ability to think beyond just like, a monotonous day of like doing the things I have to do to like make my salary. I think we're going to be pushed even harder to think about not just that monotonous day, but think about the ways you're going to use your time to do new things, to build new things, to solve problems that you're seeing around yourself. And like, just take a walk in San Francisco or in Bangalore. I mean, I could take a walk and it's like 10 things come to my mind of all the things that could be better, right? Everything from public transportation to how someone's selling on the street and like what could be better for them to like, safety of, so I don't know. I think there's problems are actually around us. I think it's just a question of like, are we going to rise to the occasion and want to solve those problems?
So you feel hopeful today?
I'm very hopeful. More hopeful than I've ever been, because things that was so hard to actually enable that into action is going to be like available at almost no cost.
So what kind of investments are you making in what kind of companies as an investor today?
Investments, I feel like So I started to do this as a side hustle, as a way to like creatively sort of involve myself with ideas that I'm not doing at work. And of late, I've been thinking about experiences as like as a thing that feels like AI safe. And so actually the two investments that I'm super excited about reading updates every month is a company called Such Paneer here, which makes the best paneer in America.
Such Paneer, okay.
And the other one is Dandelion Chocolate, which is in San Francisco. And as a software entrepreneur, I feel like I live and breathe software all the time.
Yeah.
But actually seeing a chocolate maker and a paneer maker
be the two big bets that you're making
Yeah,
at this point in time.
I feel like inspired by, I don't know, I feel like investing to me is less about maximizing financial outcome. To me, it's about learning. And I feel like the things I learned from reading those updates are so interesting because I don't run a retail shop and I don't run a big manufacturing. And so somebody said it well where they said, you know, investing is like, you'd appreciate this, which is like, it's like tuition fees with a call option. You know, like it might work, but you're paying tuition to learn about a new business.
About a new business. Well, we hope that you continue to learn many things about new businesses that you potentially invest in, but also, you know, every day is different at Notion, as you've just explained to us, and we wish you the very best of luck over the next few years with what you're attempting to do. But thanks very much, Akshay, for joining us here on Voices from the Valley. Akshay Kothari here, talking to us on Voices from the Valley on what is next as far as Notion's future is concerned. From all of us here on the team for now, thanks very much for watching. If you enjoyed the program, then write into us, log on to our website, and of course, visit us on social media. Everything is there for you. Goodbye, and thanks very much for watching.
Hello and welcome to News Center. I'm Parikshit Luthra. Prime Minister Narendra Modi has told US President Donald Trump that India has never and will never accept third-party mediation with Pakistan on the issue of Kashmir. The Prime Minister conveyed this in a 35-minute phone call with the US President that was initiated by the White House. The Prime Minister also clarified that no discussions were held with the US on mediation or a trade deal during Operation Sindoor. This according to a statement by Foreign Affairs Secretary Vikram Misri. The Prime Minister declined President Trump's invitation to visit the US on his way back from Canada. Prime Minister Modi cited pre-existing commitments. President Trump accepted Prime Minister Modi's invitation to attend the next Quad meeting. The phone call came ahead of the US President's meeting with Pakistan's Army General Asif Munir, which is scheduled today. To take this forward, I'm now joined by Meera Shankar, former Indian ambassador to the US, and Pramit Pal Chaudhary, head of South Asia at the Eurasia Group. Thank you very much for joining us. Pramit, if I can begin with you, how do you think this conversation would have gone down with Donald Trump?
Well, I think for Trump, I think there's a recognition in Washington that partly out of ignorance, I would say, in an administration that lacked any South Asian expertise, there was an acceptance that the mediation, the talk of mediation, the talk of nuclear war, and so on by Trump had gone down very poorly in India. And we saw, for example, that when Indian parliamentary delegation had gone to America to try to explain India's position, they were met by U.S. Vice President J.D. Vance. This was the highest ranking person to meet any of the parliamentary teams that had gone anywhere in the world. And I think that was a sort of olive branch from the United States saying, okay, we accept that the president had misspoken or had been poorly briefed on what was going on. And this was effectively accepted that this was an opportunity for Prime Minister Modi to, at least for his public audience back home, to make it clear that what India's position was, and that Trump accept this, that there was an error made. Neither side could really say error, but you saw that even after this explanation, Trump then invites Modi to drop by Washington on his return from Canada. A clear indication that Trump accepted